Assalamu alaikum wa rahmatullahi wa barakatuh. Ladies and gentlemen, welcome to the first InsurTech MENA Summit 2022 in Doha. We would like to start by thanking everyone who is here with us today. We especially want to thank all speakers, guests, and participants coming from outside Qatar, from the MENA region, and the rest of the world. Through this summit, the QIC Group, Deloitte, Google, Qatar Financial Center, with other partners, officiate the InsurTech MENA ecosystem. The agenda is pretty packed, to be honest, and we are talking about InsurTech from multiple angles: mobility, health, technology, and more. And the highlight of the day is the Hackathon Demo Day and the announcement of the winners. Before diving into the content, let's help make this event big by using the hashtag on the screen when sharing on social media. I have the immense pleasure to introduce now Mr. Lars Gehrman, Group Chief Digital Officer at Qatar Insurance Group and Head of QIC Digital Venture Partners. Mr. Lars, welcome.
Thank you. I'm on. Thank you very much. It's a really pleasure to be here. It's amazing to see all of you here. It's a full house, and it's the first event we ever did. So thank you all for coming. Thank you for contributing. I would need a slide. Okay, thank you. Good, then let's move. This event would not be possible without having, obviously, the one that started it together with us, Mr. Salim, our Group CEO. Thank you very much for enabling us doing this. And then a fantastic team. And I can only tell, I've seen the team executing here, and I was not sure if you will make it, but we made it. We're all here, it's working, so thank you all. This is on you. Thank you very much. Quick, we are here and we're talking about InsurTech MENA ecosystem and the hackathon that we're actually doing. But one word, inspired and in line with Qatar Vision, National Vision 2030, Qatar Insurance Group aims to be the most impactful investor in the InsurTech MENA. Yeah? We do this because we have a standing. QIC is the largest insurance company here in the region, but you have international exposure. So international exposure means we have a strong Lloyd's syndicate, Antares. We're having the Qatari, apart from our MENA organization, and we are having here as well, and all of you know. We have Antares, we have Anode Technology, a 200 people IT company helping other insurance companies on our own to actually fulfill their wish to deliver propositions to their clients. You have seen most probably our campaign in the last months, yeah? Time to change. So the Qataris under you have seen what we're doing. You're still out there to tell the world what we're actually doing, so that's great. We have Epicure, and we have Chirac in here in the team, leading investment house with amazing investments into InsurTech and some startups, and we're doing amazing things together. In the middle, this is actually where we want to talk a bit more today. What we initialized some months ago, actually almost a year ago, is the work around digital venture partners, QIC digital venture partners. It's about a new world. It's about building new digital business in insurance and adjacent areas. We do this by building on our own, meaning, yes, we have the team, we have the resources, we are partnering, we get with the right people to make new propositions out in the market. And they're not just classic insurance propositions, because this is what we already have, right? We're looking into new things. So this is what we're doing, is we're building new stuff. We're also investing. This is why we are running the hackathon. We are investing into InsurTech. Why? Because we strongly believe that an ecosystem needs to flow, and it's not just one company behind it. We need more companies in. So we are helping, we are investing, and we are growing together with the InsurTech. This is what the corporate VC does. And obviously, we had really interesting meetings already. We are partnering with big tech, with banks to develop together new business models. So this is what QIC DVP is about. You will see more of us going forward, and I think I'm sure you have seen us already. So thank you very much. for being here. Now, we want to make this conference as interactive as possible. And I don't want to put the spotlight on you. But yes, I want your feedback. We want your feedback. Everybody in the panel. So what we want to do is, please play with me. Yeah, it's like this. Please get on your phone. It's an easy task. So either can scan the barcode or go to menti.com. It's that fast. It usually takes 15 seconds. Yeah, and then I need team. I need my back. Yeah, I have no back. Okay, so we are there. So. First person that puts his name on the screen will get this fantastic goodie pack where we have power bank and so on. Oh, whoa. Uma, wow, and that many names, wow, amazing. So Uma, you made it, this is yours, and as we are having that many people coming in, team, do we have 2 more bags? We do have? Amazing. So team will choose 2 more people out of this, and then I'm really happy that we're interacting. Great. So we will select, team, please select 2, and then we're handing over those bags. Thank you very much. Uma, and you tell me who you do it. This was the warm-up, okay? What we really want to do is be interactive with you. So what we really want to do is the next thing. If you think of today, you came with a certain expectation to this conference. What do you expect us to deliver today? And we want to know this, because we need to grow. It's the first event that we're doing, but there will be more. So we want to grow with you. So what do you expect from us? What do you see? So please put in there what you expect from today, and we will chat this later on. So yes, I hope we have a lot of fun. There will be inspiration. We have amazing InsurTech startups, amazing panel discussions, so it should be there. And this is what we want to see, right? New ventures, yeah. We want to build new companies, so together, yeah. Creativity, learnings, yeah. That's the power of cooperation, it's the power of co-creation, what we're doing right now. So thank you very much. This is what we wanted actually to see. We wanted to see all those things together. And we have an amazing lineup. We didn't talk about the agenda in details, but I'll do the opening. We have a nice panel with all these ones that are helping us to build the ecosystem. After that, we have an InsurTech panel, where we have the leading InsurTech companies with us on stage. After the InsurTech panel, we will talk about the pitches. So we see those 6 companies that actually made it out of 140. And in the afternoon, we have done a health panel where we're talking with a guest from Silicon Valley, with a guest from Malaysia about health and data. A break. And after the break, we will go into more details about mobility, health, travel, and have venture building panel and a corporate VC panel. So amazing agenda. Thank you very much. I love it. We will post this. This is what we expect from today, and I will do the same exercise this afternoon with you. So did we actually fulfill on this? I strongly believe we can do all those new business networking. So moving on. I mentioned the InsurTech ecosystem already, right? And the challenge that we are facing, and the challenge that I face, because most of you know that I'm new in the region, a year here, right? And before that, working in some other places. The whole MENA region is still not really tracked by the international companies. So CB Insights or PitchBook, they're there, they're tracking some things, but they're not really. And what we see, that actually many things are happening. But as we are not on the radar from the global world, we have to do our thing, we have to do our work. So this is why we believe the InsurTech Ecosystem Association will help us in doing this. And just if you see there are 57 in CB Insights, 54 VC finance InsurTech companies in MENA region, and there are some concentrated in one country. Well, we, in the InsurTech Hackathon, that actually we will see the demo day today, managed to have 137 participants over the world, but people that actually want to work with us on everything. So we believe that in the whole MENA region, and MENA region obviously is a bit bigger than GCC, that there are around 700,000 InsurTech projects right now in the making. We want to be connected. We want to be the power behind them. We want to enable them to do business with all of us. Yeah, so this is what we are trying to do. So now, similar to what is happening in other regions, yeah, and InsurTech, and later on we come to a slide where I explain this, and InsurTechs have to move on. You start with an idea, you grow a little bit, and then you come to a limit, and this limit needs to be overcome. So what we have seen accurators in, here we have a panel later on, yeah, so we have accurators, it's the first wave. If there's a nascent market in digital insurance, an accurator is the first thing that usually has success because everybody needs to be trained, right? So there's a certain challenge, yeah, and I will not go deeper, we had a discussion, yeah, on pricing versus innovation in the market, but they are there. They have their stand. The second wave, we have obviously put in our top 15, so amazing companies in there, but you also have Nicola from Bima and Dubai. I don't know, I've seen it, but our Beamer here in Qatar, Amenli, a speaker and a startup from Egypt, we invited. We didn't manage to get the visa, so there are certain things that obviously for the ecosystem need to be more fluent. But this is what is actually happening right now. And this is just 20 companies, 25 companies out of 750. So imagine what actually we can do to bring them together. The key question is, who will make it? Or what's the right way of doing it, right? Will we see the next InsurTech unicorn? Will it be a digital incumbent making unicorn status? Will it be the combination of both? We have to see it. What we are trying to do with QRC DVP is enable. We want to be part of it. We want to help everybody here in this room to make money and deliver something to our customers, because it's easy to talk about business, but in the end, we have to sell something to our customers, and they need to have a value. So it's all about customers in the end, right? So this is where we want to go together with you. One more time, please. Now, we have been talking about the InsurTech. We have really amazing lineup here, and we see 6 of the best that we have discovered. I would like to know from you, it should be actually, yes, please, on your phones on Mentimeter, what are the companies we actually should talk to? I think we have quite a pretty cool companies in there, but who do we need to talk to? Ellen, yes, Troby. I would say this was not surprising, yeah, because we have almost all of you in here, yeah. So there are certain companies that we believe we should talk to. So any ideas, please reach out. Here on stage, but later on as well. This is what we're trying to do, connect deals, yeah. Cosmos, we have not talked, yeah. Beamer, I'm there, yeah. Lemonade, you can have your questions about this. Risk we have here, actually we are invested into risk, yeah, so we see risk later on. Cubic. Oh, I know where Cubic is coming from. Yeah, nice Swiss startup in insurance. Yeah, today Abe, Caras. I don't know Caras. Yeah, Ingo Nieder. Yeah, this is fun. Yeah, so imagine this, but 10 times. We want to make and enable everything in this way. So thank you very much for your participation. Okay, moving on. We talked about there's an InsurTech startup scene, yeah, and we have to booster it. Yeah, we talked about there are companies coming in. Now, I quickly want to run with you what are the challenges of building actually a company. And the challenges for an InsurTech are similar but different to a usual startup. Usually, if you think about a startup, there's a life cycle of startups. So you actually have an idea. It's the typical napkin thing. Yeah, you have an idea, write it down. Then I iterate this idea, and you're getting to an MVP. This takes a certain amount of time. The certain amount of time for a good idea is short. You can do this in today's world, get in 2 days a landing page out and test. InsurTech is different. You cannot do this. InsurTech, you need or an insurance company or you need to talk to a regulator to get some sort of approval, similar to banking. So there's a challenge in between an ideation and MVP phase. The second area is you obviously need to test. And there's where the first MVP never works. It's like this, it never works, yeah? So don't put too much money into the first MVP, it will never work. But it helps you to understand and to learn. So you have an iteration of MVPs until you get finally to something that works and the customers reflect on. This is a spiral that usually a certain number of startups are running out of money. This is what we call, not we, but this is then the term, the value of death of startups. They're running out of money or running out of energy or running out of people to do testing, right? So the ones that make it actually through this phase, they have a product market fit. Meaning there are certain clients that want to deal with you and you can sell. The next challenge, and the challenge really is tough in insurance as well, is you need to sell. Because one thing is testing, is getting the first customers in. The second thing is to multiply this one customer or 10 customers to 10,000. Yeah? This is the stage that is really complicated. And this channel fit in insurance is complicated because we have really fixed distribution channels. It's B2C, but you only can reach certain people in B2C. It's the brokers, but only reach certain people. You have the aggregators. So there's a certain channel you can work with, but it has its limits. And moving on to the next channel means you need to change your business model again. And this is hard work. So there again, the second value of that. Many companies make it to, yes, I can scale, but I can have traction, but from traction to scale is really complicated. So what we are trying as QRC DVP is actually helping you to shorten the whole period and to reduce the risk. How do we do this? First, from ideation to MVP, we can shorten it. Why? Because obviously in DVP we have the brains and have done together maybe 25 companies. Yeah, so we have knowledge that we can help to speed up, and we have QRC behind. So QC behind means we have the license. We can do business really quick and really fast out there. So we shorten this period of ideation to MVP. We can help startups to move faster from the MVP to the product market fit together, because we have, obviously, as the biggest insurance company here in the region, the size to test solutions and propositions with you. And this moves to the next phase where actually we're coming to the channel. Well, we can do things together. So we and our partners, and I really look here into all the partners of the ecosystem, can do things together. This is why we initialized the hackathon, because we strongly believe we have to do this together in the ecosystem. We could have hours of discussion on this. Yeah? Yesterday we had a nice networking session, but this is more or less what we can do. Yeah? So this is a message I wanted to give. It's not all that we just are sitting here and doing PowerPoints and cool conferences. There are things that are needed to bring more companies and ecosystem to success. And we have put in 5, there are more, but those 5, I believe, they are the most important. One is talent. And talent, I believe I talked for the region, and Qatar, Dubai, Ethiopia talk for the region. We have in all countries, and everybody's you has smartphones, so we have a thriving digital ecosystem. The InsurTech ecosystem is not yet that thriving. Because the difference between just doing a digital proposition and doing a digital proposition and doing a digital insurance proposition, there's a difference. So we need more founders, we need more experience, we need more exchanges on this topic. And this is where we believe we have to do something more with the InsurTech association. We have fragmented market. So if you make it in one market, it doesn't mean that you make it in the second market. You need partners to grow. And this is the third point. We need to grow together. Yeah? So you need to find an insurance partner that has the paper. Yeah? An insurance partner that is able to run with you and the things. So this is barriers to scale. And then number 4 and 5, they really go together. We're the first company as QSC that actually set up vehicles like this, a venture studio in insurance that looks into InsurTech. We're the first company that's doing a CVC fund, investing into InsurTech. We need more of this, because the ecosystem can only thrive if we make this right, because you need innovation. Innovation comes to a certain extent internally, but we need external innovation to really grow. And the 5th one is, is this mine, is this not mine? Yeah, we have discovered in the COVID hard times that the more companies work together, the faster they are. So the question of, do I own 100%, do I own 50%, or do I own 25% is a key question in terms of speed. So we have to decide, what is the strategic impact of my work? And based on this, I have to decide what is the share that I want, and not the way around. Okay, finishing off. So we have seen most probably what we have been doing. We have the InsurTech MENA, and today we have the demo day, which is for us is talent deal flow. People get to know us. I believe people know us in the region. Yeah, so this is the first thing that we did. We had yesterday a community event where we networked with startup founders. I was there on stage talking about my own failures as a startup entrepreneur. They are part of the learning curve. You need to do this, right? And today we are in this fantastic event, the InsurTech MENA. So you can expect many more things that we will do for the ecosystem, and many more things that we do as QSC and DVP to build and invest and partner in terms of company building. So look at us, and you will see more things coming up. We couldn't have done the hackathon and the conference at this scale alone. Yeah? So I want to invite now our core partners and founding partners, Deloitte, Rich, Hank from QSC, and Basil from Google on stage to have a quick chat with me together. How was the experience together with us? We obviously, please come in and sit. Yeah? We founded with them, Rich, Basil. Thank you. Welcome on stage with me. We didn't do this alone. So in this journey, we welcomed Antemis. It's one of the biggest InsurTech funds in the journey with us. We have Profina. Today, later on, we will see Profina, an amazing decentralized data startup. We have QLAM. That helped us a lot in mentoring. We will see we have a lot of health startups. So great thanks to all of you and helping us doing. And Black and Play is here in the room as well. That actually helped us on reach and helped us to use their capabilities that the startups are getting in pitching. And you will see amazing pitches. Yeah? So thank you all. And I will just try to sit together with you. So thank you for being here. Thank you for the journey. It was an amazing ride. And I believe I'm 10 months in. It was an 8 months ride where we talked with Deloitte, first meetings. It took us some time to get together, but then we actually made it. And I've been working with Deloitte Digital in Europe, so I trusted you, and we found a way how we actually can work very well together. So, Rich, I'm happy to have you here. In this way, we actually found the way that we said, oh, we need a bit more, so we got Google Cloud into it, which is an amazing project here, and QFC is with us, with QIC, since many times, so many years, and we have a partner in mind here with QFC. So maybe, Rich, can you maybe quickly give your feedback on how was your journey with us in the hackathon?
I think the journey's just amazing. I mean, you know, when we had that conversation, I think we first met in a hotel in Qatar 8 months ago. You know, COVID was raging. We could try and find somewhere to physically meet, and we talked about this. I mean, you look now, and 134 startups were involved. You know how you've actually brought the excitement to the InsurTech, how we've worked together, how we've got amazing partners. I just think it's phenomenal. And you know what? This is just the start. So actually, to me, I'm incredibly excited about today and what we've been doing over the last few weeks. I'm more excited, though, about the next few weeks and months and years about what this is going to start in the region.
Yeah. Great. Thank you. Basil.
Yeah, thank you so much. I believe it's a very exciting opportunity, and I would like to thank the organizers and our partners at Deloitte and, of course, QIC to be part of this activity. Of course, during this hackathon, we've seen a lot of improvement, and our role as Google Cloud was and will remain to empower all the startups to grow and grow fast and secure and collaborate and make sure that they will continue to learn. So we are really looking forward to seeing a new unicorn, I would say, coming out of this hackathon. And of course, if we look at it, during the hackathon days, our team internally, because we provide the tools for people like you to improve and to develop solutions, we were really impressed with the level of complexity and the level of the use cases that had been provided. So regardless of who's going to win today, I believe all 137 participants are the winners. To me, I believe they are the winners because simply they took the risk to change and make a difference in our lives, to make a difference on how we do insurance. Yeah. So this is really interesting. And just I want to highlight that before, we end this hackathon, learning doesn't end. So I want you to make, all of you, the participants and our esteemed guests here, to make use of Qatar Center of Excellence from Google, which was launched last year, which will provide you and enable you with training courses. All what you need to do is just invest your time, and the remaining investment is being done by Google Cloud here in Qatar as part of our commitment to the country and to the community. So thank you a lot, and looking forward for an exciting day, and good luck to all.
Thank you, Basil. Hank, you see obviously a lot of things going on. You're traveling the world for Qatar and QFC. What is your opinion?
First of all, we are a long-term partner, not only because we rent a real estate from QIC, but I work with the Qatar FinTech Hub and all the partners, and then Qatar tries to be a leader in something, and that takes time. It needs regulatory approvals and everything. So now we suddenly see under the leadership of Salem a private initiative saying, guys, we are big, so we can facilitate InsurTech. So InsurTech, in my opinion, is one of the leaders. We can become a leading player in InsurTech in Qatar. And I'm very pleased that not only you were hired and the whole team is hired, but there's also money behind it. You are going to support the people and invest in them. And obviously, they can set up in Qatar Financial Center. We will provide all the help you need. But I think this is very exciting. So InsurTech, I think, is an opportunity for Qatar. And the other area is Islamic FinTech. But I think the focus is now on InsurTech because private company like QIC, the biggest regional insurer, takes the initiative. I was very impressed. I'm a banker, so I try to understand insurance all the time. I was very impressed with the presentations of the hackathon. During the selection process, I think you selected about 50 companies. 6 will be presenting today, and for sure there's at least one unicorn among them.
I hope so. Thank you very much. Thank you, Press. Okay, we now move on with a short intro on what is happening in the insurance market with Rich from Deloitte. Thank you very much.
I mean, the temptation of a management consultant to speak to you now is, I'm going to get my 100-page deck out. You'll be very pleased. I'm not going to get that 100-page deck out today. I've got the 200-page one instead. No. First of all, I'd like to add my thanks. I mean, we need events like this in the region. By background, you can tell I'm a Brit, but I've been in the region for the last 4 years doing fintech, doing insurtech, and actually events like this are absolutely critical to what we're doing to actually foster insurtechs so that actually we as advisors to the insurance industry, we as the insurance industry, we as consumers of the insurance industry can get the best possible solutions that actually are going to help us actually cover our basic needs. Because what are we there as for insurers? We're there to actually cover the needs and help our consumers. I'm going to sort of start with a personal story that actually to bring it to life. And a number of years ago, a colleague of mine walked in my office. He was a great developer for me. He was working on one of my insurance projects. And he said to me, "Rich, I'm going to leave." And I was going, "But you're one of my best developers. Please don't leave." He said, "No, I've got an idea. There's something I want to do." And I said, "Christo, go and follow your idea. If you've got an idea and you're passionate about it, go do it. I'll hire you back anytime you want." What I didn't do was I made a mistake. I didn't take that time to listen. We talk about listening and making time. Because Christo followed his idea, and he was actually one of the founders of TransferWise, which is now Wise. Today I looked at the stock market, it's worth $3.4 billion. So what didn't I do? I didn't spend the time to help him and understand his idea. I actually didn't spend the time to say, "Christo, do you need some investment in this? Maybe I can help." But actually, I always regret that I didn't make that time, because when I look at what that startup did, he had a passion for it. He thought about what he could do. And if I look at Wise now, you think about the impact it's had in financial services for consumers. You look at the impact it's had actually on corporates, where they do corporate FX. And actually, I love the idea of how TransferWise started, because it was a really simple idea about two people wanting to transfer different currencies between them. And therefore, there's a lesson for you as startups here in the room, which is take those simple ideas, make them elegant, and actually those ideas will become the unicorns that thrive. And for us as investors and people in the industry, let's make sure we make this time for these startups, which is exactly what the last few weeks around the hackathon and today are about. So that's the lesson I've got. But then I think about this region. I really, love living in this region. I'm proud of being part of this region. I'm proud of being part of innovation in this region with Deloitte. I mean, insurance in this region, obviously, we're underinsured at the moment. Through compulsion, we've got certain things are covered, such as health and motor, but other insurance lines aren't. Now, obviously, part of what we focus around the hackathon are mobility and health. And actually, having seen a number of the startups, having seen the finalists, I'm really excited about some of the ideas. And we all should be, because I'm thinking about how do we use those ideas, going back to my learnings about spending more time, how do we bring those ideas into the ecosystem, into the solutions that I provide and we provide for our clients as well. Because that's at the heart of it. How do we make sure we join everyone together to deliver those best things for our clients? And then also I think about actually, the evolving regulation. Actually we've got evolving regulation, we've got sometimes immature regulation. Again, I think the great thing about this region is we can actually have an impact on the regulators. We can actually get regulators involved and say, these are the things you need to be thinking about. These are the things our consumers need at the end. So please help us shape that regulation so we can do those sorts of things. And I think it's a great place to do it in this region. But then I also look at the innovations we've got. Look at the API sort of connectivity that we're able to do. Look at all the sort of open type banking, open insurance type initiatives that we've got. I also look at the insurance in terms of things like life insurance, that we can actually do that through online subscriptions. The demand for usage-based insurance. And again, the types of fintechs we've been seeing over the last few weeks are going to enable us to do things like that. Look at the sort of well-being apps. I think they're fantastic. I mean, I was talking to someone this morning at breakfast about a well-being app and actually how it will encourage you to drink water. I said, don't let my wife know. She's just going to monitor me day in, day out, saying, am I drinking enough water? Which I know the answer is definitely not. So, but I think that all these things are fantastic. I recently did some work looking at the youth market actually in Saudi Arabia, talking to 18 to 25-year-olds, interviewing the youth. And actually it was surprising that actually, first of all in this region, how financial savvy our young people are, how interested they are in financial services, actually the products. But they want insurance in the way they want it and how they want to consume it. And therefore, again, it's important that actually we have ecosystems of fintechs working with amazing insurers to actually deliver those sorts of products. So actually, me stepping back and listening, I'm actually really excited about the fact we had 134 fintechs take part. And as we've already said, you're all winners. I mean, they are fantastic ideas. And I know some of those are going to be the unicorns. And I know some of those are ones we're going to go, when I sat in my office all those years ago, I should be investing in as well, because they're going to turn into fantastic companies and with fantastic ideas that are going to make an impact on society. So to finish my quick pitch, I say thank you to you all. I am looking forward to the rest of the day. I'm looking forward to some of the panels as well. We've got some fantastic people in the room. But finally, thank you, Lars, QIC, for bringing us together, for actually enabling this. And here's to many to come. So thank you very much.
Thank you all. And now we are into our first panel, focusing on InsurTech startups, and I'm delighted to welcome Mr. Timo Drigger, Head of Strategy and Execution at QIC DVP. Thank you.
Yeah, thank you. Please, the other panelists, please come on stage. Tanya, where are you? Thank you guys. I'm Timo. I'm more or less the first employee of QIC DVP. I got a call last year and some guys said, do you want to go to Qatar? I said, maybe. But the last 6 months were amazing. I kicked off almost 10 years ago the ecosystem, the InsurTech ecosystem in Europe. And it's a pleasure that I'm here right now. Thank you to Mr. Salem. Thank you to Lars for this opportunity. Yeah, to create here an impact. That's it more or less from my side. And please introduce yourself. I think we start with Tanya, ladies first.
Thank you very much. My name is Tanya, and I am here on behalf of Democrats today. I run the data analytics, data science, and other strategic initiatives at Democrats. And in a nutshell, we are an automation and digitization platform for insurers and insurance brokers. And thank you for having me here today.
Nicola?
I'm Nicola. I manage Bima. Bima is a digital insurance business that tries to make insurance lovable and not an easy task. We started in 2019. We're backed by one of the largest conglomerates here in the region, and we are playing on three main levels. So we are trying to play on trust, giving users instruments to be more transparent. We play on price, being much more targeted and segmented to what generally the pricing structure are designed, particularly across the MENA region. And we play on convenience by trying to bring the most convenient way to buy and manage the entire insurance cycle. So we started in the UAE, but we have a region. We are designed for regional growth because, as correctly Lars was saying before, the digital businesses needs to scale. And scaling throughout the region presents few complexities due to the market fragmentation. So what we try to design is a model to be able to scale by partnering with one leading insurer in each country, either with a managing general agent structure or as a joint venture partner. And we are 50 people, a fantastic digital team, very diverse background. So we're really trying to do insurance differently, starting from the type of talents that we brought in, from finance, from technology, from consumer. But we are also trying to push and enable the digital transformation that is happening throughout the region. As I said, we started in the UAE, we are growing, we are going to launch our second and third countries in Q3 and Q4 this year, and we really hope that we'll be able to partner through a portion of this journey, and I would really like to thank you for organizing this first MENA event that is so important to make sure that the insurance businesses do start having the right ecosystem and visibility across.
Jonathan.
Good morning, everyone. My name is Jonathan. I'm CEO of Yalla Compare. You might have seen our name on the screen a couple of times already. Yalla Compare, I think I'm okay to say we brought insurance aggregation to the region. We are the UAE's largest aggregator already, and we were able to do that by introducing technology of our own that enabled aggregation in a climate and a country that wasn't really ready for it all by itself. So we've built that business quite successfully, I think, in UAE, and we're about to launch in Egypt as well, and then other markets will hopefully follow after that.
Thank you. Last but not least, Julian.
Hi. Hello, my name is Julien. First, I want to thank you to inviting me, and I'm so humbled to be here with you. Thank you very much. I have two hats today. First, I am the founder of an InsurTech, and I will pitch in few minutes. We are today insurance, and we want to become a full stack insurer. And we want to handle claims ourselves and to sell via B2B2C strategy. And my second hat, and we will talk about that a bit later, I'm a former executive from the French Insurance Supervisory Authority and as well of the European Insurance Supervisory Authority. And maybe we can share some inputs about regulation. Yeah.
Thank you. Yeah, let's talk about a little bit about business, about challenges. I think that these are the most important topics we can share today. Jonathan, from you're part of the, let's say, growing aggregators. Can you give us a little bit an overview or your view on the market, where we want to grow to, because challenges are coming up?
Yeah. If I may, I might just go back a little bit and go through some of the challenges that we did face and how the world has changed since. So I think when I first decided to set up an aggregator in this region, it really the landscape was insurers didn't have APIs, that they couldn't connect to us in any way. We absolutely couldn't implement the kind of model that they have in Europe, and so we had to find a new solution. So that solution really was that rather than connecting to insurance companies, we would take their pricing algorithms, rebuild them in our system, and essentially host their products and quote on their behalf. So that was quite a difficult challenge to overcome. So we were really trying to do something with tech in a world that absolutely wasn't ready for anything to be done with tech. So that was our initial challenge. We overcame that challenge, and actually the world is getting really quite different now. And actually, while we have hosted products up until now, insurers are ready now. They're starting to API connect with us. We have decided as a company that in the UAE we'll be out at the product hosting game, but by the end of this year. And now what we're seeing is other companies in the ecosystem emerge that can, if we don't host that product, others can do it for us. So we're actually working with Tanya and Democrats that there are other companies that can support us that now, so that we can really concentrate on what we're really good at. So I think it's moving pretty fast, and I'm probably, especially with events like this, probably more enthused now than I've ever been about the direction we're going in.
Thank you. We heard that you collaborating in a way, you and Tanya and Democrats. Nicola, how's your situation in this, let's say, in this battle? Are you competing? Are you working together?
I mean, I think it's good competition, I would say. Competition a bit more, but no, but on different segments, I would say, because we fundamentally do not want the people that are really willing to compare for the cheapest price. And that is a fundamental difference from the proposition that an aggregation business has. We try to play on product differentiation. And when I say product differentiation, it means that we try to bring users something different. As I said, in the UAE, we brought the first pay-per-kilometer usage-based and now also behavioral-based solution for motor. And that, of course, is appealing to a segment of the population, not to the entire population. But for that segment, we can be very efficient, much more segmented in the way we price them and we attract them. And of course, we try to give a level of service that is end-to-end, so not only in the buying and selling component, but extends throughout the entire value chain. So I do believe that if we do segment, while we do compete, because there is a portion of the population where, of course, we also sell TPL, third-party policies, so there is a portion where there is an overlap. But there is a lot of complementarity. So I don't know how much is the overlap, but I would say that is partial. We try to compete with segments with slightly different sophistication need, at least in our view.
Jonathan, what do you think?
So I agree with most of what was said. I do remember, though, that before we were launching our aggregator business in the UAE and now in Egypt, and we have colleagues here from other countries. I think it would be a mistake for any of us or you to think that aggregation is all about price comparison. That is one thing that we do. But if you actually, and so we have a reputation that we're driving down prices, it's really not the case. If you look at our platform, if you look at what users look at and what they buy, and I love this number, it's actually 84.4% of customers that buy from our platform do not buy the cheapest thing. So it's not just about price comparison, it's about comparing coverage, it's comparing value, it's those kind of things as well.
Thank you. I'm happy to hear that Demogrants is partnering with another InsurTech. Tanya, can you give us a little bit your experience? How is it to partner with an incumbent? What's your experience there? Maybe you can also tell us how is the partnership going with Yalla Compare?
I will leave that up to Jonathan to tell that use case, but I'm happy to talk about our strategy in terms of incumbents, and largely it's actually been positive, and it's been really the core of our business model. So taking a step back, our incumbents real has the traditional corporate world actually been disrupted by new entrants, by new digital entrants? Have things changed because of technology? And I was trying to do some research in order to answer this question more intelligibly today, and the closest proxy I could find was a study by the Harvard Business Review, looking at how many companies that are today on the Fortune 500 list were on the list in 1995. And the answer is 483. Are holding steady over the last 3 decades. Only 17 have really changed, and most of those are the Facebooks, the Ubers, the Netflixes that we all know. So what does that tell us? Insurers are probably here to stay. AXA has been around since 1816, AIG has been around since 1919, but there are no new technological entrants. And this is really where we want to position ourselves as Democrats on this intersection in terms of partnering with insurers rather than replacing them. Finding new products, new markets, new client segments that we can partner with them on. We can launch their products and their markets and their client segments more quickly than they might be able to do in-house with maybe more expertise on the digital side. And both sides kind of win in doing so.
What is quick? 1 day, 1 week, 1 month?
Well, I want to brag a little bit here now. I would say with some of the pre-underwritten products, we can launch and go live within 2 to 4 weeks.
Okay, yeah, that's very impressive. Thank you, Tanya. Julien, yeah, sorry. What's your opinion on what you heard about these things? How's the French market doing? You're more or less the only one who's in the European market.
Okay, thank you. It's a tough subject because comparison websites, they have an impact on prices and on acquisition cost. And from a regulatory point of view, or for startups, it's really a big concern, because there's something in the regulation, what we call ORSA, on risk and solvency assessment. It's just a simple question: do I have enough cash to pay my claims in 5 years? and I have to take into account my loss ratio, my acquisition cost in the future, my combined ratio, and the evolution of the financial markets. So it could be a little bit difficult for some startup to explain that everything is okay, because some of them can't really and don't have enough unfund to absorb like 3 or 4 years of big losses. So acquisition cost could be really a big issue. You should have a customer lifetime value that is long enough to pay back these acquisition costs. And you talk about the French market. If we use a comparison website and if we want to be in touch with a target, we could pay maybe $30 for 1 click. It's a lot. It's a lot.
Yeah, Jonathan, do you want to go to France when you hear this?
I like France. To respond to that, I guess 2 things. I think our model in the region here is a little different to what we see in Europe, in the sense that the European aggregators are almost sort of advanced lead generators. So we would pick somebody would pick your product from our side, and then they click through to you, and then if they close or not, they don't. We here are basically online brokers. So we're only getting paid if the insurer actually makes a sale. So it's purely commission driven. There's no clicks, there's no pay to play, there's nothing like that. One more thing I would say that we do, and we can't really control the loss ratio because the pricing is the pricing, right? That's not really us. But what we are doing is improving insurers' cash flow massively. So whereas a typical broker would pay perhaps every 90 days or so, we pay insurers twice a month. We don't need to do that. Our terms are 90 days, but we want to pay twice a month. We have the tech to do that, and we're sending detailed digital bordereaux with all the things so the reconciliation can be matched really easily. So we're taking a lot of processing out of the insurer, so we're doing it so they don't need to, and the cash flow has increased. So we can't touch the loss ratio, but we are certainly taking points out of the expense ratio, which of course helps combined.
Yeah, thank you. We take a little bit scaling, Nicola. How is it for you? You're in the UAE. What's your plan to grow, to scale in the region? And maybe you can give us a taste what challenges, what's good or bad in these things.
Yes, clearly. So the first element is that I do believe that digital businesses here in the region, they need to become regional, because each of the individual markets is too fragmented and too small to really be able to play on the edge. I mean, if you build something for a country with 3, 5, 10 million inhabitants, the chances to be able to get to the point where you can really properly scale even the capabilities in your team are very limited. So the ambition for businesses stemming out of the region needs to become at least a GCC or a MENA player. And this is what we are trying to do. As I said, we have a very robust team, a very senior team, of course an expensive team. So part of the growth is to make sure that we keep on the edge in the product innovation, in the product management, and in the type of value that we jointly create with our insurance carriers, with our insurance partner. Because a fundamental element, and what Jonathan was saying, is that we try to do differently the approach with the carriers, also because we want to enter in the loss ratio business. So actually, we want to profit, and to have our commercial models, they do have an important component of actively managing the portfolios together with the underwriting teams of our leading carriers. Doing that across the region presents its complexities. As I said, we want to become a regional player. We are launching the first country in Q3, the second country in Q3, the third country in Q4 this year, and we have a very robust pipeline lined up for next year. As you can imagine, the interactions with the multiple regulators, the interaction with multiple partners is to manage. I was saying yesterday, I have one dedicated person, very senior person, to manage the compliance and regulatory interaction. For a startup, that is not trivial. So it means that you need to have the level of structure, capital, strength to be able to sustain the monthly or yearly discussions with the regulators, with the value chain, and you also need to be able to deal with the right partners, with the right level of seniority. Because if we deal, let's say, with you, in a specific country, you do expect you have a level of seniority with your internal teams, an understanding of the market, an understanding of the underwriting that requires a counterpart able to interface properly with you to add value. So I would say that scaling is fundamental. We have a plan to scale, and we just started the scaling process. There is an acceleration curve that every early stage business I've seen in the past year. I've been working for around 20 years, a portion of that managing venturing funds. So I've seen many businesses. There is a scaling curve that is quite characteristic. I think that we are starting the part of that scaling curve, but we are also very conscious that we need to do it with the right steps to make sure that the sustainability is there. No? So the countries are configured in the right way, and the value chain is configured in the right way to let us have a sustainable business for the next, ideally, 20, 30 years.
Yeah, and Tanya, we started with you, we come a little bit to an end with you. What's your opinion on scaling? You have a very diverse background. How do you see this from a immigrant and your personal perspective? What countries are next on your list, and what are the challenges?
Good question. So I think in terms of the startup ecosystem in general in the GCC and MENA, there's still a lot of work to do. Referencing another CB Insights article, they recently published a report looking at all of the unicorns in the world and their geographic reach. And they found that there's about 1,068 unicorns in the world as of Q1 2022, and only 3 of them are in the GCC, which is 0.3%. None of them are InsurTechs. So obviously there's a lot of work to be done, which is why we're all here today, and it's exciting at the same time. However, it seems like there is a momentum happening in the industry. So some of the numbers in the UAE are super positive. 2020 saw about $600 million in venture capital funding, placing Dubai and the UAE in the 11th place globally in terms of this funding. So that's very encouraging, and I'm excited to see what 2021 will bring and how that will impact the whole industry.
Yeah, thank you. I think good closing words from my side. Hopefully, all of us, we can build a unicorn together. I think it was a good start for the ecosystem that we were here on stage. Shared a lot of valuable information. Thank you so much, and I will hand over to the MC. Thanks.
Thank you all for this great first panel. Now I would like to invite again on stage Mr. Lars German for the highlight of the day, the Hackathon Demo Day. Mr. Lars, the stage is yours.
Thank you very much. It's me again. No startup look. Yeah. Yeah. There are 2 things that we need to do, right? So, and it's a different mindset. So, helping this. It's a pleasure. I'm just happy that we really made it. I think we have 3 times talking about what you actually have achieved. I cannot say more. It's amazing. We have done similar things in my previous company, and I believe we really have a reached here that is amazing. So let's move on. Just a quickly summary, right? We talked about it. We started the idea 8 months ago, and it was actually a hackathon. Yeah, what we turned it to be is actually a startup challenge, yeah, but you learn when you're doing things. Yeah? So we did it because we were clear that in QSC, in digital venture partners, we need to be in contact with everybody. And how do we get in contact? There's Lars here, say I can do it in LinkedIn, but how do we get in contact? So this is how we lined up with all our partners, because we said, okay, we need to let the people know that are thinking or actually doing InsurTech that we are here and that we have a different role to play. And this is what we did. Right? So it was a heavy work, really heavy work. And you have known Timo and you have Ottman here that actually managed this. The whole process it took us a lot of energy. Yeah? But I now see the results, and the energy was well invested. Yeah? And now we really can see amazing pictures in the next minutes. So just to walk you through what we have done, we have used an external platform with Ergorize. We reached out to everybody that we personally knew. Interestingly, I would say out of the top 15, maybe 7 or 8 that we handpicked in the beginning already, yeah, and that actually made it to the finals, so our feeling was not that bad. We had those 137 startups that actually made it for the cut. I believe you have another 15 that actually wanted to be in, but you have a deadline. The deadline is deadline. I'm sorry for this, yeah? If the deadline is reached, it's reached. You cannot be submitting anymore. So I would say we would have more companies, yeah, that want to be in. Out of those, and we have been really happy because there have been 39 countries trying to get in. 39 countries trying to do the competition together with us. We moved from 137 companies to 50. And this is an exercise, you can imagine, 137 business cases and ideas. You need to scan. And I did not scan them on my own. We really have trusted our own team, but all the mentors and all the sponsors have been working on this, how to select the best 51. And on the 50, we did a 2-day event. We had 2 challenges out there. One challenge is how you as an InsurTech can actually help us to form the mobility ecosystem. And car insurance is only part of the mobility ecosystem. And the second one is digital health. What can we do there? Are there any propositions out there that we actually can do? And we've welcomed ULM here, right? So we were strong on health, right? And we're strong in digital health, right? But we thought maybe there's even something even cooler out there that we can use and work together with. So we had 2 days of workshop where companies pitched, companies got a challenge. Yeah? We invited Markus from Bravina, and we will see Markus later on, just after this session, to work on propositions. So on health, it was the idea, can I use data and modify the data that the customers I talked to before, our final customers, can actually learn something about them. And Rich from iterated on this as well, the drinking of the water. Yeah? These kind of things are really important. The Profina, you've been able to run some things. So we have this, we have the pitches on the mobility, and at the end it was a tremendous work. We have looked at 50 different companies. So how do you look at 50 different companies? Well, it's a work. Yeah? So what we did, we split it up in 4 groups, and every group had 15 startups. It took us 3 hours, yeah, to go just 2 hours, and then we another 2 hours just talking with the judges to see what is the best, what are the best 15. So this is what we did, and then we came from those 50 companies, and there were really promising ideas in it that we didn't select. But I encourage everybody of you that is not there now in the live streaming, try it again next year with us. There are many really cool ideas that we just didn't make for this time, but will be for the next. So we came to 15, and those 15 teams, we had 8 days, something like this, mentoring. So we went deep for us to understand their business model, their tech, and where actually we can build this into. We also helped them to be challenged. So I don't know how many mentoring sessions we did. Ottman has the number.
Well, that was 40, 50 plus, probably.
Yeah, 50 plus mentoring sessions all in 8 days packed. So I haven't seen him basically. I said, I need your brain. I said, no, I cannot. So, it was really hard work. But we have seen companies from a 3-minute pitch that was really crude to coming out of this top 15. And I mentioned Plug and Play and the mentoring work that they have done for the pitchings, where I say, wow, this is almost investment grade. Yeah, so we had 8 days. And then we had another pitching session of those 15 startups coming in and actually working with us and going through and actually deciding together with us who are the top 6. And this was a really tough call. We had 3 hours discussion, and actually we have this in the proper way. Like I'm German mind, Ottman is really structured, so we have a criteria, and we had numbers, yeah, and then you have your stomach feeling, yeah. But everything coming together and all the partners in. What are the top 6 that actually want to show here to all of you in the conference? And I'm really happy and proud that we have this amazing startups here. We have obviously seen the pitches several times, and I've seen many iterations of the pitches. So now let's just get it started. So I've put in there part of the patches. Thank you very much, all of you. Thank you, Ottman. Thank you, Yasmin. You made it happen. Yeah. All the mentors have been with us to make it happen, and we had amazing time. It was offline, yeah. And now seeing how logistical issues we had with the conference, it was good that we did it online. So this is what we have. Thank you very much. So our 6 companies, top 6 companies out of the Startup Challenge Hackathon. It's Velix from Dubai, and they will start the thing. And then we have Autovis from India, we have Trovi from Qatar, we have Today from, you've seen Julian, Paris, we have Proton from Dubai, and we have Avi from Qatar. I need your input. So what we will have is a public vote winner, meaning public vote means public vote. So we will see 6 pitches. After those 6 pitches, I asked everybody on the stage again, and we see them again, just so we have a feeling on who presented what. And it's up to you in the audience. You have 20, 30 minutes to vote. Who is your personal winner? And everybody on the live stream, do the same. We want a public vote winner here. So after it, one of those 6 will get this award, public vote winner of the first MENA hackathon. In the meantime, the judges will convene, discuss, and coming back with the winners of this hackathon. In any case, I want to say, all 6, and you know me, you're winners. You made it to this. You have amazing proposition, amazing business models. We would love to work with you. So without further delay, let's start the exercise. Yeah, let's start the exercise.
Yes, start the exercise. First to come, Alex, please.
Yeah, so we start with Velix, an interesting new kind of digital health proposition. Welcome on the stage.
Thank you very much.
I know that your co-founder was trying really hard to get in.
And he's coming, yeah.
Yes, he's coming finally. But I know that he has been 20 hours, 24 hours at the airport trying to get the Etherats up in green.
That's right, yeah. My time in the sun, right?
Yes, no, it's you. So let us see if we get the technology working. Yeah?
Yes, almost.
Yeah, we good?
I'll hand over
Awesome,
this.
thank you very much.
You tell me if you click right. I click right. Are we good out there?
33.
Okay, the floor is yours.
Awesome, thank
You
you.
have 8 minutes. Thank you very much.
Thank you very much. All right, thank you so much for being here. I have 8 minutes. I'm going to try to keep this as fluid as possible. My co-founder, like Lars mentions, wasn't able to come. We were supposed to do this together, so actually it could work in our favor because the story that I'm going to tell you next is it's a true story, and it's a story that's very close to our hearts. It's our story, and it's about how the idea and the concept came together. So let me jump straight in and talk to you about this. So Vaibhav is our CEO and my co-founder, and he was born into a family of insurance. So his father did insurance. The family talked about insurance at dinners and lunches and breakfasts. And at a very young age, 4, he used to go to school and talk about it. And then when he got to 4th grade is when he started writing about claims, making sentences and premiums. And when the rest of us were thinking of becoming astronauts and policemen and firemen, he was like, I'm going into insurance, right? So that's where the journey started for him. Very shortly after, he moved to Nigeria at a very young age. His dad got a senior leadership position in insurance in Nigeria. And the comfort time started from there, right? So he was living in this cushy lifestyle, enjoying the benefits of being the son of a corporate dad. Moved to Dubai, still very much in his youth, eating all that he could, living the incredible sedentary life that most of us kids from the region live, beautiful pizzas and burgers. And that's when it hit him. He realized he got fat, like really, really fat. Like I've seen photos and I see him now and I can't believe it, right? But that's when the mind started to take over, and what happened was he started down this road of transformation. Confidence took a huge hit, because when you're at that age and you're going to school and you have friends and you start getting bullied, you want to really make a difference. You want to make an impact. And so what he did was he started to apply to the top schools. He got into Ohio State. Very shortly after, he got accepted into INSEAD to pursue his master's, which is where he learned a very fundamental thought that INSEAD teaches, which is business as a force for good. But then just like the rest of us, at some point in our life, fell to the trap of corporate life, right? So we started working for an employer, started climbing the career ladder, and it came to a point where he realized, how am I bringing this greater good from what it is that I'm trying to achieve? And that's when it hit him. It's time to look for a purpose, and that's where I bumped into him, and we were able to build the concept of WellX together. And that's where the concept was ultimately sort of conceived. We conceived this concept to be able to build healthier, happier, and more resilient communities, and we use insurance to be able to do that. So the WellX ambition is essentially trying to reduce healthcare at a national spend, but we do that by prioritizing prevention over cure. We do that by building healthier communities, and we do that by driving customer engagement. And we exist in a market where we have real challenges. So you have health insurance premiums going up due to medical inflation, 10% year on year. You have lifestyle related diseases, which is a real problem. And then you have sort of like the silent pandemic, obesity, which is a big problem and more so in our kids. And other real challenges that all of this brings together is the stress on the healthcare system. But here's the challenge that a lot of us consumers on the other side of the fence really believe in or really feel on a day-to-day basis is we have no control over what those premiums are. It's almost like we go on a website, we know what our life is worth, we know what our health is worth, we pay that value, we look for the best deal, and then we move on. And that's a challenge that we're trying to break, right? We're trying to make or put the control back in the hands of the consumer, and we noticed when we started looking around the industry, and when we started looking around the world, that people are already living hyper-personalized lives, right? So people, when they go to Netflix, they go to Facebook, they go to YouTube, they get what they want, when they want it, and how they want it. They consume products in a very personalized manner. And we thought, it's time we bring this to insurance. And we're doing this by, you wake up in the morning, you get a sleep score on your phone, you get a buzz on your phone saying, well done, you slept, you met 90%, 97% of your goal. Here's some cash back because you did so well. Well done, keep doing what you're doing, and you're gonna get better. And that's when the whole concept of WellX was formed. So you have insurance hyper-personalized to the level where we've gotten an entire ecosystem of wearables, from the Whoop to the Apple Watch to Google Fitbit. We've got the wellness apps that are connected to the ecosystem, health coaches, gyms, and all of this feeds in to the WellX health insurance product. And that's where the business is, because we do what we do by driving customer engagement through cashback incentivizations. We do it through wellness recommendations that are tailored and personalized to every single individual, and personalized premiums, giving that sense of control back to the consumer. Ultimately, in a day and age where customers engage more with wellness propositions, ideally, cost of insurance should come down, and that's what we've been able to achieve at WellX. How we went about doing this, we put together an entire ecosystem. So we went back, we co-created the product with the reinsurers, found capacity, brought that capacity to believe in the concept, and then we went to market using existing providers in each market. So we looked at your top sort of insurance companies and then their brokers and their channels and their intermediaries and went to market with it. So pretty much product build, we're the product owners and we go to market through the B2B2C model. We continue to own customer engagement by providing them rewards every time they do something good. The opportunity is huge. I think that's one of the reasons we're all here. The insurance market is growing quite rapidly. Our TAM, only looking at the individual space, is $1.15 billion across the UAE and Saudi. Our customer proposition is very simple. In a very sort of heavy industry like insurance, when we went across and looked at what the consumers want, we noticed they want something simple, they want easy to understand, they want it to be as easily addressable as possible. So we put a proposition that was very simple and straightforward, fixed amounts of cash back for every good deed you do. Every time you take care of yourself, we'll give you 25, 75, 100, 125, 200 dirhams, and overall up to 2 months of your cash back as premium. And we took this to market as the region's first variation of a medical insurance product. So instead of talking about when you fall sick, we'll take care of you, we're saying stay well and we'll keep rewarding you. We'll completely flip the narrative on the concept. And we go to market through the B2C model, as we mentioned earlier. We also have a very strong embedded insurance proposition. So our entire ecosystem of wellness partners, and we believe this is where the future is. People will go to health providers or wellness providers to buy wellness or health insurance. And so we're embedding insurance across our entire ecosystem, and we have our own D2C onboarding platform. This particular product, by the way, already sells to the tune of $100 million in the UAE in terms of their individual medical product. Our secret sauce, and this is what sets us apart, is we've put together a team very early on, different backgrounds, but more importantly, with incredible depth of experience from various different industries. Technology roadmap has been, up until now, we've created our databases, we've got our AI ML models up and running that have started to learn what works for each and every consumer to be able to personalize the experience. And our application is well underway. You can see some of the screens rotating on the screen. And ultimately, we are driving towards an ambition to create an AI ML driven SaaS platform. And so we set out on this journey to be able to provide wellness at scale, because we understand that data only starts to work when you have enough of it. So we partnered with some of the world's leading providers in Whoop, wearable providers in Whoop. And we've also got Steppy that ran the Dubai 30/30 challenge last year. So the ability to handle scale, and we have 13 more ecosystem partners at this point. So we allow people to do what's good for them, and we give them the opportunity to pick the right wellness proposition that suits their requirements. Right, okay. So that's our recurring revenues. We've actually started in January. In February is when we went to market formally and officially. We did a lot of the sales early on ourselves, to a point where we've now partnered with an insurance company in the UAE that's taking the proposition to market, the B2C model. In fact, just yesterday the announcement went out where we went live with Salama. And the ask, so we've got a $2 million ask that we're at right now, which is our seed round. We're very much bootstrapped until now. We're looking for partners that are going to help us build and scale aligned to the ambition that we have. We're very stubborn on where we want to get, but we're very flexible in how we get there. So what we do have is the ability to rapidly expand in GCC countries. The opportunity is clearly there. And we're looking for an ecosystem in which to thrive. I think Lars touched upon this a number of times, that this is a very heavily or highly regulated market, and you need to find the right partners to be able to hit the right sort of notes as you go and grow. Ultimately, and this is where I close, our purpose is to see a day when insurers drop the umbrella and stop protecting rainy day to becoming an everyday partner, just like your friend and family, because ultimately when you fall sick, they're the ones that pick up the checks. And we as an insurance community need to start taking that position. We need to start providing hyper-personalized care. We need to focus on outcomes, because everyone's driven by what's the ultimate outcome of anything that I particularly do, right? And ultimately, continuously and constantly improve as we go along. Eventually, coming to a point where we're selling health and not limits. Thank you very much.
That was a very good presentation. Thank you very much.
Thank you, Lars.
You did overdraw your limits by 2 minutes.
I did, right, okay.
But fine.
Thank you so much.
Thank you very much. Well, you have to be concrete, right? You have 8 minutes pitch and it's 10, so there are minus points. Thank you very much. So we have seen a really interesting digital health proposition. Now we switch gears. We do something similar, yeah, but we go to cars and mobility. Welcome on the stage. Autovis. Thank you very much. You have 8 minutes, right? Please stay with the limits. Okay, perfect.
All right. Good morning, everyone. I'm Kamal Agarwal from Bangalore, India. Great to be here, participating in this contest. So I'm co-founder of Autovis. As part of the hackathon challenge, we looked at the mobility side of things, especially the question, how can we nudge customers to share their data, driving behavior data, in return for incentives? And the reason we picked that, we looked at it closely, is because it's close to our heart, because it deals with connected car data. And this is what we work with at Autovis. So essentially, stepping back a bit, looking at overall connected car opportunity, it's a huge opportunity, it's a big wave, along with electrification, autonomy. We're going to have around 50% of cars on road across the world connected to the cloud, which opens up a huge amount of possibilities to create new use cases, new experiences for car owners, for fleet owners, and new value being created. McKinsey estimates this could be around $750 billion of new value being created by 2030. But there are challenges along the way. And this is also disrupting the automotive value chain, OEMs, insurance, the disrupting business models. But there are certain barriers we feel in achieving that value. And the three top amongst them, in our view, is A, the data of these connected cars is lying in silos. B, the data is not really being processed into insights which can be consumed by the ecosystem and by the end car owners. And C, which is related to the hackathon challenge, customers, car owners may have issues in terms of sharing the data because of the privacy concerns. So these are the challenges we are trying to solve at Autovis with our vehicle data analytics platform. It's essentially an intelligent platform which enables sharing and monetization of car data with the consent, with the privacy concerns of the consumer addressed. So here's what we do. We basically take data from various sources coming from different types of connected devices, whether it could be OEM-fitted telematics devices, aftermarket, smartphone sensors, data which is location, sensor, video. We process them at scale on our platform, analyze it, create use cases and insights out of it, aggregate them in certain cases, and those insights are then fed to the ecosystem. So for example, an insurer is interested in driving behavior, my driving pattern. Used car platform is interested in knowing the condition of my vehicle. A servicing center is interested in knowing what's the prediction on the repair or the next possible repair offer I can give. Governments and municipalities are interested in aggregated data for traffic and congestion analysis. So the use cases are immense. What we are trying to do is to create those use cases, have them ready built, so that ecosystem can consume them in the form of apps, in the form of APIs, but all with the vehicle owners' privacy and acceptance in mind. So we've created a bunch of SaaS applications on top of our platform. These are some screenshots of our apps which are live in action in our home market, India, and certain other emerging markets. This is connected car application for car owners, fleet management application for commercial vehicles. For insurers, we have smartphone telematics for usage-based insurance, automatic crash detection, which can be used for emergency response, for faster claim processing, and apps for aftermarket, for service centers to know the condition of the vehicle, for used car platforms to know the value of the vehicle based upon data. And this platform, as I said, is live. We have harnessed over 200 million kilometers of real driving data in India and some of the other markets across 10,000 cars. So coming back to the question of the challenge statement, how can we encourage customers to share their data? And this is our simple view on that. It's based upon trust and transparency. So we should have a simple model where, customers should be clear. Sorry about that. So the customer needs to be very clear about what data is being shared with which third party, for what purpose, and what possible benefit I may get out of that. Once they are clear and they have control, as simple control like in an app where I can switch on and off and access to my data to a particular third party, builds that trust and credibility. Talking about insurance, our platform has huge use cases for the insurance industry. Usage-based insurance, we're quite bullish on it. We heard in the panel earlier today, in several markets, with the regulatory environment becoming pervasive, COVID-19 also has accelerated acceptance of pay-as-you-drive. So we are providing variety of technology options, working with insurers and intermediaries to embed usage-based insurance with different technology options, whether through dongles, through smartphone, and so on. And the other angle we see, while UBI may be emerging in certain markets, or it may be a niche in certain markets, like the panelist in the morning said, there is another angle by which insurers can really harness this data to really engage digitally with the consumers. So car owners, if they are keeping an insurer app, they need some insights to come on a daily, weekly basis, which are personalized. You can use this data to create gamification and rewards. You can offer micro rewards based upon driving behavior, promote safe driving, essentially use the concept of behavioral economics, hyperbole discounting, give small rewards along the way so the customer feels protected. So it's more like prevention before protection, and build loyalty over a period of time. So these are some of the things we are doing in our apps. We are also trying to combine telematics data with some of the fitness and health data to create interesting mashup of use cases. For example, an insurer could be interested in my driving behavior, but also my ability health-wise to drive in a certain scenario. And by combining that type of data in our platform, we could create those interesting mashups. A little bit about ourselves. So we are, a team which has been working together actually for the last 20 years. Prior to this startup in the InsurTech space, me and my co-founders were in the semiconductor space. We ran a startup for 13 years in a very frugal, profitable manner, sold that to a US company, generated 10x returns for our investors. And now we are working in the auto IoT and the InsurTech space. And we have a stellar in-house team to take care of all the technology aspects of our solution and looking to grow our team business-wise in various regions of the world. So what are we looking for coming here? Obviously, delighted to be here, looking to partner with QIC, DVP, to co-create certain solutions for the region, customize our use cases for the region and provide them. And also we're looking for strategic investment. We have done the heavy lifting in terms of our technology development. Our applications are live across different countries. And I think we're poised at the right time to grow that in different markets, and we need capital to do that. Our business model is B2B2C, where we're partnering with the dominant insurer or OEM in the region to bring scale to the platform. And our revenue model is essentially subscription and SaaS driven, which gives us a predictable, positive cash flow over a period of time. Also, a bit of word about the partners whom we have worked with through the mentoring sessions. Google Cloud, we're part of the Google for Startups Cloud program already, using some of their services as part of our production environment. We are also exploring using additional services as part of our technical architecture. And with Deloitte, we are happy to have their guidance to handhold us about the region in the insurance mobility space and look for collaboration. So I'll end here, and thanks again so much for the opportunity.
Thank you very much. That was a really crazy and good presentation. Fantastic data play. Thank you very much. And you have been sharp 8 minutes. So.
All right.
Great. Thank you. Next speaker will be a Qatari company, Troby. Yeah, here you are. I've seen your pitch yesterday. This will be amazing. Thank you very much. Welcome to the stage.
Thank you. Thank you. My name is Ayman Barry. I'm a co-founder at Druby Health, and I'm excited to talk to you today about some of the work we've been doing over the past few years. Okay. All right. So first, to provide some context, 2 in every 7 adults in the MENA region suffers from some chronic condition. So like diabetes, high blood pressure, high cholesterol, hypertension, obesity, and the list goes on. I'm sure for most of us, we know somebody in our life who struggles with one of these conditions. Okay. For me, it was in my family. So I have a very close experience with what very late stage, out of control diabetes looks like, and at the time what felt like every complication in the book that comes with it. Okay. And if bad health is not bad enough, it turns out that chronic disease patients are significantly more expensive to care for. Diabetics, as an example, pay more than double their cost in medical expenditures as compared with non-diabetics. Okay. So To combat the issue we have with a high prevalence of chronic disease in this region, we built the Druby Care platform. This is the program that I wish that we had at the time that we had struggled, we had our struggles. Okay. So the Druby platform incorporates artificial intelligence, digital coaching, smart technology and tools to track data from multiple sources, clinical guidelines, and behavioral science. Okay. All right. So here's an overview of how our system works. The first step is to collect data from multiple sources. Right? So multiple tools and devices, we can collect your historical data for your blood sugar levels, continuous and traditional glucose meters, from other platforms such as Apple Health and Google Fit, from your fitness trackers and so on. And based on all this information, we compile a single patient record. Okay? Now, once we have this uniform profile, the next step is to interpret the data. Now, the interpretation done by our algorithms doesn't just create a health profile for users, but also a behavioral profile based on the previous behavioral patterns we see in that information. Okay. So, based on this assessment, the next thing our algorithm does is apply that information to trigger certain interventions to help people change their behavior. So, this is the behavioral science component in our systems. Okay. So, you get the right message, so you hear what you need to hear, at the right time, when you need to hear it, so that you can make the right decisions and the right choices with your actions. And that's how we change patient behavior and help them achieve better health outcomes. And at the end of this cycle, our system will then optimize to see what has been done, what was the effect, what are the changes, and take those new learnings into the next cycle. And so it continues. Okay. All right. So we currently have 2 products on the market. We have a patient-facing mobile application where users can track all their information and gain all their insights. And we have a clinician-facing web portal which allows for real-time remote patient monitoring. This is to be used by the doctors and the clinicians. And it also enables easy communication between your doctors, your patients, and your patients. Okay. So enrollment into our programs is very simple. It takes about 2 to 3 minutes. You can download the application. The first thing we ask you to do is to complete a brief survey. So you do a survey, you give it your basic profile information, you connect your devices and your data sources, and all that gets tracked into the application. Next, each patient will receive a customized, tailored plan based on their profile, their information, their goals, their health targets, and their needs. So this is a highly personalized plan for each individual. And once you receive your plan, you get to start with the program and you'll have access to all the key features on the application. Okay. And the first of which is access to a virtual care network. Now, this is not an AI or a chatbot. This is a real certified healthcare professional that is assigned to each individual in our programs. So patients can book virtual consultations with them, they can organize phone calls, or they can chat with them through an interface that works just like WhatsApp. The service is available on demand for all of our patients. Okay. Next, the application has a dashboard for all the smart tracking tools and all the data, so you can track everything into a single location and find all your insights easily on the application. And we have a database that we've designed and built specifically for the Middle East. So all of the regional and cultural foods that you wouldn't find elsewhere, you will be able to track in Druby. For example, you can search haris or majbous or whatever the local cuisine will be, and the application will recognize it. And further to this, to make things easier, we've added an image recognition feature where you can just take a picture of the food. It will recognize more than 800 meals and give you back all the nutritional information of what you're tracking. Okay. Okay. And for each patient on the application, the system works to curate content individually and specifically for that user. So if you're diabetic versus if you're hypertensive, you need to learn and see different content and material. If you have type 1 diabetes versus type 2, it's a different story. If you're pregnant or not pregnant, and so on, with every different combination. Okay. So what I've just told you is that we have a platform. It takes 2 minutes to enroll. It will analyze, interpret, understand your data and your profile, and it will change your behavior to make you healthier. So the real question now is, does this actually work? I'm happy to say that today, we have the evidence to show that yes, actually, it works. For the 2nd year in a row, we've been published in the Journal of the American Diabetes Association showing the impacts and the effects that Druby has on chronic disease patients. We had started a clinical trial with Hamad Hospital in 2018, demonstrating the effects of Druby as compared with a group that follow the standard care and haven't been enrolled in the program. The results across the board are positive for those that use Druby, better health outcomes achieved for diabetics. In 2018, we launched with the Primary Healthcare Corporation, supported by the Ministry of Public Health, and their independent analysis finds as well statistically significant results for those who use Druby versus those that don't across the board even for health metrics that we don't track on our systems. This is an independent study conducted by PHCC. And since 2017, we've been working with our partners in public and private healthcare to tweak and optimize our solution to achieve the best possible outcomes for our users. Okay. Today, we've enrolled more than 30,000 chronic disease patients onto our program across 34 health clinics and health centers across the region. Through the Primary Healthcare Corporation, we have nationwide distribution here in Qatar. We're also in Oman. We've had projects in Kuwait, and soon, inshallah, we'll be in the United Arab Emirates, starting in Abu Dhabi. Okay. We have a 90% customer satisfaction rate, and 84% of users who have been enrolled in Drubi have reported weight loss. Okay. Okay. So Drubi is not the first solution of its kind in the world, but we are the only digital therapeutic solution that is currently operational in MENA and tailored to the Arabic culture. Okay. When we benchmark Drubi across other significant comparable solutions based in North America, Europe, Southeast Asia, we find that Drubi stands shoulder to shoulder with them on almost every metric, on the level of service that we provide, and in some cases we exceed them in the clinical outcomes that we achieve. Okay. Okay. So about our business model, we have a subscription and licensing model. We work with public and private healthcare providers to help them manage their patient base. We work with employers where Drubi can be provided as a wellness program. A few of our notable clients include Uridu, Qatar Development Bank, and Qatar Foundation. We work with insurance providers to help them lower the costs of patient management because healthier patients are less expensive to care for. And we have a direct-to-consumer play where people can download the application directly, pay a small subscription fee, and get this, the same benefits and full access to the service. Okay. Of course. We're lucky with the team that we've compiled over the years. We have an in-house development team that's responsible for the technology that we have. We have an in-house medical team, which is in part responsible for the clinical outcomes that we've been able to achieve. And Drubi would not have been possible without the effort of our co-founders, Noor Jandali and Abdullah Al-Misnad, and the support from the chairperson of our board, Dr. Hassa Al-Jabir. Okay. All right. So, the ask. We're not pitching for funding today. Alhamdulillah, we're in a good position when it comes to capital. But what we are looking for is strategic partnerships to help us grow Drubi and expand. Okay. So we believe that there are synergistic opportunities between Drubi and QIC as one of the leading insurance providers in the region, where Drubi can reduce the costs by making your patients healthier. We also have some novel ideas about how Drubi can be used in a way that will benefit QIC, QIC's customers, as well as Drubi in a situation that it's a win-win-win scenario. Okay. So that's about me and about Drubi. Thank you very much for your time. And if you'd like to learn more, I'll be around. Thank you.
Thank you very much. Really emotional pitch. Thank you very much. This is great. So now we're going a bit away from Qatar and moving a bit 6 hours flight. Today, Julian, please come and tell us what you can do.
Thank you. I have the feeling I've been here before. Very strange. So, let's start with a picture. This is a health insurer, a French one, in 2021. Pretty scary. I took this picture myself. As you know now, I was an insurance supervisor, and after that, I built an actuarial company. If you go back to this picture, we should try to understand if this kind of company could easily onboard a large employees benefit plan, like 2,000 employees. I don't think so. You know, I have 3 kids, twins, 7-year-old, and a big one, 12-year-old, and I'm pretty sure that none of them will buy a guarantee to a company like that. So we are building ethic.com. We have been seed funded by 60 health insurers in France, and some of them are watching me right now, so I want to say thank you to them, and I value your trust, of course. And we have 2 main targets. Companies, because we want to onboard large health benefit plans, and as well individual with smart deductible to target self-employed workers, of course. We will be full mobile, full digital as well, and we want to set up a third-party payment. If you are insured, you don't have to pay. We will have an in-house claims handling system, and we want to reward good behavior. To example, if you are 50-year-old and you don't want to make a periodic checkup, we could step up a bit the price. Another example, if you want to lose weight, we can transform that into a kind of challenge. Let's imagine like we take the number of your weight, we remove 10 pounds, let's see each other in maybe 3 months, and if you win, we give you a reward. No money, but a kind of gift card, like maybe a free giant bucket at Kentucky Fried Chicken, maybe. Okay, you may think that we are not the first one. You are right, of course, yes, but we have specific strategy, okay? We do believe that we have to work on acquisition cost and on loss ratio, because there's a kind of golden rule in insurance. When you launch a company or a brand or a product, your first clients are often the worst risk profile of the market. So you will have bad loss ratio, about 90%. And we, of course, we have a B2B2C acquisition strategy, because a B2C strategy is quite expensive. And I said it before, we really want to pay back our acquisition cost with the customer lifetime value, of course. We want to get profit back. So with this B2B2C strategy, we will have lower acquisition cost. And I have just an example. We already have a deal with McDonald's, with a big French McDonald's franchise. And believe me, they don't fund us on Google Ad. We did it the old way, okay, with meeting, phone calls, a lot of coffee. And it works. So we stick to this kind of strategy, B2B2C. And also, we do believe that we must do a lot of stuff ourselves, because we don't want to outsource profits. That's why we will handle claims ourselves. It's really important to do it. To do so, we build a proprietary tool. Okay, with this tool we can automate a lot of things, and accelerate the rest. We use machine learning to autofill some form. We monitor risk on a real-time basis, and we do even prudential calculation. And we have our own affiliation system to deploy a B2B2C strategy. This is not a project. This tool is live. We call it Juno. This is the name of an old Roman goddess, and she's a symbol of the money, because her full name was Juno Moneta. That's why we call the money money. Okay, so money is of course a big concern for us, and yes, we care, and we want our client, our member, to stay with us, and we are working on churn ratio a lot. So we use basic stuff like a toll-free number. They can call us. Each member can reach his personal advisor if you have an issue. And we do that because we want to pay back, again, acquisition cost and to get some more profit. So if we have different products with good loss ratio, if we have low acquisition cost, and if we stick to this kind of strategy, we believe that we can get profit back. The market. We believe here there's great opportunities in GCC and as well in France. But to target this market in GCC, we really need a friend. And we would be really excited to do in business with QIC, of course, because we would need a reinsurer, we need to be backed up, we need a real sparring partner, of course, and a network. How much do we ask? We have two options, the big one and the small one. The small one, we would be a broker. And in this case, we would need maybe 3 million. If we want to be a full stack insurer, we have to comply with the local regulation. And here we have to make a cash deposit of 10 million, and we will need a bit more to grow. After that, we have a lot of ideas, and we have a lot of international brands to target wisely each market, okay? So after us, we can work the home market, and the renters market, and mobility market with a great brand like Streety. So guys, join us, and let's see how high this rocket can fly.
Thank you, Julian. Thank you very much. This was a nice speech. Really good. Well done. Okay, I know we have been hard on you. There are two more pitches. Please stay with us. Yeah, I think they deserve to be seen. Next company is Proton. Welcome on the stage and all the best. Yeah.
First of all, good morning and salam alaikum. Before I start my pitch, I want to raise a question. How many of you believe that your insurance is fairly priced when you buy personal insurance for yourself? I think, Mahinder, that validates our, fantastic, fantastic. There are few. And how many of you believe that your insurance was rewarding if you are a good customer? Our business plan is validated in Qatar as well. Thank you. So we are a Proton. We are building a digital insurer, revolutionizing personal insurance on personalized behavior-based pricing. And we are starting with motor insurance, which is helping you to build your risk profile and get rewarded once you are build a good profile for yourself. Now, in the motor and auto insurance space, typically in the region, which is around $11 billion worth of premiums, you see 75% loss ratio among the insurers across the region. It hovers around plus minus 5%, but typically it's range around 75% loss ratio. And this loss is caused by 25% of the drivers. So 75% of drivers are paying the hefty price of the losses made by 25% people. Right? And till today, insurers are insuring the car insurance basis the specifications of the car, not the personal factors, which are core attributes of losses. Like 60% road accidents happen because of distracted driving or speeding. And these are personal factors, which nobody is mining in as of today. And these personal factors are the causes of loss for that 75%. So, I mean, there are solutions around it, like telematics or connected car. OBD devices have come in. But they have their own key challenges, like regulatory challenges, like operational challenges. I mean, typically what happens, people, when the car is fitted with a dongle or a chip, people pull it out and throw it away. And then there are financial challenges and installation challenges. So, I mean, if you look at it, there has been a solution around which insurers have tried their hand on from many, many years, but they have failed. Or they couldn't achieve the objectives what they can do in terms of personal pricing for motor insurance. Then we came up with the idea of Proton, and that's how we built Proton. Video, please. Proton is actually is going to Proton is a mobile app which has been developed to give you permissions, or rather take permissions from you to actually grab the data of your driving behavior. What it does is it captures certain behaviors like speeding, acceleration, distraction while driving, when you are distracted, texting, on whatnots. So what's the problem? Okay. Cool. So, I mean, what we build in, when you download the app, you provide certain permissions, and then we are on. We at the back end, we capture your driving behavior and build our data models to price you on your insurance. And what we've done is, excuse me. So Proton has been developed to, and we've launched it in UAE, Dubai. We've been working from 1st of April. We've been working with various partners across UAE, partners like Kafu, Kareem, Policy Bazaar, who's selling or distributing our product. We've captured around 500,000 kilometers of driving data, which is helping us drive the business model around it. And we are backed by the reinsurers like Scholarly, which is supporting us in our risk capacity in terms of pricing the product. We have a fronting insurer as of now in the UAE market, and we are planning to expand in other markets because our reinsurer is keen to take us to the couple of other markets as well. So it's a driving reward program which offers you on a daily basis. Using Proton is pretty easy. You just download the app from Apple App Store or Google Play, sign up, and then you allow certain permissions for location and motion. You will get you will have that ability to grab that data, and then we will start pricing that data for you. Like I talked about, we have product partners like Score, which is helping us on the capacity side. We have Badri, who's helping us on the actuarial side. We have Shields and these other mobility partners we've worked with. Our growth story, we've launched from 1st of April, and in 12 weeks, we've done 1,050 policies around. 70% of our customers, as we speak today, love to share their data because in exchange of data sharing, they get rewards. So we have $5,000 of GWP per day coming in, and the daily active users or monthly active users ratio is way too huge, wherein 70% are active on our app on a daily basis, which is 11 sessions per month per user per month we are getting in. We score on a slab-based, categorized basis. If you are 80 and above, you get very good discounts, maximum rewards. We have a range of 50 to 80, which is standard premium. If you're less than 50 in terms of your scoring, we get score. If they're less than 50, premium loading, and you are getting a restricted reward setup. Our business model, 25% of our revenue comes in from reinsurance commission, which is the chunk of the revenue. We have a 10% acquisition cost. And we claim to have around 75% of retention, retaining our customers year-on-year basis, 75, as big as. Because typically in the region, it is around 25 to 30% by insurers. We work on a gross margin of 40%. This is our market size. 11 billion is GCC market size of car insurance, of which the segmented market we are looking at is 5 billion, and the operating market we are going to work on is around 500 million, which is the expats and the new drivers, which are seeing a shift happening in this kind of a usage-based insurance. Our ask is we are raising around of $2.5 million to build out our motor UBI offerings. Our split of the ask is here on the screen. It's around 45% to 25% in product development and technology, and 30% would go in the marketing side of it. That's going to take us on a runway of 18 months. We'll add around 25,000 customers, and this ask is for UAE and one market. Our team is capable of having superb execution capabilities. I come from a solid insurance background of around 23 years of WorkX. My partner Mahinder is from a highly digital background. He comes from a powerful venture building setups as well. And our core team, the engineering and data science team, is powerful enough to actually take us there. And that's all about it. Thank you so much. I hope I was well on time.
It was on time. Perfect. Thank you very much for the presentation. Really interesting. Really interesting. We're now coming to the last one. A Qatari startup. Rimat, Mohammed, where are you? Here. We are missing. Welcome on the stage.
Thank you.
You're the last startup here to present. Let's see what you're getting out of it. But I know your pitch is really energizing. Do you need the clicker? Yeah, clicker.
Thank you so much. Assalamu alaikum.
Thank you.
I am Mohammed, the founder and CEO of Avi and the computer science professor at Carnegie Mellon. So to begin with, I am really so glad to be with you today. I know most of you are tired now. This is the last session, but I am here to tell you about Avi, which aims at empowering the world with an innovative healthcare solution that changes lives. The story of Avi started when my son Ahmed fell sick with a chronic illness. My wife Ahmed and I went through a very difficult health journey that made Ahmed hope for someone who could make him better. He drew this original mascot that you see in front of you, and it was right after then when Avi was brought to life. Ahmed is not alone. Millions of people all over the world struggle with health issues, and it's a common practice among them to turn daily to the web for health. For instance, 80% in Australia and 67% in USA search online for health info and treatment advice. 50% of patients globally use search engines like Google and Bing for self-diagnosis before visiting emergency rooms. But we all know that search engines, sorry for Google, search engines are not diagnostic systems. On the flip side, AI self-diagnostic algorithms can diagnose patients instantly. However, they will only be acceptable by you and me and any person if they can perform accurately. Enter Avi. Avi empowers patients with an accurate AI self-diagnostic algorithm that took more than 3.5 years of extensive in-house R&D. In front of you is an actual real-world visualization of Avi's artificial intelligence model in action. Avi currently covers all the major body systems, including cardiology, neurology, and hematology, to mention just a few, and is continuously evolving literally on a daily basis. It was proven scientifically most recently to be the most accurate in the world, especially against international popular solutions like ADA in Germany, Babylon in the UK, and Boy & K Health in the US. We launched Avi in a form of an app mid-last year, and it's currently in over 175 countries with a retention rate that exceeded 30%. Let me now tell you the full health journey as provided by Avi. Think of Avi more broadly as a virtual clinic that can check your symptoms instantly and accurately, connect you with the right doctors, prescribe medicines for you, process your claims, and allow you to commune with like-minded people. To elaborate, say you want to self-diagnose with Avi. You input your chief complaint, then based on that complaint, Avi forms a medical hypothesis and starts mimicking clinical reasoning by conducting an interactive session with you, asking you several questions before he provides you with an accurate diagnosis. The entire process, from start to end, takes 2 minutes. And even if millions self-diagnose with Avi, Avi will respond to all immediately, even if they actually self-diagnose in parallel with Avi. You can then educate yourself with your diagnosis and go with Avi's recommendation, which was in this case to contact a general surgeon. You click on connect, then based on your diagnosis and the expertise of doctors on that particular diagnosis, which Avi keeps learning about continuously, Avi is going to recommend the most suited doctor for your case. In addition, he will reduce the waiting time on you to see those doctors and alleviate the pressure on the national healthcare systems. You can then schedule a physical or a virtual appointment with any of those doctors. If it's a virtual appointment, we provide doctors at hospitals with an app that allows them to provide you with a virtual consultation and prescribe medicines to you, as you can see, digitally. The digital prescription shows up automatically on Avi. You make the purchase, and then the prescription gets automatically forwarded to our pharmaceutical e-commerce platform that was fully built in-house and uniquely allows collecting medicines of one order from multiple pharmacies, especially if there is no single pharmacy in the country that can fulfill your order. Then put all your medicines in one bag and deliver to you wherever you are in the country within 2 hours. For insurers, we identified several common scenarios. For instance, the patient may feel unwell, but from a medical perspective, they are not ill. Nonetheless, they visit a doctor, and the insurer pays for that unnecessary visit. If the insurer asks the patient to self-diagnose with Avi beforehand, Avi is going to recommend no visit for this case, and as such, will save the money on the insurer. Similar logic applies to several other common scenarios. For 2 of those scenarios, Avi is going to try to entirely avoid the claims. And for the remaining scenarios, in our most recent experimental deployment, Avi was able to reduce the number of claims by 22%. In addition, Avi is able to process literally millions of claims in a blink of an eye, in less than 1 second, and detect frauds using artificial intelligence. Health-conscious people and patients can also come on Avi and exchange ideas and thoughts and experiences on health and lifestyle, because we want them to live all healthier and happier. To the best of my knowledge, the virtual clinic concept with the 5 features that I just presented to you is currently, at the moment, the most comprehensive and advanced health tech solution in the world. It benefits all stakeholders. For instance, patients now will get lower diagnostic errors, lower waiting times, and much more. Providers are going to get increased efficiencies in bookings, rebookings, cancellations, confirmations, no-show management, all provided by Avi, and much more. Insurers are going to get reduced number and value of claims, reduced frauds, to mention just a few. As for the business model, the check and commute features are free for patients. You can try them now. For the connect and cure features, they involve a transaction fee on the providers, and the claim feature involves a subscription fee on the insurers. Connect and the claim are still pre-revenue, and the cure is currently generating revenue. We raised so far in a pre-seed and seed financing rounds close to $5 million, and established a product market fit with more than 60 local providers, including Al Imadi Hospital and Ali bin Ali Medical, to mention just a few. And we are currently at Series A. Once we close Series A, we're going to build a base of 500,000 local active users. In addition, we're going to onboard 200 more healthcare providers and capture 1 to 3% of the local pharmaceutical market. In addition, we will start building a base of more than 3 million users in Oman, UAE, and Saudi Arabia through our self-diagnostic algorithm before we start penetrating those markets physically through our other features, and start penetrating at least one of those markets physically through our other features, all within 12 to 16 months before we hit Series B. Our team, I'm so proud of my team, actually is unique. Coming from all over the world, from different places, top-notch places like Carnegie Mellon, Miguel, L'Oreal, and Deloitte, to mention just a few. And here is the team in action. Thank you so much.
Right on clock. Thank you. Right on clock. Thank you, Mohammed. So now it's time. Startups, can you please come with me on stage here? I just want to make sure that the audience will be able to vote. So I want to remember the pitches that we have seen in the right order. And then it's up to you. Going to meter and vote your own thing. So can we make the order, please? So Felix first. Yeah. Autobis, Droby, Julian, yeah, Proton, Mohammed. Okay, great. So what have you seen? Oh, sorry, sorry, take. Can you take this, please?
Who is on it?
So we have seen Velix, yeah, a really interesting digital proposal in digital health. Amazing thing. We have seen a really amazing data play, car data play out of India. Yeah, we have seen Droby, Qatari startup, in. I say diabetes management, but you do much more. I'm aware of this. We have seen Julian from Today in France building really interesting new business models out of France, but something that we can use on in other regions as well. You have seen Proton, the two founders here, yeah? A different way to attract clients that we typically do not serve, yeah? And we have finalized with Mohamed from Aave. Okay, so thank you very much. You made it. Great pictures, yeah? Even though it's some of the automobiles was great. And thank you again, all the people that have made it happen, because we have 135 people, companies, and now we have 6. So amazing. Thank you very much. So now it's time for the judges to vote. Who is your favorite? Who will take the big award with you? Right? Who's the public winner? So we have trained this morning. Yeah, so you have Menti. Maybe if you guys can just move around and everybody has the chance to take the barcode. Yeah, so move a bit. Yeah. So go there, please. And you have one vote, not 2 votes, you have 1 vote. Vote your, who's winner out of this hackathon, okay? The jury need to go out of this room because we have to validate with our own thinking and came up who is the winners and the runners up in the place number 4 and 6, 5 and 6. We have a really interesting panel and I hand over to our MC to the next step. Thank you very much.
Thank you.
Thank you, Lars. I wish you and the other judges a great deliberation moment, and see you in half an hour. In the meantime, let's jump to our next panel. Just a reminder, each one of you have only 1 vote. I hope that you all finish with voting. I welcome now on stage Mr. Henk Hogendorn, Chief Financial Sector Officer at Qatar Financial Center, QFC Authority. Welcome. Thank you. And also I would like to welcome on stage Mr. Marcos Lampinen, co-founder and CEO of Prefina. And also Mr. Maran Viromandi, Managing Director of Dr. On-Call. Mr. Henk, the stage is yours.
Thank you very much. I have 2 gentlemen, very exciting experience and a story to tell next to me. Maybe it's good to tell a bit more than just your names. So maybe can you just in 1 minute do a presentation on yourself? Absolutely. I think you have one here.
All right. Hello, everyone, and thank you so much for bearing with us before the exciting announcements are made. We heard some fantastic pitches from the entrepreneurs earlier. I very much empathize. I've founded 2 companies in the past, and I've invested in a number since, so the entrepreneurial journey is very dear to my heart. So I'm from Silicon Valley. I flew here last night, so if I seem a little off at some point, then I came in at 3 a.m., so you can use that, or I can use that as my excuse. But no, I'm a product engineer by background. I worked with data for a couple of decades now, and I'm very excited about what we have going on over the next couple of decades in how we make data much more useful to us, and especially us individuals. So that's my background.
Hi. Good afternoon, everyone. Maran from Malaysia. Co-founded Dr. On-Call, which is Malaysia's largest health tech as well as healthcare digital platform. Again, like I'm sure everyone has seen today, the entire entrepreneurial journey and the pitches that was presented today was pretty exciting. Kind of cast my mind back to 6 years ago when we started my own journey with Dr. On-Call. And it's been an exciting experience trying to bring together the insurers, the health tech organizations, as well as the various medical providers. And I'm happy to be over here to share some of my personal experiences. Thank you.
Thank you, gentlemen. So we have Silicon Valley here, and we have representing Asia, basically connecting consumers and patients, with the sector. So intellectual, mathematical, and pragmatic as well. So that is an interesting combination. When I listen to these presentations, I think something is going on. Healthcare, we're talking about healthcare, is needed because we all grow older and there are more people in the world. So we have to come up with a solution because there are not enough doctors and nurses and everything. So data will help us. The issue is that there's already a lot of data available, and how can we make that work? And I would like to ask these gentlemen to have a view, and then later we go into more detail. But Marcus, first, what is your view on, are we making efficient use of data?
So data is also a very nuanced word, because what does it actually mean? What are we talking about? So at Perfina, where I serve as the CEO, we work on actually making this data work for you. But it's really important that we understand what we're talking about first. So for example, my GPS coordinates right now where I am, that's data. But alone, what does that mean? If you combine those GPS locations with a purchase that I made at this location, okay, now you know a little bit more. What if you combine my heart rate, my body temperature on top of that? What about my genetic background? Now you start to have a much more complete picture of this data about an individual, myself in this case. What do you do with that? This is really one of the core challenges and opportunities that we see for the future. And at Perfina, what we're doing is we're making this data easily accessible and easily utilizable by the individuals themselves. So if we think about the pitches that we heard about utilizing data, then our vision is that in 10 years, we're going to have 1 million of companies that are built on data. We're not only going to have more companies, but we're also going to have so many more data points. So our fundamental approach to how we handle data has to evolve. From going from this model where we're always sharing all of the data points from one company server to another, then can we come up with a more decentralized way where the individual themselves can bring their own data to applications where they go? One of the things that I was thinking about when listening to the pitches was really the story that Mohammed, you had with Avi. And really kind of this empowerment moment of where you have a problem and then you have somebody that has the capability of actually solving that problem and then coming up with a solution. So if we think about the challenges that we have in healthcare overall, we know we're running out of doctors already, and that's not going to get any easier going forward. We have an incredible amount of data, but what we really need now is the enabling factor of making that data actually utilizable by developers all around the world so that we can get not just one solution, but millions of solutions and really make that data work for individuals themselves. But this is not an easy task. So there's a lot of complexity with working with data, but that's the reality of where we'll need to get to.
Okay, thank you. So making data individual and coming up with solution is important. So doctor on call, I'm sure you have daily these situations where individuals, have a need for help. And is that in the daily practice also working? So what are your views on the good use of data?
Right. So, taking a step back and trying to understand how data comes about in the healthcare profession, we need to acknowledge the fact that data currently, in many cases, reside in a very siloed, very unstructured, and in a manner that is not really accessible and not really usable by the data analysts in the case of healthcare. And I'm sure many of us over here would actually understand that there's not many patients who do want to share their healthcare data, be it from their medical providers to the insurers, in the ideal scenario of risk assessment, of actually of pricing the products and the likes of it, because the data is quite personal. The data actually opens up to the personal health challenges that you face. So in all intents and purposes, we all know that academically, it is a great idea to share data and to be able to use the data to gain specific insights. But from a practical standpoint, it is fairly challenging to actually create those infrastructures to allow for the data to be, shared and to be, in a seamless manner. Our eureka moment came in when we actually went over to China, and I think just want to narrate to you or share a story in how they've I think gone ahead of the curve, and there's a lot of insights that good that we can learn from that. So sitting on the hallways of Ping An Good Doctor, which is one of the largest digital health player, and seeing the masses of data being flowed, right? And millions of transactions that they were performing on the digital healthcare platform side of things. I was flabbergasted. Asked them, like, how did you actually get to this point where you could bring together a coalition of the healthcare providers, the insurers, the pharmacies, the lab guys, and all of them together on a single platform to share this information in a manner that's transparent. And the insights given by the strategy head was really very useful, right, for us to reflect on. So with the fast aging population in a country such as China, with their one-child policy, and with the health epidemic, which is not peculiar to them, as you've seen, the issues of diabetes and hypertension and heart problems is pretty common. It's a pandemic across the world. They came to the conclusion that having the current approach of medical providers just keeping information in their own island of information without sharing that with the payer market and with the general population to start going down the path of preventive healthcare, of specific healthcare measures, was going to be detrimental to the entire country, right, and to the entire society. So that galvanized the larger population and the regulators and the various stakeholders to come together to make sure that they start going down on this path. And once you go down this path, that's when you can get the brilliant minds from Prefina, from the medical side of things, from the underwriters, the insurers, all together to start using and making use of it. So I suppose the start of the journey would be to recognize the fact that we really need to come together on this topic.
So this is the ecosystem, right. the topic that we discussed today. But before, we will, because that is a great example, and we will pick up on it later. But I would like to go on a little bit more about data, because more and more people have to understand that the data, or data, whatever you call it, I'm Dutch, so we would say something else, but it's your data, not somebody else's. So you need to approve that and give it to somebody who can do something with the data. So now a question to the audience. If your DNA tells so much about you, will probably predict whether you will become sick, or what are the situations, etc. And giving that information to the right people will help you to be cured or prevent things. Would you easily share your DNA data with someone? Can I ask Hans, would you share your DNA data? Yeah? It's interesting. I think there's also a cultural differences, because people say, if I get healthier, then why not? But I think this is a crucial one, ethical. I would like to have your views on this personalized data. What can we do with it? What are the dangers, etc.?
So let's add a little bit more color to the question. Let's say that you're ill and you need essentially a cure. Would you share your DNA footprint for a more personalized solution? Probably 100%. I mean, I certainly would. Now, yes, there's some credibility factors, not to everybody. I would certainly qualify who I'm sharing this to. Now let's take another example. Based on your genetic footprint, you're probably going to have a predisposition toward certain type of music. Would you share this with a media company, your DNA data, to get personalized music recommendations? Probably not 100%. So it's also very much a spectrum. If you start thinking about the DNA information overall, where, for example, I mean, we love working with companies like Dr. On Call and brilliant minds that are building different types of individualized value from this data. Genetics is a very powerful thing. So, for example, we work with a number of companies that start with a genetic sequencing, and then based on your risk markers, they essentially put you on different types of testing paths. If you're predisposed for type 2 diabetes, then it makes sense to be tested more often and have more of a feedback loop on type 2 diabetes. If you're not, then it's probably not something that you need to be screened for every 3 months. Now, genetics is also a very complicated area, because if you as an individual give an organization rights to your DNA to develop something, now you have a very complex legal agreement between you and an organization that pertains to your DNA. If they do something based on your DNA, can they patent it? Did they just patent some part of your DNA or a derivative of that? And these are things we do not know the answers to. But what we're advocating at with Perfina is that sharing data is also not binary. So in our model, what we're able to have companies and developers build is individualized applications that essentially can run on very, very sophisticated data sets that individuals have without ever sharing any data. So if you think about the question of personalized music recommendations based on genetics, I'll add even one more dimension. Would you be willing to share that with some company that's making a profit off of music recommendations based on DNA? I wouldn't. But if you had a way of using it yourself, if you have a way of you yourself essentially looking at, hey, what does my genetics say about my music preferences? Would that be cool? Most likely that would be entertaining and interesting. So if you take the sharing element away, what if we could actually utilize our data without ever handing over access to anybody? So this is also where I'm 36 now, and I'm on my third company, and I noticed that doing a 24-hour travel from Silicon Valley here, it kind of weighs on me a little bit more than it did 10 years ago. But I also noticed this aspect that when I think back to when personal computers came and I was hacking away on my computer, then I mean, I wasn't sharing any data or anything anywhere. And I think the interesting aspect is that the internet, where we ended up today, where we're just giving up all of our data to every single application developer, that's a series of choices that we've made along the way. But that's not the choice that we need to make for the future, at least not in all use cases. So sharing data, for example, genetics data, for the sake of, let's say, curing certain type of childhood diseases, absolutely. Fantastic use case. Sharing data with DNA data with every single application developer that asks for it, probably not the way to go. So there's a lot of nuance in terms of the type of applications that we build and also the type of uses that we have. But one of the things that we were talking about earlier is that handling something like DNA data is also not trivial. I mean, DNA data is lots of genetic markers, things like circadian rhythm offset. And that's things that require a lot of not only cleaning, but a lot of domain expertise. And this is where this ecosystem comes in, that I'm just a simple software engineer. I don't know how to interpret and build on genetics data. So I need some guardrails. And this is where essentially we need this ecosystem kind of come in and figure out that, okay, we have these incredible data sets, but what are we going to do with them? And I think one of the things that I've learned from being in Silicon Valley now for a little over 10 years is that the ambition level of our thinking, we need 1,000 times what we're thinking about. Because every single year that we think into the future, then the possibilities of what we can actually do with this type of information, it just increases. And you guys have been working on Dr. On Call for a number of years, so time also goes very quickly. So yes, it goes sometimes very slow, and there's a lot of work to do. But 10 years will go like that. And the question of what will our use of data look like then that's something that's just a series of choices that we make with an ecosystem of partners getting there.
So actually, that's true. So all the way from 1,000 kilometers Silicon Valley to the practice of helping patients. So is this issue of the information and even genetic information, is that already a topic in your practice? Are hospitals asking for it? Are insurance companies asking for it? Because then they can not accept the customer or whatever. You know, what's happening around that space?
Well, I think that's a horror story that everyone imagines, right? Of the fact that you're going to be unfairly penalized for reasons that's beyond your control. So the typical behavioral patterns of smoking and dietary habits and such behaviors are things that you have to live with, and you make your choices, whether that impacts your healthcare or your insurance premiums. But when it comes to DNA topics and things that you started your life with and unfairly penalizes you or adds up to the bill, is really a challenge that weighs in the mind of many people, and they're so fixated over that we don't even take the first step, right? Also, another practical point to address is the complexity that Marcus was talking to. We've run a couple of pilots in which we tried taking DNA data and providing to the medical providers, and we forget that it's a very, very long loop between the data scientists translating that information to something that's actionable and that's really practical to the medical providers, be it the doctors, the pharmacies, and the lab guys, to actually translate that to the patients. And there's another layer over there for the average Joe out in the street to actually interpret that those insights to something that's practical from their perspective. So we ran a little bit of a pilot with Prefina, and to use the information, it was a really, really simple exercise, right? But what we gather is that this exercise helps us go beyond those siloed walls in which we could gather information from the various devices that they have pulled together and come up with a dashboard and come up with clear insights, which is a lot more practical. It is still on the pilot stage. A lot more practical to the persons out there, and through the work that we have with our medical providers, it's something that we can actually really gain a lot of value and provide a lot of value back to the patients. And so a lot of the mundane topics about data cleansing, putting it in a structured manner, in a nomenclature that's easy for us to use and transpose across, we typically forget about it. But the topic of data being the new oil has been something that's been bandied about for the last decade or so, and it's really haven't come to fruition in many parts of the world. And for healthcare and insurance, it's who are typically the most conservative of users of, and you really have a lot of regulatory barriers to overcome. It's not going to be easy for us from this side to actually start using those data.
Yeah, so interesting. Let's go to the ecosystem then, because we have seen AV presenting a self-diagnosis kind of solution, and pretty sure that people like to work with those kind of apps, specifically if they give accurate data. Then they come to a doctor and say, I know already for 80% sure what my problem is. So is the ecosystem, the question to you, is the ecosystem prepared to accept the data? Are doctors and hospitals already using it to the best extent? Or is there still a sort of old-fashioned way, say, we want customers in, pay them, get them out or something? So is the sector or the ecosystem ready to make advantage of the developments?
So again, going back to the experience over in China, right, and Silicon Valley, and seeing how they've made a lot of headway in terms of the use of AI and machine learning to arrive at diagnosis, and many parts of the world really, with the talent and with the brilliant minds, being stuck and unable to actually make the first step. Suppose the most practical of things that we have to acknowledge is the whole idea of incentives and who gets paid to do what. So even as an ecosystem player, when we tried to put together the medical providers, the specialists, and all the folks, they had very, very open discussions with us. Is the AI doctor going to replace me? No, I didn't go to med school for years and come to this point and, and get millions of dollars paid to me only to be replaced by an AI doctor, however good that machine is and whatever the accuracy is. And similarly, if from an insurance perspective, if an agent is going to be replaced by an AI bot that proposes a more customized, personalized insurance product, you're going to get, you're not going to get too many happy people coming for your Christmas party for the creations that you have done, right? So, so it's really important for us to address the whole idea of incentives to make sure that the folks out there be the key stakeholders, right, and the key gatekeepers. Because if the health regulators who are manned by doctors and specialists, if they're not going to give the green light to whatever brilliant solutions that we have from the data, machine learning, and the AI solution, simply because we refuse to acknowledge the idea of money and power and status, we're still going to be having this conversation in the next.
So it will take a few years to get to that level.
True.
Yeah. So, Marcus, same question to you. In preparation of our panel, you talked about this trinity. So I think this is probably something that has to work. Can you explain the trinity model, and how will the ecosystem have to learn to make use of these developments?
I think one thing that's personally been helpful for me to think about markets movement is past kind of trends and how they've actually panned out. I actually remember I started a fintech company called Diffitech in 2011, and this is around the time that actually Anthemis, the fund, was started. And I remember talking to a number of venture funds at the time, 2010, 2011, everybody had great experiences during the financial crash, so not the happiest conversations then. And everybody, all of the major funds, all the major banks were saying that fintech is never going to be consumer first. Like, it's not going to happen, it's not in the cards. And I mean, we know today that the Wises of the world, the Revoluts, and all of those came out of that. So that was clearly wrong. Why? Coming back to the incentives and coming back to essentially the blind spot, it's very hard to see disruptions in your own backyard. That's something that's very, very hard to essentially get that type of clarity in terms of where your own market is going. Now, what typically happens is that the innovation does not necessarily come from those incumbents, not at least in the first wave, but it comes from the ecosystem as a whole. And that's why collaboration and co-creation is so critical, so that we get everybody essentially coordinating and working together. The way that we see this is a trinity of sorts, that we have individuals at the top where essentially all of this data is, I mean, it's your data at the end of the day, it's data about you. And then it's different types of services that you use. That can be going to the physician, that can be using an AI bot diagnostics tool, but it's all the services that you use. And then on the third corner, then it's all the companies and the developers that build those, that interface with you, the individual, as well as the products that they create. I think one of the things that we're very excited about is more individualized AI going forward. Now, we can get into a very technical debate about what is AI and what is ML, and that's something that we can keep outside of this discussion. But in a way, the way that we see this is we should be able to capture value from our own data. And it's almost, if you fast forward long enough, it seems almost impossible to imagine a future where you don't have your own AI. And I'm not talking about one AI, I'm talking about millions of your own AIs that actually run on your own data that end up representing you, yourself, in your interest. Talking about incentive systems, then hospitals and providers are going to have their own interests for sure, but shouldn't you be able to have your own? And sometimes these align, and sometimes they don't. That's okay. That's part of an ecosystem that we need all sorts of different types of applications. But let me also kind of break it down into a very practical thing, because talking about AI it's sometimes vague, you know, vague and ethereal. But we have a developer that took a couple of very simple data points. They took your purchase history, what type of shoes you bought specifically, and then they took the data points from how much weight you spend on both of your feet. So what your phones, they measure how much time you spend on your left foot versus your right foot. What is the cadence? What is your tilt? What is the roll of your foot? All these different things. We already have the data. So they took those together, and then they created a shoe break-in app, which is an AI knee doctor, effectively. What it does is it looks at, okay, Marcus, you bought new running shoes, and 2 weeks from now you're still walking funny. That these shoes aren't for you. You should return them and buy other shoes, or you should see an actual knee doctor. That's an example of an individual AI. Very focused on very, very specific behavior. Watches for your baseline. What are your feet supposed to be doing? What are they actually doing with these shoes? And then after that, they suggest some type of action. No data sharing, nothing. It's just you looking at your own data and kind of wondering that I knew that these shoes felt funny somehow. But if you start thinking about that, how many problems like that do we have in our everyday life, where essentially some type of an algorithm that actually knew us as well as we do, that was actually owned by us and representing us, could help make our lives a little bit better? Then it's not one, it's millions of different types of applications, opportunities that we have. And for me, I think it's unrealistic that these wouldn't emerge. The question is rather that how can we have the right type of framework where we can actually ensure that the incentives are aligned with what we want as individuals? Because that same shoe buying break-in bot, it wouldn't be nearly as valuable to me if it was trying to sell me Adidas shoes, for example. But if it's looking after my own knees, then I'm okay with that.
Okay. So we're heading to the last question. And listening to this, if you have to choose between millions of apps, where to choose. It is sensitive data. It can help you. It can help countries, regions, populations. Should the regulators take more control? Do you expect different behavior from the insurance companies other than making money and etc.? So I think each one of you comments on that question, and I think we have 2 minutes each. Is it? Max.
Well, yeah, I'll do a quick sharing. So for my part of the world, we've gone head on head with the regulators through the court systems, as well as through the sandbox and various forums. So effectively, they've taken us to court, we've taken them to court, we then settle down in a sandbox, and now we are a part of the official healthcare experience. And that really didn't serve any purpose, really distracted a lot of people, and kept the founders as well as the team distracted. And I would like to wish if Qatar, as well as this part of the world, is starting on this journey, for them to try to avoid the pitfalls of actually having a very unsophisticated and immature conversation on data protection and personal data privacy, all in an effort to trump over the health tech ecosystem. So the candid answer would be that the role of the regulator would be to understand all the nuances and the specific challenges, but to have an overarching understanding of what the Chinese example, using that example, right, that there's a bigger goal that we would like to solve, and it can only solve by having the largest of the insurers and the healthcare players coming together with the brilliant minds from the tech world and the digital world. And there's a fair bit of learning that we can do from other geographies in terms of how we control that, how do we create sandbox to allow for innovation, but in a way that's going to be really positive.
Thank you very much.
And I think it's definitely helpful to start from the end goal. Like, where do we want to get to? And this is a life and death question. We can save millions of lives and increase the quality of life by utilizing this data in a better way. Safeguards, privacy concerns, and all of those we absolutely need to nail right, but that's the end goal. We're talking about life and death. There's a very interesting situation in California right now where the regulators around data and privacy, they're very passive, and they're watching what happens, and they're letting the European Union do their work for them, to be completely honest. And they kind of like the situation too, because they don't have to make the calls. The EU is pushing toward individualized data economies and individual value and all of this. The reality is that we have to create the ecosystem of practical value that benefits the end user. That's where we have to start. The regulatory and all of these other things, they can be signals of where the market is going, what the market wants to support, but at the end of the day, value comes first, and then after that we have to look at having all the safeguards, and that's a conversation between all the stakeholders, and that's definitely where we should leverage learnings from the past.
Thank you very much, gentlemen. It's teamwork between basically the people who design the future and the incumbent players, the insurance companies and the regulators, and probably the regulators need to catch up a bit quicker, and we need people like QIC to take the lead and to make sure that the technology can actually work with their customers as well. I would like to thank you all. Big applause for these gentlemen. And then we move on to Timo or Lars.
Thank you all for this great panel discussion. And Mr. Lars, I invite you again to the stage for the Hackathon Award ceremony, which we all have been waiting for.
Thank you very much. So I know you all are tired, you need a break, I need a break as well. But we deserve, and the staff deserve to know who actually made it. So thank you very much for all your time. We have seen this before, right? We have made a lot of journey, and I'm really happy that we have seen the pitches, and I have seen the first 3-minute pitches of all of them. It's just an amazing work together, what they have achieved. So what we actually asked you just before this interesting panel discussion, you would think about an AI to review your needs. This is just amazing. I love what Marcus there actually put in top. We ask you all to vote. So the first award that is going out will be an award going to the public vote winner. So now ask our group CEO, Zanem, please on stage, yeah? And QFC representative, Hank. So let's see, the team was trying to put some music on. Let's see if we get the music on as well. Didn't work, so next time we will have the music. Okay, So, the winner is, wow, Rimat, but far away. Mohammed, how did you do this? Did you program something about this, or how did you manage 400 voters? Unbelievable. Okay, where's Mohammed? Where are you? Please come to the stage and get your award. Congratulations, very done. Okay, thank you very much. Yeah, thank you very much. Can somebody take this? Yeah. Okay, thanks for Sarah and Henk to help us here with the award. This was really a big difference. I don't know how you managed this. Yeah, I have to say, we have to see if you cracked the code or something. Yeah, it's just a level of 100 between the votes. Yeah, so let's see if you have to improve ourselves. So yeah, it's back at me. So the next vote, the next award actually goes to a special company. We have seen this company right now on the panel. This is the growth winner. People that started with us in the beginning will know that we actually didn't have a growth track. So why did we invent a growth track? Because we have seen this company just in a different league compared to all of the 6 companies that you have seen. So we said it's unfair to them and unfair to the rest of them to compare. We cannot compare an apple and a pear, but actually it's not possible. So we said, okay, we invited this company on stage and we invited them to present to us and talk. And it's a pleasure for me to hand it over. So the growth winner is Dr. and Cole. Oh, please join me. Please join me. You both co-founders, please come to me. You have been the discovery phase, and you came all from Malaysia to us, so it was a really high pressure to look. There's something in there. Surprise! This is the award. So, okay. Are we here? Thank you very much. Great. Thank you very much. All the best. All the best. It's amazing what you have built in Malaysia. Okay. Thank you. So now it's going. We have to speed up here. So now I would like to invite our jury members and partners in this jury, Plug and Play, Antemis, Markus, yeah, Prifina. Please come to me here on this. Yeah. So. Yeah. No, I don't say it. Yeah. Okay. Okay. I take this. We have to work on this. It's our first event, so we will be better. So there are 3 companies that didn't make it to the top 3. We will not give any evaluation to any of them because the pitches have been great. Can you agree on this? Yeah. So we are really happy that they're here. So let's get one of those companies on stage. Trobi from Qatar. Thank you very much. So, Louisa, please. Right. Fantastic. Yeah. Congratulations. Okay. Thank you. All the best. We will work together. Okay. The second company, and yeah, Ahmed, you will do this. Yeah. Thank you very much. Let's read it together. It's Autovis. Congratulations. All the best. All the best. Thank you. Oh, stay here. Stay here. Markus. Yeah, AI and knees for knees and shoulders. Amazing. The last one is today. Great work. Thank you for your panel. All the best. All the best. Okay. Thank you. Thank you. Thank you, judges. Yeah, can you stay here? Yeah. Okay, I believe it's amazing, and really, if you are one of the top 6, you are top. Really, it just doesn't mean that you have no quality. It's amazing what you have done. So now we're coming to the winner. So can I ask you, Mr. Salim, to join us again on stage here? It's the big winner of our online first MENA InsurTech hackathon that we will award. Okay, yes. So the winner is, I have to double check, again, Abe Rimatz. Mohammed. Okay, thank you very much. Yeah, I think it was a journey. So now it's clear who are the two runner-ups, and I don't say two or three, the two runner-ups we have. Please, Rich from Deloitte and Basil from Google, please help me to welcome them on stage. And thank you as our partners to make this happen. This was an amazing event. Thank you very much. Let's do the next one together. Okay, so the two runner-ups are the ones that we didn't mention until now. It's Proton and Velix. You did improve very well. Well done. Well done. Let's stand together. Good. Okay. Thank you very much. So what we want to do now, please, you would like, no, stay here, please. We want to have all the startups on stage, all the mentors on stage, all the award givers on stage. We want this final fantastic photo that will be the end of our first hackathon and hopefully the beginning of the next journey. So please come with me on stage here. Yeah, you all deserve to be here and have the final photo. Thank you very much for your work. Come in a middle. So now we would need a bit of help here to structure ourselves, yeah? So somebody can arrange us in a way that is nice on the photos. Please come closer, yeah? Is this good, photo-wise? You tell us how we have to do it. Be closer. Good. Let's do the shorter shooting. Thank you, thank you, thank you. Okay, so now, yes, yes, I got a paper with 3 names on him. Yes. I remember it was Uma. Is Uma in the room here with us? Hey, you're here. Please come here. It's your moment. So you have been the most agile in getting your phone out and get Mentimeter in. Yes. And then, yeah, Uma. This is for you! A surprise, an award! Yeah, you're very happy. Oh, you want to follow? Julien. Julien. You have been really fast, eh? She left. And we chose the second one. She's coming, she's coming. She's coming. So if you can make sure that she's coming, we will get her back. Okay, so that's it for the morning. We now have, I know you deserve it, a longer break. Yes. We'll go out to lunch, I believe, lunch is straight away, and on the left-hand side, yeah, we have a nice buffet there, and then we welcome you in 1:30, where we really start into more digital discussions on insurance and what we can do in mobility, health, travel insurance, everything. It will be fun. See you there. Thank you very much for the morning.
Yes, ladies and gentlemen, if you can come and have a seat because we are going to start soon. Thank you very much. And you can come in front if you'd like. You can just jump into the front seats. So, how was the break? Was it good? So, coming back to our program. So, I have now the pleasure to introduce Mr. Mashiq Tomazevic from Deloitte, who will be moderating the mobility panel. Thank you very much.
Is it on? Can you hear me? Gentlemen, please. Maybe we will take the same order as the pictures. Okay, good afternoon, ladies and gentlemen. I hope you are enjoying the session and enjoy the lunch. So we are having our first panel of this afternoon focused on mobility. We will be discussing around motor insurance in the region. However, obviously, in order to discuss the motor insurance in the region, we need also to provide some international context, and we have plenty of sort of international guests with us to provide that context to us. My name is Maciek Tomaszewicz. I'm a director within our financial services practice at Deloitte. I'm focused on insurance and I'm passionate about insurance. And one of the everyday challenges that I have is, how to bring innovation to an industry which is traditionally very conservative. I also have with me 4 distinguished guests. Kamal is the founder of AutoWiz and one of the contestants for the hackathon. We have Ala, who works for CAFU. Also we have Reto, who is a mobility insurance expert, who I had the pleasure to work with before. And we have Niall, who works for Risk, which is a UK InsurTech company. Before we jump into the very interesting topics that we have to discuss, I will just maybe give 90 seconds for each of you to sort of tell us who you are and what you do, please.
So I guess most of you have seen my pitch, so very quick reintroduction. I'm Kamal Agarwal, co-founder and CEO of AutoWiz, coming from India. We are a vehicle data analytics provider. With insurance companies, we work with providing connected auto insurance solutions like UBI, crash detection, and digital engagement.
Ala, please.
So before I introduce myself, I wanted to give a big thank you for those who have organized the event. It's an incredible opportunity for us to attend, and I think these platforms are critical for the future of this industry in particular. So a big thank you for hosting it. I know it's a lot of work behind it, and I hope this does come to successful fruition to everybody. My name is Ala Al-Houni. I'm part of CAFU. CAFU was born as an on-demand fuel delivery service where the gas station comes to you, fills up your car, and just as simple as clicking a button on your app. From there, we've grown significantly. We're the largest on-demand fuel delivery app in the world. We've completed over, I think, 7.5 million transactions to date. We come to vehicles almost 20,000 times a day, every single day, and we fill up fuel We wash vehicles, we change tires, we change batteries, we do minor services, inspection, and a range of other services, all related to vehicles. We are what I think a lot of these gentlemen consider an ecosystem player, and it's a pleasure to be here. The reason I've been invited is I think we're very, very close to launching an insurance product, and hopefully by the end of next month there should be an announcement of an insurance product being launched.
Thank you, Reto.
Yeah, so first from my side, thanks for having me. I think it's a very interesting event and a good kickoff for the region. I'm the co-founder of Cubic, which provides ADAS feature and safety feature insights for the car industry. But I'm also acting as an advisor for startups and corporates all over the planet. Right now working on risk maps and geoallocation for accidents. But what might be more interesting for you and relevant, I'm a former head of motor innovation, usage-based insurance, OEM strategy at Swiss Re and Zurich Insurance.
Niall.
Hello, my name's Niall Barton. I'm the founder and chairman of a business called Risk, based in London. A couple of firsts is that there probably aren't many other 45-year-old experienced people, 45 years in the insurance business, in the audience, who've also set up an InsurTech. And I used to be an underwriter at Lloyd's of London. So you couldn't think of two things more extreme, an underwriter at Lloyd's versus an InsurTech. My Risk is a platform that's designed for the global brands, the automotive brands, the OEMs, and distributors of car insurance. So a little bit different from some of the others today. We started in 2016. We worked with BMW and with some of the largest insurers, Allianz. And also a first here probably is that one of our first investors in Risk in our business was the QIC. So it's very nice to be back in Doha.
Thank you very much for the introductions. So let's start with the questions which I have for you, and maybe I would start from the left, Niall and Reto. We have so much technology today, and obviously this technology helps us in the insurance business as well. However, we depend so much on traditional models, traditional ways to price insurance, either it's in age or the car characteristics or the value of the car, so many other things. But is this still accurate? Can we really depend on these sort of old models? Where is the industry, where is the motor insurance industry going from now in the next few years?
No, I mean, I'd say, we were talking about this earlier, there's an inherent, sort of, in a sense, tension between the speed of the insurers and or lack of speed in many cases, and yet the enormous amount of data that's coming out of the cars. And so the OEMs want to be more involved in this whole process. They've seen that they make an enormous amount of money out of finance, not just selling the cars. And they see the insurance area as a whole new area that they can capitalize on, and also they need it to go with them to roll out some of the new business models, car subscriptions, right through to autonomous ADAS. So insurers, the OEMs, the car manufacturers are taking a lot more interest in this space, and they feel that they can provide probably a lot of the data for better pricing. So there's a sort of interesting dynamic tension, as I say, between, I think, the car industry and the insurance industry.
Thank you. And Reto?
Yes, I think I can confirm that being a head underwriter and responsible for motor business myself, it's pretty clear that today's traditional underwriting rationals are out of range. So it's statistics, it's history, but it does not fit anymore in the dynamic world, in telematic world. And there's nothing to find out anymore, even using AI. So it's clear that they need new data sources, like what's in the car, but also like what's the trip history of customers. I mean, everything could be interesting to add on. And I think the key message is like AI needs to be in the core, whatever insurance industry is doing in the motor sector in the future, and be curious and consume more data.
Thank you. So we touched on sort of the auto industry, data. There is a sense of sort of, a need for an ecosystem of players within the insurance value chain. And the question that I would make to you, Ala, and Kamal, because obviously you are part of a wider ecosystem, is, how do insurers benefit from this ecosystem? And on the other hand, how do you benefit from partnering with insurance in the ecosystem as well? So maybe Ala.
So we start everything we do centered around our consumer, our client, the user, and we believe that everything is based on them and what their needs and requirements are. What we've learned is that we are probably the most common touch point with a customer. We come to them, I say this all the time, 2-3 times a week, 4 or 5 times a month. We're a very, very common touch point with them. And unlike an insurance company or an OEM or so on, we have an open communication channel with them continuously. They fill up from us, we wash their cars, and this helps us establish a very strong relationship. They trust us significantly, and I think from an insurance company's perspective, there's several things of value that we could give them. We understand the client. We have a very, very large user base. Obviously, from a lead generation perspective, they see the value in us. But in addition to that, we know a lot more about that vehicle, about the driver, about their use, than they usually will have access to. And finally, the customers are a lot more comfortable sharing that information with us. So right now, we have several use cases of connectivity or connected cars where the customers are giving us access to the vehicle. We know they let us read their odometer, they let us read their fuel level sensors, they let us unlock the vehicle to fill up the car, and this is actually happening today. And it's because the customer trusts us. From there, we can share some level of information that the customers is comfortable enough with us sharing with them to be able to help them better determine the value of that asset, the value of that driver, the utilization of it, and so on. Here's where I feel a bit of value can exist from us to them. And from them to us, I think it's fairly clear. Insurance industry is one of the largest. We initially saw insurance offerings, so as I think has been mentioned, UBI offerings or auto insurance offerings. But even beyond that, there's a lot of very creative solutions that insurance companies can create to support the development of the industry in itself. We know that the mobility industry is changing. We know that these assets only sit or are only utilized in ownership about 4 to 6% of the time. For 94 to 96% of the time, that asset isn't really being used. So there is this entire shift across the industry of how can we reimagine it and how can we reuse it and so on. And I think nobody better than insurance companies to help understand and underwrite how that can look like in the future.
Thank you. Kamal?
So just to add to what Ala said, I think just from an insurer's perspective, just having more touch points, as you mentioned, with the customer is imperative. In the markets like we are in, we see so much competitive intensity, 20 insurers going after one customer. How do you differentiate? How do you create an engagement with the customer? So that's where I think insurance has to use these solutions, of course, from risk perspective, but also just from differentiating and anchoring the whole ecosystem. Now, this can be done by a strong ecosystem player like you, or in some markets, insurers themselves should take the lead and become that anchor. Because the way we see it is probably, as a car owner, of course, I am engaging with my car maker, I'm engaging with my insurers. Those are two constants I deal with. And of course, I deal with so many ecosystem players. So it's like for insurers, it's like grabbing that opportunity to use these to just create more touch points and then anchor the relationships. So that's what I feel is the value for the insurer. And of course, for somebody like us who work closely with insurers, we can help them move faster on some of these initiatives, having those use cases which can be utilized by the ecosystem directly, because not everything can be done internally by the insurer. So that's the play for us.
Which I understand at this moment, But if I look at in the near future, with all the amount of data that you guys collect and can sort of do some pricing algorithms based on that, I mean, how are the sort of incumbents will play in this in the near future? Is there a risk that potentially you can replace them completely based on the information that you have? Maybe Niall, you can start with
you wanted to put your hand up. You've got an answer too.
Go ahead. Go
okay,
ahead.
I'll go first. I mean, this is a personal view. I think there will be continued, in a sense, deconstruction of insurers. Insurers, in some of the ones we deal with, very good at pricing, very good at claims, not so good at building technology. And so them having to come to terms with the fact that actually it may be better to deal with an external firm to do that bit. So they're good at asset allocation and, as I say, pricing, risk price. So it's I think a changing landscape of really, in a sense, what an insurer is, and using outside partners, which is, I mean, to my mind, in the last 3 or 4 years, I mean, in the last 2 years, some extraordinary changes in terms of, certainly in the UK, people buying cars online, having it delivered online. That would never have happened 2 years ago. In our case, subscription policies. They like subscription policies. We were told that they wouldn't like it. So if you buy your Netflix, your Amazon on subscription, why do you need to change your insurer every year? You don't change your bank every year. So a subscription policy that's very easy to use. And then we took on a portfolio of risks where quite a few of them were in their 70s, 70 years old. Well, they won't want to go and self-serve. They absolutely do. They enjoy it. They can do it 24/7, 365 days of the year, add their son onto their policy, easy, instead of having to ring somebody up. So some of the changes actually have been really refreshingly available, but inside most of the traditional insurance companies, that's very difficult to do. So, from my mind, it's partnering with businesses who can deliver that and let the insurers do the things that they're best at.
Great. Ala, you wanted to say something.
No, go on.
Please.
What I want to point out is, as an insurer, I would not be concerned about the startups. As a startup, I wouldn't overestimate the power in the game. I think if you want to really free up the full power of innovation, digitalization, it means somebody needs to orchestrate the ecosystem. And let's talk about protection as a service, as an ecosystem, must be driven by insurance. But if you really want to be successful, then the two companies on the left of me, they are an added value service and even can have risk impact service, because you see scratches around the car, for example, while car data, telematic is the base to have dynamic proposition. But the insurers need to understand they also need to be dynamic and integrated to free up the full potentials. So I think protection as a service needs to be orchestrated, and all these startups are a really important piece, but only if they all come together, it will be powerful and successful. Otherwise, they all work in silos and not bring the expectation of the consumer to the market. So it only works together as partners, and otherwise you're all going to fail in silos. That's my main message towards.
Fair to say, I want to work with both of these two firms on the left, and I mean that. So that's what it's all about.
Yeah, absolutely. I think this was the general feeling that we had when we first met each other, each one representing a different part of the industry. And the first thing we all said to each other is, oh, we should touch base and we should work together. And I think this is just a reflection of the way that it should be. We don't believe we are an insurance company, an insurance underwriter in any way or form, but we believe that in the ecosystem we exist and they exist, and we have to kind of work together, co-create, co-develop. We're a tech company. I'm probably the oldest person in my company, and I feel like I'm very young, right? And I'm by far probably one of the oldest ones.
Next to me.
Yeah, and the reality is most of the people in our organization just are innovators or disruptors or young people that are looking at how can we change this and disrupt this completely. And not only are they employees in our company, they're actually users of our products or services. They're the consumers that we're offering our products and services to. So when they start initiating new ideas, they're not initiating it kind of as somebody who's in the company that thinks this should be done. They actually are initiating it as consumers of our products and services that are saying, oh, I wish we could also do this, because if this existed, it would make my life easier. And that's the mindset that we have. We try to partner with the best companies in the world that we can, with those that do have that mindset as well. A lot of what we try to develop is centered around the user, the customer, the consumer, and we have never tried to approach this from day one as something that we could do ourselves. We will never know how to create an insurance product better than the insurance companies. We're never going to know how to change oil or lubricants better than the best lubricant companies in the world, and that's why we partner with them to provide the best service possible.
Excellent, thank you. The power of the ecosystems and the partnerships, and which is basically, this event is all about that as well. You said disruption, you said changes. Obviously, we came through the pandemic to live on a more sort of digitalized world. And one of the things that emerged is again some new business models around insurance, and we have the usage-based insurance as one model in the industry. How do you see, do you really see a shift to the UBI model currently? Because it's something that exists for dozens of years. However, we are starting to hear more and more about it, especially in this region recently. So the question is, I don't know, Reto, how do you see the shift to UBI happening?
If we mainly focus on mileage-based insurance, usage, time-based insurance, then the expectation of the consumer is clear. COVID showed it, lockdowns. Why should I pay motor insurance if I don't use the car? Then there's clearly a trend towards digital services. I think people are willing to share data, also because they had to share COVID results, right? I think the community, the consumers are ready. The insurance industry is not, because it's not as easy just to put up a telematic proposition that is working in a silo. I think true UBI is only feasible if you're integrated. Means you have monthly changing mileage prices based on your behaving, means I can buy on-demand services when I need them. It's fully digital, I can quit and I can pay on a monthly base. That means telematic solution provider needs to be fully integrated with your backend systems. So, digital FNOL is maybe not the end, right? People want to know about the status of the claims and so on. So the answer is fully integrated, and yes, the market is ready for UBI, especially if you see new mobility trends where all the business models are usage, time, and mileage based. So it's a clear trend. Everybody charges that way, so insurance will be forced to do the same. So my recommendation is better start today than tomorrow.
Niall, do you have the same view? Or?
Yeah, yes. It's in the UK. Again, I'm a country of one example. It definitely has become more of a feature, but probably not as much as people thought it would. And in our case, we've got a UBI proposition. It's still not frictionless enough. It's still, the drop-off rate is quite quick early on. And so, there's work still to do on that. So I think as a proposition, it will definitely be there. As I think Ruth says, it's got to be integrated more. So, the dreaded word embedded is the theme, I think, that the customers want. They don't want to have to switch anything on and off. They want it to be absolutely part of their living day. And if so, yes, I think it will be.
But isn't one of the reasons, maybe because it's still a yearly premium, and just collecting data and interacting is dynamic, but the rest is static as it is today, and that does not fit with the expectation of the consumers. Yeah.
And Kamal, you obviously you showed our solution around data and UBI today. What is the market in India? Is there a sort of great customer demand for the services?
Yeah, actually, India is unique in the sense I was talking about competitive intensity. We are underinsured, but on the motor side, there is a mandate to have insurance. And customers, we've been talking to end customers, and customers are ready for such kind of product. Even the leading insurers as well as the laggard insurers are ready for that, because the leading ones want to differentiate, the laggards want to have new product to capture market share. And in our country, it's the regulator was a bit behind, but certainly we see through insurance sandbox, regulatory sandbox, and opening up this sector, we are quite bullish. In the next 2 to 3 years, we'll see mushrooming of products. Now, how much is the adoption going to be, whether it's going to be 10%, 15%, or so on, remains to be seen. But we definitely think in like commercial lines, in especially personal lines also, where people are driving less, they're definitely amenable to this. And so we see in India as well as some of the other emerging markets, experiments happening with different technologies, and as you mentioned, that more integrated play, not just measuring miles, but having the full flow in terms of payments, in terms of servicing, filing claims, everything moving digital.
Okay, yeah, I do sense a lot of buzz happening around UBI. However, we still have the core challenges, and one of them is the customers are not willing to provide us information. They are sort of careful about the privacy and how the confidentiality issue around the information itself. And obviously, you cannot build a UBI model or use a UBI model if you don't get the information from the customer. On the other hand, the insurers, not all, but many of them, they think, well, UBI, what does this mean for me? That it really means that I will lower my premiums. That's the first reaction. I'm going to lower my premiums, which will have an impact, direct impact on my top and my bottom lines. Reto, any thoughts about, what are, based on these challenges, what is really the benefit for moving forward with UBI from a customer and an insurance perspective?
I think that the problem today is, again, it's monitoring the driver. It's the driver shares data with you, but where's the benefit, right? You get a score, hoping that you get maybe a lower premium, but you get it at the end of the year. I think once you really becomes dynamic, right, and integrated, then you give freedom to the customer to influence his premium. If he does not pay insurance when he's using public transportation, this gives him freedom. When his good speeding behaving means he pays less per mile on a monthly base, that gives him freedom to influence his premium. If I use digital interaction and data sources to provide added value services as Kafu, it makes my product more attractive. I think the problem is today's UBI proposition are not focused on the customer needs. It's about collecting data and help insurers. And I think that needs to be turned around dramatically. It's all about the customer. He needs to benefit, he needs to get freedom, he needs to have on-demand services, and it will pay out for everybody else in the ecosystem. I think that's as simple as that. It sounds more complex, but it's all about customer centricity. Do it for the good of the customer, and then they're going to buy it.
Kamal, you want to comment on this as well?
Yeah, just one thing. I mean, to your question, some of the insurers we talk to, they are okay with having reduced premiums, but
not in this region.
but building a book of safer customers. So it's what type of segment you are after. So naturally, those who will participate in the program, self-selection and those sort of things will kick in. So some of the insurers, again, we're talking about a market where we have 20 players. Some of the insurers are fine with having reduced size but with lower losses, and that's the segment they're going after.
Which is the way to go. I do agree.
Can I say something a little bit contentious, if I may? I know that we're in an InsurTech event, and that part of the reason we're discussing this is how does it affect the insurance companies. But to be honest, a driver, somebody who owns that vehicle, is operating that vehicle, insurance is not the most important thing in their mind at that point in time, right? When you buy a vehicle and you drive it, is insurance everything that's going through your mind? And the truth is, no, it's not. It's one of those things that we hate. We hate to pay it. We don't like it. It's not a good user experience in any way or form. And it's just a must that we have to do it. I think that the way we approach it is very differently. We do collect a lot of data and share that data with our clients and so on, but that's because a vehicle is usually the second largest investment that most people make. So they have their homes, and usually a vehicle is probably the second most important thing that an individual invests in. And in there is where that data helps them better safeguard that investment that they're making. Not for insurance, not for this, for the investment that they're making. So we can speak to them about fuel efficiency because they spend so much. If you leave your house 5 minutes sooner, you're probably going to spend a little bit less on fuel. The value of your vehicle is going to be worth X and so on. And that's really where our conversation on the data with the client exists. We try to create a full profile and a ledger of their vehicle so they understand the value and everything that they do, how it impacts it. Now then, one of the applications of this data can be for insurance, but I don't think it should be centered on the acquisition of this data for insurance. The acquisition of the data is for the user. And if one of the applications is insurance, absolutely. If another application is for something completely different, then absolutely, as long as they're comfortable with that being shared. Is that fair?
Absolutely, absolutely. Good, thank you. So I would like to move to another topic, which is around this shared mobility. And let me just tell you a little story before I introduce the next question. So when I was 3 years old, my parents lost me. Not for long, but they lost me for some time. And we were spending a vacation on a place which was beach or sea on one side and a big forest on the other side. So they were panicking. After a few hours, they found me inside the car, pretending that I was driving. And basically this is to say that I have a passion for cars and for the auto industry since I was little. I always wanted to have a car, I have cars, and I want to have better cars. On the other hand, my son, who is almost 15, he doesn't care absolutely, the car is a commodity for him. It's just something that takes him from point A to point B. Doesn't care if it's a Ferrari, Porsche, or Volkswagen, completely independent. And I sense that obviously his friends also sort of think the same way, and the majority of the younger generation goes in that direction. Which takes me to the question of, the future looks to be very much about shared mobility. So I want to go from point A to point B, then I will get the best service that does that journey, right? How are you thinking about your business models, or business models that you've seen, looking forward into that sort of sense of shared mobility, in terms of obviously the impact that has on insurance, because the more shared mobility we will have in the future, the less need for insuring your car as a sort of one-time insurance. So how are you sort of perceiving this change and potentially shaping your business models towards that?
Well, shall I go? I mean, bear in mind, in my case, it's the car manufacturers who are our client. So we're looking at what's changing in their business models. So yes, subscriptions. So we have to provide subscription insurance, providing fleets, providing multi-driver capability. So in a sense, insurance has to go with them in every step of the way. Insurance is a sort of as a lubricant of their business. It's a lubricant of the global economy. So we just have to be thinking, we have to be knowing as risk where their business is going and making sure insurance is never going to be a blocker for them being able to deliver what they want to their customers.
Reto?
Yeah, I think the customer base is changing. It goes definitely towards B2B2C. So I would definitely recommend to get ready for B2B business, but serve the consumer. I think in on-demand mobility, let's say it that way, there is a car that needs to be insured. This car will be much more often used than today because it's not 90% parked. The driver is changing, but we also need to expect that the driver has like his personal expectation in insurance. Means you need to customize, you need to offer the renter that he customizes insurance. And this is on-demand insurance, finally, served by a B2B partner in a digital proposition. So I think everything that today UBI requires is the first step into future mobility, because it's the same buzzwords, the same functionalities, but you start getting ready for the future. And this future is coming quite fast. Right? And finally, we end up with robotaxis, where most likely we're going to face product liability instead of motor insurance. But that's another topic, right?
Ala, would you like to comment?
Sure. I guess there's three things that were discussed right now. One is MaaS, which is mobility as a service. These are the car sharing platforms, so on, your zip cars, your car2goes, these platforms where instead of owning a vehicle, I could use it just for the usage that I want. These are very, very good customers for us. We have full-fledged integration with them, and we provide a lot of services to these companies as ecosystem players. We have connectivity. Whenever their fuel level sensors hit a specific percentage or enough transactions, automatically their system and our system communicate, they place an order, and we come fulfill the requirements. Whether that's fueling or charging that vehicle, whether that's washing and sanitizing that vehicle, so on and so forth. So we understand these players very well. I think with them, one of the impacts is it's not just a usage-based insurance on the utilization of that asset. It's a user-based insurance that's also based on the utilization of that specific user, because he might use this asset today, that asset tomorrow, that asset after tomorrow, and hence you're not just looking at UBI as usage, but user-based insurance as well. With the other two, I think the gentleman touched on them, and it does make a lot of sense as well. So if we ever get to a point where it's autonomous, then is it really now insurance for the individual, or is it really for that asset in itself and the system that's managing that asset in itself, and how do we ensure that behind it?
Great. Kamal, would you like to add to this?
Well, just from a tech perspective, I think what we are looking at when we look at shared mobility, or what we look at multimodal scenario, where, as Yala mentioned, a user could use a car one day, a shared asset, maybe a gig worker doing a two-wheeler. So as a technology, you have to be seamless. If you are, for example, measuring driving behavior through a smartphone telematics app, you should be able to automatically figure it out that right now I'm on a own vehicle in a car, or I'm on a bike, and I'm able to, understand, or okay, I'm now in a public vehicle, and being able to sift out that data so that when I'm risk scoring a particular user, I'm doing that accurately based upon the mode in which the user is.
Great, which leads me to a question, because all of that you just mentioned, you need something which is sort of dynamic pricing, right? You need to price based on the vehicles that you are using and the way that you are using. And there are some challenges regarding regulation around that, not only around dynamic pricing, but I'm sure that Ala from, CAFU had a lot of regulatory challenges to deliver fuel to houses around the UAE. Potentially, I don't know how you managed to go into garages, in buildings, etc. We also have, regulation around data, confidentiality, etc. Well, my question is, how do you see the regulator reacting to all this innovation that you guys are driving, and what are the discussions that you are having with the regulators, and how fast are they adapting to your new ideas? And I will start with Ala because he knows the local context.
So I think you've put it very mildly. We started delivering fuel in a region where oil and gas is the most important industry, right? And we are a very small player coming up against these big, well-established oligopolistic or monopolistic kind of industry and came to try to deliver. It was a very, very difficult, daunting task ahead of us. And putting it lightly, yes, we did have a lot of difficulties initially. And I think we're never going to stop facing issues on this. Now, I think a regulator's job is important. They're there to protect the citizens, they're protecting the consumers, they're protecting on behalf of the government. So their job is very important. I think the one thing they need to kind of work with us is understanding that it's not just regulating the digital, it's regulating during the digital era. Everything is changing very, very, very fast-paced, and they have to understand why these changes are happening, and not just to try to regulate what's happening, but to understand how do we regulate during this era where these changes are occurring. We're faced it initially with obviously the regulators of oil and gas, of petroleum and so on, but because we work in so many different industries, we deal with a lot of different regulators. So on the insurance side, we have to deal with the insurance regulators. On the fuel delivery side, we have to deal with that, with civil defense, with every single regulator that you could imagine. And the main thing, the approach that we try to have is we try to explain the technology with them, help them develop. The truth is we're innovators. A lot of what we've done has never been done before anyways, so it's tough to regulate something that never existed, and we try to build it from scratch. One approach that we do is we try to meet every single regulator's requirement. So when we first launched fuel delivery, we did not just meet the UAE's requirements, we met USDR, NFPA, US, Europe, UK, every single regulatory regime's requirement all over the world. So that then anywhere we go in the world, we're like, here you go, we already meet here, there, and that's the approach we've been having.
Good, thank you. Niall, on a sort of international UK context, how do you deal with the regulators?
Okay, so I'm going to confound you because I'm going to add a note of optimism. Two cases. One, in the UK, when we said we wanted to do a subscription policy, the most insurers gasped and said, we can't do that. We worked with the regulators, we got it done, and it's now a very popular feature on the market. So, my hats off to the UK regulators for embracing it. And the second one is, interestingly, and there's an interesting parallel possibly for Qatar, is that the UK have set up a corridor with the US. It's actually with one state, with Connecticut. The US insurance system, for anybody who doesn't know it, you have to file your rates every year, or as often as you want. I mean, to my mind, the American insurance system in some cases is more Soviet than Russian. There isn't the flexibility that you would have everywhere else. And so the US insurance regulators are realizing that they've, in order to satisfy customers, and that's a key test for them, they need to be more innovative. So they've set up this corridor so that there are now 110 or so InsurTechs based in London, and 10 have already applied, including Risk, to use Connecticut as its base for insurance innovation. So we've got, and the insurance commissioner himself, had a meeting with me, and I said, look, I want to bring this into the US. It's customer friendly. It hasn't been done before. Will you let me do it? Are you allowed to by statute? He said, yes, I can do a waiver. I can allow you to do it for a controlled experiment. So that, for me, is a regulator who's being proactive, and Connecticut is seen as the I was there this week, and they describe themselves as the insurance capital of the world. Based on today, I think Doha should be seen as the insurance capital of the world. That's your ambition. And actually, I'd go along with that. This is an extraordinarily well-organized and really interesting event. I think there's an amazing energy from it. Anyway, so going back to the question, I think the regulators, engaging with the regulators, respecting them, they're incredibly important stakeholders, but showing them how these things benefit customers absolutely is possible. And you have to experiment a bit. You have to. And sometimes they won't work, and so if the experiment is small enough. So I'm an optimist, actually, about the role the regulators will play.
Thank you. We're almost running out of time. We have just one question.
There's a question from the crowd.
Okay.
So insurance pricing changes with autonomous cars and electric cars, right? How motor pricing will change in line with auto industry changes? It's, from the crowd.
So does it have to do with dynamic pricing, which is something that we just touched?
I believe it's more with with the coming of autonomous cars and electric cars, more connected vehicles, right?
I think Reto, would you like to comment on that?
Yeah, happy to do so. First of all, autonomous driving, autonomous cars is something I'll try to manage for several years, but. As I mentioned, I founded my company because I was in close relation with OEMs and doing partnership business with them. I think for the insurance industry, it's about time to find out the impact of advanced driver assistance systems in this specific car. So it means start to understand what semi-autonomous driving means today on your risk, because it is significant, I can tell you. Up to 40% better risk if you know which systems are in which car. And this means you start learning towards autonomous driving. Then the next logical step is to start collecting connected car data to understand whether these ADAS features were enabled, disabled, to understand whether a harsh braking event was done by the driver or an emergency braking system. And these are the two next logical steps to understand risk of autonomous driving. Of course, this system evolves, there will be new systems, but you need to start learning because it's going to happen faster as you believe. We are already in the age of semi-autonomous driving, so every car brand out there offers you emergency braking, offers you lane keeping, death arrows, spot identification. But what does that mean for the insurance industry? The insurance industry still knows about make, model, type, the price, the weight, and the horsepower. That's it. But the technological evolution in the last 10 years is tremendous. And you need to start to understand what it means to have a well-equipped car versus a standard car. It's about time.
We were talking earlier about Tesla's example in the US. It's no accident that they are starting to take more risk because they got better data advantage. So, I think it's certainly likely as you go, with autonomous, obviously they're going to need to take the liability, but I think they're going to start to bear some of the insurance risks themselves.
Yep, they probably will. So our last question, and I think that this one is something that the audience is also looking forward to. Can you provide us sort of the Top Gun Maverick sneak preview of the sort of cool features that you are going to be launching in the market soon, or you heard that the market is launching soon? I know that Lala is launching something around insurance. Maybe you can start, just tell us a little bit about that.
Sure.
If you can.
Absolutely. On the insurance side, and like everything that we do, it usually comes from our customers. And we started understanding that our customers do see a pain point currently with the journey that they go through to adopt insurance. But from there, we try to reimagine and ideate from the very beginning, how can we reimagine this from scratch? Instead of going through what we're going to launch now, we want to kind of go towards the future and say, what does the future of this look like? And one of the things that as a group or as a company, through discussions and user interfaces, we're starting to understand that there might be more of other models that make sense for them. So what is the total cost of ownership of a vehicle? A lot of us don't understand that. When I pick a car to buy, am I taking into account how much am I spending in fuel, how much am I spending in tire changes and servicing and this and that and that and that? That's leading us to look at vehicles as a subscription, which others are looking at. And we feel that from our perspective, that's a direction we want to move towards. So everything related to your vehicle put together, how much does that really represent for you on a monthly basis? As opposed to having to pay X today and Y tomorrow and this separately and that separately, is to bundle it all up. And utilize your vehicle as a service, as a subscription, and have a completely centralized type of cost behind it.
The super app of Auto. Good. Any other ideas? Any other things that you're seeing in the market or you are doing
I believe it's going to be really impactful, and that it's a bit linked to what Google is doing. I'm working on a so-called normal sigma, which is contextualizing geo-allocated accident information with traffic volumes, with weather condition, time of the day. And what we provide right now is like you can provide your customers a risk report around his home. So raise awareness and attention to risk around your home address. But the next step is that we will come up with a driver warning system. So the driver gets actively informed that he's entering a risky zone. But not only from a geographical allocation, AI-based meaningful information. So if you drive there at 10 o'clock and we know it's not risky, you're not going to be warned. If we know this is only dangerous in a sandstorm, we only get an information if there is a sandstorm. So using AI to warn the driver of risky areas to reduce risk, that's what I'm working on and which will come to the market quite soon.
Good, thank you. Niall.
Am I allowed two?
One at a time, please.
One, okay. Okay, I'll say them very quickly. One is something which we're about to roll out, which is, in a sense, it's not very clever at all, but it's indicative pricing. So when you go onto a car configurator, you choose your color and everything else, it will play back to you your indicative insurance price based on the limited amount of information you've given, so that you can see what the cost of ownership is. So that's something we've been working on for a little while, which will be rolled out soon. The exciting one is we're starting to work with a digital bank and using the open banking data that they have. And so, that's a frontier that I'm looking forward to working with the insurer on to see what that opens up.
Good. Kamal?
I'll touch upon the same thing I talked a little earlier, that in market like ours where multimodal is there, a lot of two-wheeler drivers along with car owners and so on, and people switching from one mode to another. Our next cool feature is in our products how we can use AI to really do a risk pricing or correctly judging the risk based upon automatically detecting what type of vehicle they are driving. So that's one that we're working on.
Okay, great. Thank you very much. I think that it was, at least for me, a very insightful conversation. Thank you all. I think that we went a little bit above 45 minutes. I think that we could spend the whole afternoon talking about mobility. Again, on behalf of myself, the organizers, the sponsors, thank you very much for your time and for your insights. Thank you.
Thank you all. I would like to request from the audience to come forward, please. Kindly fill the chairs in front. Please feel free to come front. And let's jump now to the health panel. I have the pleasure to invite Mr. Jihad Rahima, Senior Vice President, BD, QIC Group, Advisor to the Vice Chairman and Managing Director, QLM, to moderate the health panel.
Good afternoon, everybody. Before starting the introduction of our esteemed guest, just let me go 2 minutes in history. When I started my career back in 1998 in life and health insurance, we used to do everything manual. Premium calculation, individual premium calculation. We used to use Telex to correspond with our reinsurers. Then, a couple of years after, when faxes were installed, that was a revolutionary to us. Wow, just put the paper and it's on the other side, on spot. Soon they have installed PCs, and we said, that's it. Our life now is complete. Then we started in-house development of the IT systems. IT systems that time were just registering data, policy, membership data. So we did not have sort of statistics that would help us into making a good underwriting. I'm looking back now and see where we are now. We are talking now about future, about InsurTech, about digitalizing, about artificial intelligence. So looking at after that, I truly admire the human intelligence which stand behind all this. And it's now left to the next generation of insurance experts to go further in the future. My name is Jihad Rahima. I'm a member of QIC Group. My colleague, Mr. Sebastian.
Hi, good afternoon. So my name is Seb Burnett. So I'm from Deloitte and I run our kind of European and operations for Converge Health, which is our kind of health tech assets that's trying to help organizations kind of realize the future of health. I'm very fortunate in the work that I do that I get to help organizations strategize around how they enable that future of health through to actually implement it as well. And actually, the thing that I'm really fortunate about is, given that health tech and digital health is so kind of pervasive and it's around the consumer and the person, actually it touches on many different industries. So my background has been in life sciences and public health and helping those organizations drive forward, but more recently starting to work in health insurance, actually starting to work with telecommunications companies, drinks companies, again, around how can they help improve the lives of us humans, our friends, our families, which is kind of why I love this area so much. The other thing that I do quite a lot of, and has been a word of the day, is kind of work around kind of health tech, digital health ecosystems around Europe, and I find it fascinating and really elevating around the fantastic work that's been done across the world, and really found some fascinating kind of organizations today that pitched not only in the six, but also I had the pleasure of doing some of the kind of panels and the judging from some of the previous rounds as well, looking at all the fantastic startups and digital health organizations that are coming to bear, everything from reuse of data all the way through to kind of engagement, wellness, and AI as well. So thank you for having me. So we're going to go and just introduce kind of 90 seconds each of our panelists, and then we'll get into the questions later. Jihad and myself will be co-moderating just to mix it up and make it a bit interesting. I've sat next to him this time to avoid the kind of the moving of the head like you'd have at Wimbledon, which is happening, I think, in a few weeks in the UK as well. So, Mohammed, do you want to go next? And congratulations on early today as well.
Oh, thank you so much. I think I have already been introduced. I'm Mohammed. I'm the founder and CEO of Avi and the computer science professor at Carnegie Mellon.
Thanks. And my name is Ole Bjørn. That's very difficult to pronounce. Don't worry. Everybody can call me OB. And I work for Dawn Health, which is a Copenhagen-based digital health development agency. And I run our Middle East operations out of Dubai. And we are trying to build solutions for patients in a variety of chronic disease areas together with our partners in the life science industry, which is predominantly predominantly pharmaceutical companies, but also getting closer to insurance companies. We're moving into enzymes companies, just like Seb was saying, when it comes to data and really having that patient-centric focus. It easily spills into many adjacent industries. So we cover anything from consulting across design to software development, hosting and deployment. Let's see what else. Down the road, we are also in Q1 next year launching a platform to democratize the development and launch of regulated solutions, regulated in the European sense here. So namely DTX products and SAMD products.
All right, thank you. My name is Javed. I spent 10 minutes earlier today introducing myself and my company. But from WellX, a bit of a disclaimer, I'm not an insurance person, wasn't born in insurance, didn't work in insurance, spent the majority of my life in banking, but having made the transition, I'm very excited to be here and to spend the time with the rest of the panel today.
Gentlemen, thank you very much. I mean, let's go to the future. Mohammed, what do you think the future health insurer would look like?
So AI is going to play a major role in automating a lot of processes within the health insurance sector. Everything, I assume, will happen instantly, more accurately, more convenience is going to be brought to the domain. So I can imagine, for instance, if I'm going to the hospital and I need a pre-approval, maybe I can do it through AVI, and then automatically AVI is going to tell me it's okay or not. I reach there, and then there will be a claim after I see the doctor. The moment the note actually is inserted into the EMR, we integrate with the EMR. Just from the moment I leave the doctor office to the moment I go to check out, the claim will be processed. And I would know actually whether it was approved or disapproved and how much I should pay. So it's a completely different journey when it comes actually to health insurance. Another thing actually that is more specific to the insurer themselves, I think many people touched upon dynamic pricing. So the way I view it from a mathematical perspective, you know, every phenomenon in life can be interpreted through a mathematical distribution. The way I see health insurance, it follows a power law distribution. So you get a bucket of people whom you lose from because they spend a lot and you have to pay for them, and another bucket that actually they spend much less. And if you do the mathematical integration for that long tail phenomenon, if you view the distribution, actually there is a theorem about this. That long tail actually is 3x more than the first bucket. And that's, I believe, how insurers typically, if they are pricing correctly, they need to price, because if they gain from that big long tail offsets the loss, they make money. I think dynamic pricing is going to play a major role. How, for instance, in AVI, so you see that people talk to AVI, and every session with AI is recorded, of course, by the permission of the patient. We have an idea now to start doing prognosis. So over time, the algorithm is going to start actually predicting what will happen to the patient before it happens. And we want to help, the way we view it, we want to help not only the insurers, we want to help the insurers, but we want to help the patients, and we want to help also the providers. We are really playing it that way. We want everyone to win. So with respect to the insurer, we can easily predict what will happen and then provide them actually with what they call the underwriting. Like, this is how much this person is going to cost you. With respect to the patient, we're going to try actually to be more preventive. Look, maybe this will happen to you. Of course, there's this scary part. We're going to work on it. But maybe you should actually, I don't know, sleep more. Maybe you should eat healthier. Stop eating, I don't know, meat every day or whatever, so that we can actually make the person healthier and as such avoid what could happen to him, and so on and so forth. So there's this dynamic pricing idea that is enabled by artificial intelligence that will empower insurers, and it will empower at the same time the patients. And we can go on and on with the provider as well, but that's actually just a few concrete examples about how we view the future of the insurer, the provider, and the patient all together.
Thank you, Mohammed. Oli, would you like to add?
Sure. So I want to echo what you say, and I would then add to that and say, well, the enabling factor here being data, of course, right? And you need to have that data feeding across the ecosystem, which is also where the digital health solutions then come into the space, because otherwise how are we or the patient going to collect that data and provide it to the trusted third party or the trusted analyzing service provider like your companies or others, right? So this is where the patient-centric digital solutions come into play, and how can we support the patients through their treatment journey and making sure that we add value to the patient directly, so they provide data that is actionable for them, and then data that is insightful and usable for service providers that they allow to access that data. So ultimately we can help the patient in more than just the direct care, but also in the financing, as you say. And I think that is sort of the wider ecosystem we're moving towards, and why insurance and healthcare providers and digital solutions and pharmaceutical companies, they're all getting closer together, and it's unavoidable.
Javid.
You know what? I forgot the question. Do you want to repeat?
How do you see
the future?
Future health insurer.
Yeah, let's put ourselves in a bit of a time capsule. I think the one thing that a lot of us have been speaking about is customer centricity. I know Ala and Rita were quite vocal about this. I think if we put ourselves in a time capsule, and I know this is something that a lot of us have been, as InsurTechs, are sort of driving towards, is building a world in which the consumer stands to gain irrespective of what each person in the puzzle does. I think the gentlemen to my left have very nicely articulated how every cog in the wheel needs to operate to be able to provide the consumer the end goal. But I think the way that this industry will unfold, it's rapidly changing, and the pace at which it's changing is unheard of. Is something that the consumer will continue to demand. So if you were to ask me what this looks like today, I think we're seeing an industry that's evolving at a rapid pace. What it's going to look like tomorrow is anybody's guess. But I think what we're doing is taking steps in the right way to be able to make this a world in which consumers can access hyper-personalized care across the board. So whether it's AI, whether it's real doctors that provide the medical care on the other side, or whether it's data. I think the consumer is the one that's going to drive it, and I think that's how us as InsurTechs need to start looking at the solution and the way forward.
Yeah, no, I completely agree. And something we're starting to see a lot of organizations and start to think around, around that consumer, and I kind of Profina talked a little bit around it, creating that kind of decentralized view of all your data, is actually how far do you want to bring those different types of data together? What modalities of data do you want to bring together? Be it environment, genomic, etc. How do you then build out actually a digital twin of yourself that allows you to look at what the future could look like? Again, so exactly as you're saying, how likely am I going to be to take money from the insurance company? What diseases do I need to think through? How do I live my life better to actually drive a more preventative healthcare solution in the future? How do I build that whole ecosystem together that allows me to run, I can't remember who it was earlier today, talking about those little AI bots that would essentially run in your data on your digital twin that will help you live a healthier, better life if you chose to do it in the future as well. So again, that's something that a lot of organizations are starting, or organizations and public health organizations are starting to think through, is how do you actually create that digital twin of your human that essentially reduced overall kind of healthcare costs in the future, which I think is personally fascinating, but I think we are a long way out from that in the future. So we talked a lot about AI. Everyone talks a lot about AI at the moment as being kind of that thing that's going to drive massive transformational change, and I completely agree. But actually, what other kind of core technologies, capabilities do you think will help accelerate value for the consumers of the health insurance, but also actually the health insurers as well? So Ole V, do you want to go to that first?
Sure. So I think one of the things we're very likely to see in the near future would be insurance companies requiring pharmaceutical companies to prove the efficacy of their drugs in a real-world setting, right? This is what we call real-world evidence. Now, for pharmaceutical companies, that's incredibly difficult to collect and to validate, which is where the digital solutions comes into play. So even if insurance companies don't provide solutions directly to patients and that the patients feel comfortable using, the data is incredibly likely to come anyway because it is likely to be a requirement, right? And so again, coming back to the whole interconnectedness and as you said, the cogs in the wheels, they need to play together. So yeah, I think that is the main sort of game changer that we will see on phase 4 trials to really validate medicines.
And I think also it's going to be really interesting is around how do you kind of also put together medicines and some of the kind of the digital tools, the nudging, etc., and how they therefore drive those kind of efficiencies around patient outcomes as well. Javed, you got anything to add around some of those kind of new technologies? Loads of people always talk about blockchain. It's not talked about all the time. Not many people have done much with it. Estonia have done a really good job in the healthcare system. I don't know what your views on blockchain are for the health insurance industry.
So I think blockchain as a concept has evolved significantly, right? Yeah. So there was a time when blockchain was sort of like the promised land, right? People were saying blockchain can cure cancer, that it was that crazy, right? There was this phase. But I think what we've really come down to now at this point is being able to decentralize. I love the way you articulated the entire decentralization of health insurance, sort of like what Meta is trying to do on the other side when it comes to digital cities. But I think the use cases have now really gotten penned down, and if we're able to bring all the different parties together on sort of on a singular exercise of bringing down those health insurance costs that a national spend, I think we're on the right track of making things happen, creating real impact.
Mohammed, anything to add?
The way I understood your question, it has more to do with the technology. So let me give one example. When I was living in Pennsylvania, my roommate was a medical doctor at UPMC. And UPMC is huge, like it's top 10 in the US. And he used to tell me all the time that they struggle so much to establish rapport with patients. And it's so crucial, by the way, to establish that rapport to a certain extent so that they can give some confidence or more confidence to the patients, because psychology plays a major role in these kinds of things. And they recently, a study was published actually in the US, showed that a doctor in the US on average spends 3 to 4 hours every day just typing in the notes or whatever. So the patient comes in, the doctor is just like, and you know, they are not computer scientists. It will take time for them to input the data. So Google started working actually over the past 3-4 years on a beautiful technology. They use recurrent neural networks in deep learning actually to extract symptoms automatically on the fly from the clinical conversation. So the doctor is talking with the patient, and then the AI algorithm is just listening. And let me define actually what I mean by AI, because everyone talks about AI. So the way I see or I define AI informally, not mathematically, is to be able to train a machine to learn and produce an intelligent behavior. And that intelligent behavior, the way we view it at Avi, is it involves 4 components. You make the machine listen, you make the machine think, and you make the machine speak, and maybe, I'm sure you all saw the news in the past few weeks, maybe you make the machine feel, okay? So the focus so far on Avi was to make the machine think. And we started already a project, and we're making a lot of progress, by the way, to make Avi listen and speak. It's gonna come out soon. But the idea, back to that core idea here that I want to communicate, so that algorithm will listen, will think, will extract symptoms, will automatically generate the note, and then store it in the EMR. All what the doctor needs to do is simply actually to check that note and approve it and maybe do some edits. Imagine with that note, with that technology, automatically Avi consumes all those symptoms, like so this is complementary, and then Avi generates a diagnosis, because diagnostic errors, 10.4% of people in the US die every year because of diagnostic errors. That's in the US. Imagine those symptoms are automatically fed to Avi, and then Avi is gonna generate the diagnosis and hide it. And once the doctor actually inputs the diagnosis, then Avi is gonna validate it immediately. And then alert the doctor if there is anything. And Avi, by the way, we did a study against medical doctors with an average experience of 16.6 years. And at the moment, even the one that is in production now, it exceeded the performance of human doctors. So all these kinds of technologies are massive, and they are coming. I think in the morning there was a session, and someone mentioned, I think Dr. Unkal mentioned a beautiful term. They said AI is the next oil, right? I believe so. And it's not only AI, if I am to answer the question directly. You need these systems, techniques that can work at scale. You want to do this with millions of people. You want literally to do everything immediately, accurately, and in a beautiful manner. And that's, by the way, the beauty about Google, right? So Google runs on millions of machines. You need systems techniques. That's what we call in computer science distributed systems. In addition, actually, to the intelligence that we are talking about. So get these together, that's maybe us. Get the knowledge from the domain, that's maybe Jihad and all the experts here in the domain. Combine these together and you're gonna see beautiful stuff. Literally beautiful stuff that are gonna change the domain massively. And I think that's actually the core message of this conference. This is what we are all aiming for, to come together and see how we can complement each other. And each one actually pitches with what they know about. And then together, maybe we can do something beautiful to this region.
That's beautiful. I love it. But I'm going to dampen the mood a little bit, if that's okay, very quickly, and ask a couple of questions. So I don't know if people have been looking at the news today, but Microsoft pulled some of their facial AI recognition software and services from the market because they're worried about kind of the use of ethical AI, right? We know that regulators, especially around health data, is tough. Getting your algorithms validated, what happens, if it gets it wrong. Mohammed, I'm going to come to you first, given a lot of the work you're doing at the moment, just to comment on what needs to change, working with regulators around ethical AI organizations to try and help not stifle innovation too much, because that does worry me a little bit.
That's a beautiful question. By the way, anything that touches the public at scale should be regulated. And that's the idea of FDA, right? Right? So if you're going to actually give the vaccine to people, you cannot simply go and say, okay, I have the vaccine and I'm going to give it to people, right? It has to go through this channel. It has to be validated because it's going to actually impact hundreds of millions of people. And AI is a technology that is going to actually hit maybe within 5 years. I believe within 10 years, we're not going to drive our cars, by the way. You know this, right? The self-driving cars. It's going to happen soon, within 10 years. So AI is going to touch every single person of us. And AI has a dual usage. It could actually be good and it could be bad. And you need the regulator actually to regulate it, or otherwise we might actually see the bad arising, and we don't want to see that. That's one thing. Two, I strongly believe that there is a big responsibility on the inventor, right? So the reason of why we spent 3.5 years doing research, for instance, on the ABI, which is a diagnostic system, we did not want to launch something that is not accurate. I mean, this is so critical. We could have launched it maybe a year earlier, but then we're not going to establish that trust with people, and we might hurt people. So there is this ethical responsibility on the inventor. The regulator is going to try to do something with you, but at the end of the day, you need to go back to your principles and to your ethics and make sure that you are doing the right thing. Now, the problem is that not everyone is going to make sure to do the right thing, but here comes the regulator, right? So everything has to be validated, and we really need a regulation entity just for AI and technology.
Great, thank you. Oli B, do you want to comment on especially the stifling element around it? Because I agreed, you need a regulation and you need a regulator, but given the amount of algorithms, applications, organizations get in this space, how are regulators going to cope?
Sure. So I think it's a matter of defining some standards, right? And there has already been some standards defined that are pretty good under European regulation with the MDR. So I would imagine that you guys, Mohammed, are ISO 13485 certified, and if you're not, you're gonna be. And just like you're ISO 27001 certified, and if you're not, you're gonna be, right? And that's good, because that means that we can create that trust in the ecosystem. We can create that trust amongst the users, amongst the physicians, amongst payers, clinics, and so forth. And that also becomes a little bit a hurdle for startups, right? So some of the startups we've talked about today, they may or they may not have these certifications in place, and that limits their scale at some point, and that stifles the ecosystem a little bit. And this is where especially the Middle East has and the Gulf region in particular has a very, very interesting role to play, at least in my perspective, because we don't have the same very, very, very cumbersome regulation as you have in Europe, but there is still a very, very high focus on quality and patient safety, right? So that means that we have a certain level of nimbleness where we can put solutions into the market and validate their use in a more sort of like smaller setting, and then if it works and it works well, then we can scale it into the world, right? And that means that the Gulf region can position as de facto being a spearhead of innovation and being a global innovation center simply by having this slightly more nimble regulatory framework.
Thank you, Olivier.
I mean, you know, everything we do in our industry, in your industry, in any industry, is customer focused. I mean, our main objective is customer. Now, a question, maybe Javid, we can start with you. What is the importance of ecosystems into driving values for customers?
So I think the one thing that customers have come to get used to now is the fact that they have choice, right? And they want to be able to maintain control over everything that they do. If you look at, you know, major organizations that have come over in the last couple of years, like Uber, all they've done is put the power of control in the customer's hand, and they've revolutionized an entire industry that's been around for so long, right? So I feel like the ability to give the customer that choice and control is what will set anybody apart from competition. So when you look at ecosystems, and this is pretty much what we've done at WellX, is when we started off, we went very, very much the MVP route, and we said we want to make sure that we give customers enough choice to do what they want. Wellness is one of those sort of very sensitive topics. Health is a very sensitive topic where everybody has a different formula for success when it comes to themselves, right? So I like playing paddle tennis, I like playing football. I cannot go to the gym because I get bored, and I'm just going to walk out. But that works for me, and I'm happy. My co-founder, on the other hand, goes to Barry's boot camp every morning and spends 2-3 hours over there doing, you know, what he does, and he enjoys it, he loves it. So I think in order to be able to drive the space that we're sitting in today, you want to be able to give or enable customers to do what's good for them instead of forcing them to do what how we feel things should actually move forward. And everyone stands to benefit from it because nobody can do everything, but everybody can do everything together, right? So if one person tries to do everything, they'll do a little bit good from everything. But if everyone who's good at what they're doing does what they're doing, and we're able to bring everything together, consolidate it, aggregate it, where we stand out to win so much more. I think essentially, if we're able to bring and aggregate all of these different providers within the ecosystem towards bettering our space in health or health insurance, you're able to provide the customer with that relevant choice and that relevant control to be able to build better products and solutions. And coming back to what you mentioned earlier is if you're building around the customer, then you make sure you've got an ecosystem that caters to that customer.
I think that's a really interesting point actually around like the hyper-personalization you're talking about around what's the value, what's the goal for that consumer. What actually is really interesting as well is that goal will continue to change over time. So actually, if I look at the last 2 years of my life, I started off exercising for sanity over COVID in a certain way, and I found different coping mechanisms would change over that period of time. There's also some really interesting kind of behavioral science thought leadership around how you set the goal. If you set it too easy, people just give up and they don't bother. You set it too hard, they give up. So you have to keep adjusting the goal that you put in front of the consumer to keep them engaged, to keep them going, to keep them, you know, driving forward some of their health as well, which I think is really fascinating actually around that kind of behavioural science piece. I don't know, Mohammed, you look like you've got to add to that.
I want to add to that because it's a very critical question. Thank you, Jihad. I think the crux of the problem is what experts in the domain call the moral hazard. And there's a lot of studies actually, especially in the US, in the insurance domain about moral hazards. Very briefly, a moral hazard is of two types, either a consumer moral hazard or a provider moral hazard. So they showed actually over time in the US that when the provider realizes that the patient has insurance, they tend actually to prescribe more, I don't know, procedures and medicines and do more stuff because it's like some providers really consider the patient to be a victim. That's how they are going to make money, right? So the consumer is easy. They found also that the patient, when the patient realizes they have insurance, they tend to go to doctors more because they know that the insurer is going to pay. But just to focus on the provider moral hazard. You see, we don't really need, and that's actually, I did not have the time to explain this today in the pitch, you don't really need to do only claim processing. You need to do intelligent claim processing. And what do I mean by intelligent claim processing? after you validate the diagnosis, and I believe actually that Avi brought a completely new idea to the domain when it comes to diagnosis validation. Because Avi takes the AI session that happens with the policyholder and the doctor session and does what we call two-point matching using a very sophisticated mathematical model. And it says actually it alerts the insurer of whether actually there is a problem with the diagnosis to begin with. But aside from that, the intelligent processing actually takes the diagnosis and does some actually processing in the mapping between the diagnosis and the procedures. And it really works in a way, just to, as an analogy so that we can all understand it very easily, similar to Google. It says, look, this procedure, here is how for this diagnosis, me as an artificial intelligence algorithm, I rank the procedures. I believe that this is the first procedure that can go. Then this is the next. And wait a minute, there is a mark here. These two should not, nothing should go afterwards before you do these two, before you go and do something else. For instance, you should not go and do an X-ray or MRI before you do, for instance, I don't know, a CT, solar, I don't know what they call this thing for the abdomen. But in any regards, the idea here, you want the algorithm to be intelligent enough to avoid the provider from doing more on the patient, which goes against the health of the patient, by the way, and as such charging the insurer more money. You see, and if you can manage to have AI or a technology that can do this, do you know what you are doing? You are becoming customer-centric, because you are really saving the patient, and you are really saving the insurer, literally, if you can do that.
Thank you, Mohammed.
Just one example.
But anyway, I mean, the healthcare fraud is a topic by itself, and it needs maybe months to sit and discuss. However, it's a two-party. I mean, it's the patient and the doctor conspiring about doing this. Cannot happen from one side. Sip?
So, LAB, you talked about this earlier, and something that really, so my background has very much been around working in healthcare environment, but a lot around life sciences organizations as well. And one of the things that really, really excites me is the future of digital therapeutics. Right, this is, in my opinion, is going to transform a lot of things. We're seeing lots of life science organizations partnering with kind of digital health applications. I think Biogen announced one today with Happify, and they've had a couple recently. We're seeing public health organizations start to offer some of these as well. Health insurance, I've not seen so far any of these kind of announcements. Do you think they're missing out? Do you think they need to start paying more attention to some of these kind of modalities of care? I'd love your thoughts on that.
Sure, and I think it follows up well on what you say about how do we serve the patient better while also saving money, right? And what you're talking about really is how do we cut down on unnecessary procedures. Okay, but then if we could extend that to how do we cut down on procedures, right? If we can prevent instead of cure. That's kind of what we want to go for, right? And that's where digital therapeutics come into the question. So how much can we do with patients directly that will nudge them and support them and coach them and mentor them and educate them to make the right life choices at the right time? And how can we do that either, pre-diagnosis, but also post-diagnosis, so we support them through the treatment journey to lower later comorbidities, we lower later side-on, add-on diseases that would maybe come on later. And as you said, yes, plenty of organizations are working on that, and as you say, yes, we're not seeing a lot of that from insurance yet. And I'm pretty sure that yet being the key word here, because it will come. Simply because the incentive is so strong, so it is almost unavoidable. Also because you sit, and when I say you, I mean, of course, QIC, but also the wider industry, really sit on data that can be leveraged and communication channels that can be leveraged to put some of these solutions into the hands of patients before they even come and engage with the pharmaceutical company that might put a similar solution into their hands. So you have a competitive advantage, which is also why I am, like you, a little bit surprised that it has not come earlier, but I'm sure that it will come.
Javed, do you want to go a little bit from the kind of wellness point of view as well? Obviously, that has a big part to play, maybe not digital therapeutics, but around mental health, et cetera, et cetera.
Yeah, no, absolutely. I think preventative care is what it's all about, right? I know Jihad and I were having this discussion earlier on. It's about reverse engineering the whole product of health insurance.
So you are quoting the name now.
Absolutely, 100%. So yeah, so it's about reverse engineering the concept, right? It's about not looking after you, and this connects back to what I said in my last slide on our purpose. It's about becoming the customer's sort of best friend or family, because ultimately, as insurers, we're picking up the bill, right, when they get sick. So why not focus on not allowing them to get sick in the first place? And that revolves around changing behaviors. Now, to be able to do that, you need to have institutions within the industry that have that sort of patience to start building upon customer behavioral change and how that behavioral change impacts claims in the longer run. I think in the immediate run, what we need to be able to focus on is creating that. And I think we're sitting at this place right now, this juncture right now, where we have the ability to reset as an industry. I mean, we've been doing this for as long as we have, right? There's been a lot of talk about incumbents and insurtechs, incumbents and insurtechs, and for the life of me, I didn't know what an incumbent meant. I had to actually look it up, the Oxford Dictionary. I'm going to very quickly read this out to you, right? So it says, the holder of an office or post, and the way that they've presented it is the present incumbent will soon be retiring. So on a lighter note, I think it gives us the opportunity right now as an industry to reset and to start looking at things from a different perspective. There is this newer generation of startups coming out. I know there's regulation that we've heard stifles innovation, but then you have the bigger players, and this is an excellent example of this, right? Large players like QIC that are coming up to the stage to actually say, we want to do something about it. So I think we're at that right moment where we can start focusing on this element instead of focusing on what's the limit that we can provide on health insurance? Like, can I give $1 million limit or a $500,000 limit? I mean, when COVID happened, nobody was looking at what their limits were, right? Everyone was, I wish I worked better on myself so that my immune system would have been stronger, because at that point, your limits meant nothing, right? So it all comes down to how do we flip the entire narrative, and I think what you mentioned earlier is definitely one very strong element in bringing together that puzzle.
That leads me another question. I mean, you mentioned reverse engineering, so I see, the solutions that takes care of the patient's health and lifestyle, they are reverse engineering into healthcare insurance. Now, how do you see that changing the behavior of insurance buying and managing your insurance products?
Right. I think consumer behavior has already been seen across, and I put that on the slide, the way that consumers interact with your bigger players in the tech space already, right? So consumers, the way they interact with Google or YouTube, I think they pretty much come in and they demand certain value and personalization, right? So I feel the way that this is going to, and I mentioned this in our acquisition strategy, today we stand very much in a broker, insurer-led industry, the bigger players, and they're the ones that you need to work with to be able to get your product to market. But I think over a period of time, you're going to start to see that change. People are going to look for wellness where wellness is offered. Insurance companies don't offer health and wellness today. And if we're able to come together right now and hit that reset button, as InsurTechs, we have the ability to do that, right? So if we're able to come together and start to spin the narrative the way we mentioned earlier, and we're able to give consumers the product at the time that they need it, where they're looking for it, right? So if I go and embed my product in a gym, right? And I know Vitality has done that in the past, and it's worked to their advantage. If I embed my product in hospitals, for that matter, in more prevention sort of clinics, right? You're then going to the place of the consumer. You're reaching the consumer at a point where he needs to look for that care, or he's looking for that care. And I see that as being the new model of engagement between consumers and insurance companies.
I think Ole Bjorn, have anything?
Sure. No, I echo all of what you say. I agree entirely. That's the short version. To add a little bit to it would be, well, probably more integrated models, right? So how do we serve the patient in a more integrated way and become a full partner to their health? And it has been mentioned a couple of times over the day, but maybe a good example is we're launching an obesity clinic in Denmark and in the UAE now. We have just launched it. And one of the value propositions in that clinic is that it's virtual first. It's virtual care. They can, in Dubai, also go see a physical clinic, but in Denmark it's virtual. And then there's a digital therapeutics companion where we will have a flexible dosing algorithm, so that becomes a DTX, right? So that becomes a digital therapeutic, because with the patient using the underlying app, we get the data, which means that we can better titrate the patient, which means that we can lower the cost of the patient, which means that we can lower the risk of the patient, which subsequently, bringing me back to insurance, means that when we then talk to their insurers and we talk about reimbursement, we can lower the price of the patient to the benefit of the patient, to the benefit of the insurance company, and to the benefit of us. It's all about win-win-win and creating those ecosystems.
Cool. So I think we're coming up close to time. I'm just trying to see how much time we've got left. But I think we've got a couple of minutes left. I was just wondering if there are any questions from the audience, either through Menti, although you probably can't see the number because I'm in front of it, or if someone wants to put their hand up maybe and ask a question.
I have a question to you, sir.
Okay.
How do you see the the health care insurance ecosystem?
How do I see it working?
Let's say in 10 years, how do you see the ecosystem of the healthcare insurance, let's say 10 years from now?
So I believe that the health and well-being ecosystem, the consumer, patient, human, whatever you want to call them, will be at the heart. Their data will convene around them. We'll start to think around the digital twin. And I think the three kind of bullet points are hyper-personalization. I think we've talked about a couple of points. So things that are very specific to that person's motivations, their needs. I think the other one will be, I call it interoperable data. So being able to consume and move data around from lots of different modalities, from lots of different sources. So think clinical, think environmental, think genomics or molecular data, all of which allows you to make better hyper-personalization. And then lastly, I think it will all be built on an open and modular kind of set of secure things, solutions, right? And this is really, really important. This is where the ecosystem comes together, because no one player, no one organization can control all of that. If you do, you'll stifle innovation, you'll stifle progress. So what needs to happen on top of having those interoperable data is also allow organizations to be able to kind of plug and play their things into that kind of digital twin as we talked earlier. So my view is the world will be in the future where you can plug different algorithms in potentially. So an algorithm could be looking at my passive data collected by my walking, my typing, that predict early onset of Alzheimer's, and therefore I can start innovation, some intervention, or it could be something like that. So that's my kind of view around that kind of plug and play modular approach that will be controlled by the human at the center of it. And they will control what they want to do and when they want to do it. Some people will decide they don't want any of it. They live their lives, they don't want to worry, and that's fine. Some people will want to start looking at things like heart disease, because both my parents died young from heart attacks, so actually I want to look at it. They'll start looking at using their watches to look for, like I was actually talking to someone the other day who had long COVID, and he went to his doctor, and his Apple Watch detected AFib before the doctor did, because he started going, saying he wasn't feeling very well during the long COVID. He said his Apple Watch had seen that, and the doctor was like, yeah, okay, we'll check you out anyway. And it was like, oh, actually, yeah, you do. We need to do something about it, which is really, really interesting. So we're starting to see things start to plug in. How the ecosystem will evolve, who's going to control it, we'll see in the future, but it will definitely be consumer-driven, consumer-led, and the consumer with the data at the heart of it is my personal view.
Thank you, Seb. No questions from audience? And I think that's it. Thank you very much. Just one small note to the audience. When I said that I started my career in 1989, that does not mean I'm old. I'm just a bit over 25. Thank you very much.
Thank you.
Thank you all. And let's have now the travel panel. I invite to the stage Mr. Uthman Benes, Head of CVC at QIC DVP. خلاص. Again, changing the name?
Yeah, thank you. It's back me. It's not Ottman. We have a little discussion about travel insurance right now. I think it's very exciting times after COVID, before the World Cup, especially for us in Qatar. And please welcome my chat partner here on stage. One second. Oh, yeah. Yeah. Oops.
So, Uthman, you put your name in the text, huh?
Yeah. Yeah. Yeah, welcome. It's the two of us. We have the stages for everything is for us here on stage. Let's a little bit start. I a little bit mentioned we had COVID. World Cup is coming. Please give us let's say a little overview about the travel industry per se, because you're running the Regency branch here in Doha. And we can please introduce yourself and give us a little taste of what's happening.
Yeah. So I think this will be the shortest session between me and you. So I am Manoj. I am the GM at the Regency Travel and Tours, one of the oldest and the largest travel agency in this region. So as a travel agency, after the COVID, we see a lot of changes. Like usually when travelers come or customers come to us, they need a visa by default. For the visa, they need the insurance. So that was an additional product. For us, it was kind of ancillary services or the byproduct. But now it is must to have product. Okay, I can give you one example. After is this pandemic and COVID, we are moving from the brick and mortar company towards a travel technology company. Okay. And the first time it happened that, we have delayed our B2B launch, which was supposed to happen in the June to July, because when we are doing the study up with all the partners and everything for the B2B customers, we found that they don't only need flight and hotels, they need the insurance product also. So then we have geared up our team. Now include the insurance in the main portal, because that is the 33% customer, our B2B customer need the travel as a main product, like flight, hotel and transfer. Okay. And then there's a great opportunity, but the same time when we talk to the QIC or the other travel insurance companies, this is the time when we have to create customer-centric products. Not like before the health and this. Now, example, some customers they come to our office and they ask, suppose is it possible that I have taken the travel insurance for the flight delay compensation? It is going to cover the multiple flight cancellation or the single flight cancellation. So now we have to we are creating a system where we can feed all this information, and customer can read and and they can decide what kind of insurance they need for their travels. There's 7 days, not like before. 7 days, 15 days. No, they need 7 days. What will happen if they are stuck in some country due to the COVID or medical emergency? So a lot of changes we are seeing, and rightly you said World Cup. Yes, 1.5 million people are coming.
I think 5 million. Yeah, 5 million.
People are coming, and the Qatar Airways are 60,000 flights. They are thinking the shuttles are coming and going, so there will be a lot of disruption. okay, the changes in the plans and everything. At that time, yes, insurance is going to be a big part for our revenue also, and the sales part also. Okay.
Yeah, thank you. You mentioned a lot of interesting points, especially also for us as QAC. We are very excited about what's happening regarding the World Cup, because we see it as a huge opportunity to create a product, to sell something to people, or to offer something to people who are coming to the country. Yeah, and at some point it's mandatory, but we see it like we're looking for partners who we can build something together with. And how do you see it? The demand and also the ability of customers who are buying it or buying it not. Is there a big change in the last couple of days, years, months? And what is it? What's the difference now?
Yeah, so actually, see, initially, as I told you, this is an additional product for us. Okay. But now it's a must-to-have product. Yeah. Okay. The customer, like if I will say, some customers come and they come with insurance name. Okay, I need the QIC Travel Plus. Why? No, this was not before. If I talk about the 2 years back, okay, we used to tell them, okay, you have to buy this product. Now they come to us, I need this product. Why you need? Okay, this is the reason. Where we understand customer behavior. Okay, now it has completely changed. They need this specific product. Okay, so we are going with the, complete, we are approaching the aggregators, different aggregators. Okay, what kind of product you have? Like I will give you example, Refund Me, that was never an insurance product. But now, Refund Me act like as an insurance product, where you can claim your money due to cancellation of any reason. So when you started talking to your insurance company, the biggest change what I have seen, want everything to buy online. So convincing them and giving them a tool where they can go and compare the insurance to insurance, peer-to-peer comparison, and then buy, it's behavioral changes that has come in the market.
Yeah, that's you mentioned a lot of interesting points. We can totally agree from an insurer perspective on this that it's very important for customers, travelers right now to be protected. Yeah. Of course, we had COVID, of course, in another situation, and of course, in a lot of countries, it's mandatory. But my question a little bit to you also is, how do you see the travel behavior changing in the next couple of years? Yeah? Is there anything specific you can mention, or and also in terms of embedded solution, is there anything we can help you with as a QSC?
Yeah, as a QSC or as a technology, like suppose I tell that in this region, especially C, the travel is a brick and mortar company on the model. Now we are moving from that model to online travel agencies. Okay, now people are going more online and everything. So we need a product where people can buy online very easily. Not we have to go and log in the QIC portal or any insurance portal, and because now remote work is coming. So now we have the agents who are doing the bookings on the WhatsApp and everything. So they need a system where we can integrate with the insurance companies and everything, and we can buy online, we can claim online, we can settle online. Okay, so such kind of behavior changes, and the working style of the travel agencies also is changing.
Yeah.
Okay.
Yeah.
So where we see you as a partner, where we can develop the products, different products, not only related to health only, the baggage, flight delay, okay, the claim is extended claim in the foreign countries, okay. So such kind of products, yes, we can work for sure.
Yeah, let's work on this. That's a lot of good points. Customize the product is very important. We also strongly believe in this, that you have to create individual product for every individual need. Yeah, yes. That's very key.
Like there is one product, we were thinking a lot about the student travel. when they go for, the student, they go for the some, programs, and that is changes. Okay, what will happen? And now I recall, there was one corporate I was talking, okay, and the big corporate in the Qatar, and they were saying, okay, Manoj, do you have any product like mass cancellation? So I am bringing, 200 and 300 workers, blue collar workers, and suppose anything happened with the flight or anything, you will cover this? So, okay, we have to go and we have to see if we have this kind of product, or we have to ask our partners, you can create some kind of product, because that is in the demand. Now construction is booming, everything is booming. Okay, we have to mobilize like World Cup. Okay, there's a one hotel group there who want to bring 24,000, but they want to make sure, okay, 500 people they are bringing from any part of the world. Anything happen with their flight and hotel and stay or anything, are you going to cover? So such kind of product has started coming in the market, like event cancellation. They ask for that also. Okay, I am the event company. I am arranging the event in different part of the world. If suppose event cancelled due to the surge in the cases of the COVID or anything, are you going to cover that or not? So there's a lot of new things are coming in the market where we have, as a partners, we can sit together and we can decide we can create such kind of, or we can do such kind of customization or not.
Yeah, interesting. Yeah, and let's maybe go back to the World Cup. What do you think? How good is, let's say, is our travelers for the World Cup prepared for accidents here in the country when something's happening? What are you expecting from a agent perspective? Is the coverage good? What is the procedure? Is there any room for improvement?
So actually, see, as a travel agency, we are every year bombarded with the demands, for the rooms and the cars, transfer, land arrangements, and everything. But right now, I don't think anyone here, to say that, okay, what is going to happen. We are just wait and watching till August or September, when everything will be clear. We have the rooms, we have the land arrangements, but yes, if you will go from the perspective of the arrangements and everything, okay, slowly we have started converting the bookings, okay, but when there is uncertainty, okay, the customer will or the fan will be stay here, or they will settle between Oman, Doha, Dubai, Doha, okay, then we have started creating the products. Okay, during this product creation, you have to think a lot of things. Okay, but yes, we can say we are prepared. Okay, but things will be clear after September.
Yeah, I agree on this. I think, for my understanding, there's a lot of room for innovation to, and especially in terms of when something is happening, how you interact in a foreign country with doctors. With the clinic, but now with technology everywhere, you can easily create a virtual clinic. When you have something, we heard a lot of good value proposition in terms of symptom checkers, and we don't have this right now in the country or in other countries. Here's a lot of room for automatization technology we can use, especially when you're in a foreign country. And agree with you. We can take this World Cup as an opportunity.
No, like app-based, we can create the information. Okay, you want the nearest clinic to me, where I am covered. Okay, I have the travel insurance, but I am here in the Doha. There's a 60,000, 70,000 people are watching the match, and now I have the medical emergency. I need an app. I need a system where I can see what is the nearest clinic to me, where I'm covered at least. Yeah. Okay, so such kind of things, a lot of people are working. I'm not saying, okay, we are not doing anything. Yes, we are working, day and night we are working, and other partners are also working. And then we are trying to connect from travel agency to like Doha Pass to this app developers, then this company, and then you are trying to create a complete ecosystem. where you will start from the one point and you will end to other point.
What do you think? Why is it not existing for now? Why is this ecosystem not there? Because it sounds very easy when you mention
So
this. I
actually,
agree with you on this.
To be very honest, when I started my career in Qatar in 2014, okay, from the last 2-3 years, I have seen a tremendous change in the behavior of the people, and a lot of startup companies. Salute to them. They are coming with the new ideas and the new apps, okay, where technology-wise we are evolving. We are not like, I'm not saying, okay, we are saturated with the development and everything. No. Every day we are seeing and we are meeting the people who are doing something new development, some new development in this country, and that is good for us. The new young generation, I say the 18 and 20 years people, they are coming with the new ideas. Okay, they are developing one app, okay, for the sightseeing and everything. They are okay with the travel agency, with the insurance, with the hotels, with the rental cars. Okay, so yes, but we are in the stage of we are evolving.
You're saying that more or less the ecosystem is not working because no one is connecting the dots.
Dots, yes, that is completely missing.
Yeah, and do you see that you can play, let's say, a more important role in the future on this? Because we agree on this. We see that travel insurance makes sense when you connect different players. For example, when we work together as, for example, QSC and Regency, we can connect other, let's say, vendors or other providers of services in travel. That's where the magic is.
Yeah,
but
sure.
what do you think from your, because you know the industry, what is stopping this development?
So actually, see, as I told you before the COVID, okay, insurance was, a part of to get the visa. Nothing like, okay, I need insurance. No. Okay, if you give me an offer, okay, you don't require insurance to get the visa, I will not buy. Okay, but now, after the COVID, things have changed. No. Customers are coming asking for I need the insurance. Usually in the brick and mortar company, okay, and this region which I have found, okay, people mainly rely on the travel agencies. Okay, they walk in, they talk, and then they buy. Nothing that, okay, you have one platform where you can go and compare. Okay, even though I need insurance, why I need this insurance? Why not this? Okay, so then we have started, moving our business model from the brick and mortar company to travel technology company, where we are trying to create an app or create a system where you can go and you can buy product what you want. And then for that you have to approach the social media and everything, where you can at least educate the customer, your end customer, okay, what we have and what you can get. Okay. Then, please.
No, I think that's a lot of valid points, and I'm not sure if you're talking to me as QAC, with a wish list, or but I think we can make this happen.
Yeah, sure. I know. Like I always say, this is not a time when you have the ready-made product and you come to okay, buy this. Okay, no. Now we do the study. Okay, we see where customer is dropping. Okay, why they are not interested, and then we go to our partner. Okay, is it possible? Then instead of this 4 product, you can give us 36 product. A small. Yes, the premium value, the unit value will be less, but you can sell more to customer. The customer will be more interested to buy such kind of things, rather than okay having you are covering the 10 points. Okay, and the cost is very high, because this market is also we have to understand this. 60% is blue collars, okay, and the 30% is the white collars, and the 10% high-end customers. So you have to look after every segment, and then you have to create the product. And yes, for that we will discuss.
Let's do this. I think it's good words from your side. Let's create something together. And let's hand over to the next speakers.
Yeah.
Thank you very much.
Thank you.
Pleasure.
Thank you, Timo and Manoj. And now let's move to the. Just let me check. Yes. So let's have now, it's actually the travel panel. Is it again the travel panel? No. Yeah, then the script is playing with me. So,
I do apologize for this.
Yeah.
So let me introduce this panel.
All right. The stage is yours.
Thank you.
Come on, thank you.
Yeah, so this script has been written yesterday at 2 a.m. somehow, so. Look, I'm delighted to be here, and I welcome the panelists, right? Ahmed, Louisa, Chirag, Manish. Please come over. Where's Daniel? Oh, Daniel's not around. So maybe you're gonna join in a few minutes. Cool. Glad to have you here, guys. How do you feel?
Is this on?
Yeah, it's on. It's working.
Hey. Yeah.
Hey.
Let's wake everyone up.
Yes, wake everyone up. Yeah, actually. So
I'm cold.
Yeah. There is less people. So. Oh, here you go. You were hiding somewhere. Well, this is what VC does, right?
This is what it is about always.
Yeah. No. Cool. Look, I've seen the faces around. People are tired, right? And eyes are closed, right? So let's make it sweet. Let's make it short. Let's make it concise. We're going to talk about money. Money is fun, right? Always, right? So we're going to talk about venture capital from an InsurTech perspective. We'll go global, then MENA, then we go early stage, late stage. And let's take 30 minutes to cover this topic. Without further ado, I invite panelists to take 2 minutes or 3 minutes to introduce themselves and maybe the company as well. And obviously, I'm going to start with you, Louisa.
Okay, ladies first in this case. So I'm Louisa, and I'm the Senior Program and Partnerships Manager for Plug and Play. Plug and Play, I'll just try to be brief, we do a lot, but then we're early stage investor, the most active VC in the world, with over 300 investment per year across 16, I believe, industry verticals. We are also the largest corporate innovation platform. What does it mean? Really supercharging the efforts of corporate partners, a government organization in their innovation efforts, and matchmaking them with great startups. And 3 is your typical, not so typical accelerator program. There is non-equity. So, okay. And we have over 40 locations globally, and our headquarters in the Middle East was established in 2018 in Abu Dhabi. We're expanding rapidly in Saudi and inshallah soon in Qatar.
Inshallah, I had the opportunity to work with you guys in Asia, but back then a few years ago, and you guys are doing an amazing job globally. So thank you for being here.
Thank you,
sir. And
hi everyone, I'm Manish Mittal. I'm with QIC. I think by now you guys all know who QIC is. I work on the investment team. It's actually Epicure Investment Management, so we are the asset management arm of QIC, wholly owned by QIC. My focus is I manage the alternative investments. Within that, our focus really is private markets. So it's mostly allocating to private equity funds, private credit funds, VC growth funds, anything sort of with that closed-ended drawdown type structure, illiquid type fund opportunities. We also invest, we co-invest alongside our GP partners, and we occasionally invest directly into companies as well, either in a round or by acquiring shares in the secondary market.
Thanks, Manish.
Cool. Hello from my side. My name is Daniel Dosreis. I'm the investment director of Wamda Capital. We are an early stage VC firm based in Dubai. We're one of the kind of founding pillars of the regional startup ecosystem. I think if you're a startup or investor or a stakeholder in the startup venture capital ecosystem, you might have come across Wamda. You might have seen some reports. We kind of mainly doing investments. We do early stage, as I said, in the MENA region. We are agnostic. If you look at our portfolio, we have 60, I would call it assets. We have direct investments. We do fund of funds. And I guess I will tell a little bit more about it later. Me personally, I'm now roughly 2 years with WAMDA. Before that, I was 5 years with the government-owned Free Zone in Dubai, running their small kind of VC unit. Before that, I was 3 years from 2012 till 2015 in Riyadh, Saudi Arabia, building up and managing the corporate VC arm of Etihad Etisalat, the second telco. We invested in a bunch of companies. Actually, the first investment was on Rami, which just SPAC'd in the US. So it kind of takes 8-9 years till you see the fruit of labor. And before that, I was a consultant, so I'm German. I'm not from the region, but I'm since 2012 permanently here, and I came here the first time in 2004.
Thank you. Hi everyone. My name is Ahmed from Anthemis. We're a global fintech-focused VC with 1.8 billion of assets under management and over 185 portfolio companies. We focus on numerous types of stages, from early stage to growth, and we have a thesis around embedded finance, which we can delve into as the day goes on. But we have investors all over the world. Half our LP base are large financial institutions. Some investors are here on stage as well, and we focus on fintech and InsurTech as well with a dedicated vehicle. I manage the region for Anthemis, and happy to be here with you all.
Awesome, thank you. My name is Otman. I'm looking after CVC practice at QIC DVP. And I'm delighted to have you here around. And let's maybe start this discussion by the elephants in the VC room, right, which is the downturn. We are all reading the headlines lately, right? So money is not flowing anymore. VC winter, startups have hard time to raise money. What's going on in this VC world this year? So I've tried to do my homeworks yesterday, and maybe inflation and interest rates and excess of capital is one of the reasons. But I would love to hear your perspective on those on this topic. So maybe Manish.
Sure. So it's easy to talk about what happened after the fact, right, and why it happened. So there are several factors, obviously, I think, for the downturn, right? One is just fundamentally speaking, finance, a simple DCF. You think about how a DCF works. You're basically projecting future cash flows and then discounting that back to the present, and then you're coming up with your value, right? So if you think about growth funds or growth companies, these are companies whose cash flows are not expected to occur until far into the future, right? They're not profitable now. They're not expected to be profitable for a while. So when you discount as interest rates go up, you use a higher discount rate, you discount those back, and you come up with a much lower present value, right? So, fundamentally speaking, the further out your cash flows are expected to be, the more you're going to be impacted in your valuation by a change in that discount rate. And so higher rates is I think, one obviously cause of why growth companies tend to fall in that environment. And then obviously, other than that, you've had sort of an unprecedented bull market of 10 plus years, 12 years. Things were looking in many respects somewhat frothy even coming into the pandemic, and then you had trillions of dollars of liquidity, which just exacerbated that, right? So you had really ridiculous valuations out there. Multiple companies trading at ridiculous multiples of revenue. So many companies, billion-dollar plus companies that had no revenue. You had a high IPO activity. You had the advent of the SPAC market, which, not to belabor the SPAC market, but that was, I think that's a very broken structure and a huge misalignment between investors and sponsors. Sponsors' only objective is to complete an acquisition, regardless of the valuation or anything else, because that's when they get paid out. So you had these SPACs acquiring businesses at valuations that just made no sense. So I think that's part of it. And then so that's the public markets, but then private markets, there was also so much capital raising in VC for many years now, and that had grown at a faster pace than anything. So if you think about 10 years ago, the VC universe represented maybe 15% of the private equity universe. Today, that number is 30%, or it's I think $2 trillion of AUM in VC, $6 trillion in private equity. Private equity's grown quite a bit, so that just tells you how much VC has grown. So, a lot of capital been raised, frothy markets, and so I think, and then obviously the interest rates, I think it was kind of inevitable.
Thank you,
I think
Manish.
that's where we are now.
Yeah, thank you. Louisa, any views on this?
I mean, I'm more, I would say you have the global landscape and then you have the MENA landscape. Yes. So on a global scale, obviously, I believe it's more a correction. We're going to experience a correction because the market was overheating last year with, records have been shattered every month, every quarter is like a record break-in, like across multiple sectors, especially digital health. So right now is like, from a VC perspective, it's like, okay, let's step back and really evaluate why are we investing in this sector, in these technologies, what's the long-term strategy when we put our money in. And it's great to invest in great ideas, but what about the pure, the tough metrics that we need to put in place to really evaluate the solidity of a venture? Yeah. So that's on a global scale. It's dark and gloomy, but for me, I think it's undergoing correction. But then on the other, what you see in MENA, quite interestingly, is kind of the opposite. We are experiencing triple-digit growth in VC funding. I think it's 161% in Q2 of 2022 in comparison with last year. So for me, that's exceptionally good because you also have foreign VCs coming into the region, like Sequoia now is very active. Yes. IGAN has just have a 200 million fund with Faisal Bilhoul to invest in MENA-based digital health startups. So again, probably it's a way to look elsewhere in a market where there's a lot of up-and-coming startups. We're just waking up to this tech boom. So I would say it's more optimistic out here.
Okay, well, glad to hear this. And I guess, Ahmed, this is the right momentum for NTMS to be deployed in the region, right?
Yeah, no, absolutely. We have a couple of companies here, and I think we will be doing more for sure. And I think MENA is definitely catching up to a lot of other jurisdictions and geographies, and that's why I'm at Anthemis, Ahmed from Saudi. So I do fly the flag internally around the region, and we're looking at doing 10% of our next fund in the region, and adding as well other geographies that might be kind of outside MENA, like Pakistan and maybe Turkey as well, in terms of investing on the early stage. But back to your kind of question, I think on the echo what Manish was saying around the public side. I think if we look at where PE ratios were trading at 23 times during 2020, 2021, these are anomaly years really. Last year was where tech valuations were going. There was always going to be a correction. And we're seeing a bit of that now. Now we're starting to see PE ratios at 16 times, which is a bit more in year of the kind of 10-year average. And from the public side, it kind of trickles slowly down into the private side, and we're slowly starting to see that on the higher tech side. If you look at where the likes of Klarna, I was in the economic forum earlier, and Elon Musk came out and he said, there will be some layoffs. We're starting to see that quite a bit on the higher tech side. We're seeing as well on more Europe, the US, Series A's have decreased in terms of size by 29%. So there is a bit of punch and feel towards on the private side. But having said that, to end kind of on your question on a good note, venture really does well during times of crisis, right? And I think that just after the Great Depression. We saw venture doing 16% IRRs.
Right.
So it does really perform really well. Great companies came out after 2008. The WhatsApps of this world, the Slacks, the Airbnbs. So, there's got to be a lot of vacuum of capital, but those institutions that don't keep investing in the asset class won't reap the rewards. And I think we'll start to see more rewards and more great companies in MENA as well. So, that's what we're looking at as well. We have more products coming out on the venture debt side in the future that could be interesting as well for founders and entrepreneurs that don't really want to dilute themselves too much. Venture debt might be an interesting product for them. But that's where we kind of stand on MENA.
I agree with you. After every big party, you need to clean up a little bit to rebuild then, right? So, Daniel, you have a great look at the MENA region for the last 2 to 3 years. So would you double down what Louisa is saying as a trend, maybe from an early stage perspective? Money is still there and growth is there?
I would say we go in the right direction. I think if you put venture capital dollars in relation to GDP and compare it with other regions and countries, then we're probably lacking quite a bit. There are some exciting developments. If I think back when I arrived here back in 2012, there wasn't much. There were maybe 3-4 VCs. They still exist. It's kind of the MEVPs, Beckos, Wonders of the world. Then came STC Ventures and so on, but it was very kind of nascent, very early. I would argue we saw a few big trends. One is emerging ecosystems in Saudi. Riyadh has really catched up. Saudi is really a hotbed. Cairo, fintech in Egypt is completely booming, completely out of control. Fintech in general has made a huge step forward. I think if you look at numbers, I think we publish numbers, Magnet published numbers. If you look at it, it was e-commerce and then fintech. I think now it's probably equal or even fintech is leading. A lot of money is flowing into fintech. So it is exciting. We're going in the right direction. We also have international investors knocking on doors. Kingsway, Sequoia Capital, Left Lane Capital, Tiger. We see those things. That's exciting, but overall, it's still, let's say, we're lacking behind.
Yes.
There is a lot of angel activity, but when it comes to Series A, finding a VC who is able to write a check of, let's say, $6 million to lead the round in a $10 million round, that's already a little bit more tricky. Later stage, you again have then the big boys coming. They can write those checks. But in the middle, Series A, I don't think it's super easy to find a lead investor who takes a significant chunk out of a $10, $12 million round.
Mm. Okay, and there is also a lot of CVCs in creation in the region more and more, and we're happy to be one of them, right? So maybe to give a bit of context on my next question, we've seen on the last 15 years VCs pouring money, investing in startups, and that have driven innovation, tech innovation especially. We've seen that in the consumer market. We've seen it a bit later in the financial services market, fintech first, and then InsurTech, the little boy, later. And consumers today that are used to buy on Amazon or Talabat or whatever, they want to have financial services and now even insurance, right? Experienced the same way. So from a trend perspective, maybe Ahmed, how do you see now the fintech / InsurTech innovation going on? And also from Antimis VC perspective, what are you looking after actually in this new fintech InsurTech arena?
Yeah, so since inception at Antimis in 2008, where people called our founders Sean and Amy crazy for starting a fintech-focused VC, we've always had this thesis around embedded finance, and today you hear it everywhere. Everyone on the websites writes about embedded finance. But for us, it's about how does fintech interact with other sectors like mobility or healthcare or travel. And the main example that we always give is one of our companies in the US called Flow. And Flow Technologies were these two founders in the US that created really an IoT device that plugs into your water mains at home and detects any water leakages. And I remember, I was in Anthemis at the time, but the team tell me that when they were trying to get this through LPAC, our limited partners were saying, what are you guys doing? You're a fintech-focused VC, focus on fintech. But when we started to dig, what we saw is actually water leakages in the US are the second biggest insurance payout in the entire of the US. And that's why we invested in them, and they were bought out by one of the largest incumbents in insurance for over $1 billion. And we've always had this thesis of the intersect point of fintech and other sectors. So, Uber, everyone uses Uber in this room. One of the best features about Uber is its payments element. So you finish the journey, you leave the car, the payment solution is embedded in the experience. You leave, you don't really have to look for your change or your receipts. For us, that's fintech being invisible and embedded in the experience. And that's our thesis around fintech. It's always looking at that intersect point between fintech and other sectors. And sometimes you'll look at our 180 plus portfolio companies and we're adding 30 on top of that every year. And it might not look like a traditional fintech company, but there's always a data play around fintech or insurance in that. And that's some of the things that we look at. And the investment team across all the teams, we get around 4,000 deals a year in terms of pipeline. And a lot of those that get funded by us tend to be playing in those intersect points. So making fintech kind of invisible and embedded in the experience.
I want to leverage a great view, global view, and then now MENA view on fintech, InsurTech. I've been lucky enough to be in Europe when fintech started to be hot, and then InsurTech was invisible, but then grew a few years afterwards. Same trend that we have seen in China, and I have the feeling that today InsurTech is growing. Out of the family, wants to be visible and not just under the umbrella of fintech. Do you see this trend happening in MENA? Are we in the year or maybe 2-3 years behind?
The one point I'll give, and I think my colleagues on the panel might be best to answer it, who deploy more in MENA than we do. But one thing that we've been seeing is, and probably why we're all in this room, is the incumbents are really doing something about it now, and they're understanding that, at Anthemis we've always designed ourselves to be right in the middle between the startups and the incumbents. And if you look at our LP base, it always tends to be like that. And, more developed markets, we're seeing the incumbents really go out and invest in InsurTechs, but also partner with them. Especially on the healthcare side, there's always a regulatory kind of burden on them, so making sure they understand that. And we're seeing the incumbents, really go in and invest a lot of money. And, we have a dedicated growth insurance strategy, and most of the LPs there are the largest insurance companies in the world. So we see a lot of the incumbents really wake up and do a lot of things about that, but also invest. And all the great stories that we've heard around the world about InsurTechs, we're seeing starting to come out in the MENA region as well. But the incumbents are moving here quite quickly, which I think will help the ecosystem grow. Partnerships will be really at the forefront. And we're seeing some portfolio companies always asking us about, how do we scale in MENA? And that's one of the things I look after at Anthemis, is scaling out some of our companies and partnerships to MENA. And I think speaking to incumbents now, they're much more well receiving of companies and partnerships, which I think will continue to kind of help insurance and InsurTech in the Middle East for sure.
Thank you, Ahmed. Well, thank you for the transition, because we wanted to cover up also the VC/CVC topic, and maybe Louisa, this next one is for you, right? Because CVCs have been following up with the VC trend, trying to mimic a bit the different strategies, etc., not to be left over, right? And we have seen this trend, rising trend of CVCs in the last probably 6 to 7 years, right? And you guys, Plug and Play Global, are well positioned, right? With to serve the corporations in this sense, and to teach them how to build CVC strategies, and even help them, with startups sourcing and LPs connections, etc. With your great platform. How CVC is doing in MENA?
Do you want the raw answer?
No, please, go ahead.
Unfiltered?
So, no.
I think CVC is new in the region, and you have to do it for the right reasons, not because everyone is doing it, so we should do it. The key ingredients for CVC, like opposite a VC is looking for financial returns. A CVC has two ways, either obviously financial returns, but also strategic goals, like maybe is to solidify their position in the market or bring new products to the market, new services. So especially in a market that we're experiencing now, like in gloomy market, at least they can focus on investing in startups that will allow them to have that align with their strategic goals if no immediate financial returns are possible. So they can play around that and attract startups, because it's not as easy to attract startups to have a CVC on their cap table, because it's a myth, but sometimes it's true that some CVC in experience would put stringent conditions about, you cannot, if I'm Pepsi CVC, I would tell you as a startup, you cannot work with Coca-Cola, which stifles your growth and so on. So I think it's really a matter of why you create that CVC arm. What's your long-term strategy? What is your investment thesis? And this is what we've been helping our corporate partners with, because Plug and Play was in a privileged position because we're wearing multiple hats. So we're VC ourselves. Yeah. We accelerate startups, so then we see how they interact with our corporations. We identify the bottlenecks. We identify corporations from within, how they function and why they can work with the startups. So then we're able to capitalize on a lot of knowledge and insights to tell them, that's the benchmark for your industry. This is the type of technologies that are hot. Those are priceless information that you can build a team from outside, but it will take you more time to catch up versus a typical VC. So in a nutshell, surprisingly, globally, we've seen this CVC as a service being developed from Plug and Play, and it was actually demand-driven. Our own corporate partners came in and say, hey, can you help us? We're setting this up, we're having a team, but we don't know where to start. And especially deal flow access, high quality, how do you have a solid pipeline of good startups? Yeah. How do you know they're fitting? We do that day in, day out. So then we're able to help them define the thesis, define how they structure the deals, and so on, and avoid some pitfalls. Coming back to your original question, which is here in MENA, it's starting to pick up because, again, the landscape is changing. So corporates, sovereign wealth, and the investor landscape here is quite different. You have a lot of sovereign wealth funds here, you have VCs, you have now emerging CVCs, but typically it's a very nascent activity that we're seeing, and I'm yet to see actually successful CVC deals made here in the region. So again, for me, it's going to be interesting to monitor that activity. Probably, I assume they're coming from fintech first and InsurTech before. Maybe I'm shooting myself in the foot with that prediction, but a CVC in health, I'm yet to see that coming from MENA. Maybe not now.
Okay, yeah, maybe not now, but now definitely CVC in InsurTech, and we hope that this event is participating to the whole trend. Manish, the next one is for you. It's the same thematic, and you are overseeing in private equity angle from this InsurTech company. And obviously you have in your portfolio a part dedicated to VCs and funds. So from your perspective, this growing CVC trend is impacting your strategies of investment somehow? Would you allocate more funds for fund of funds and VCs and CVCs.
So you mean would we be impacted by investing in companies who are being invested into by CVCs as well?
Yeah, both. But a more risky approach, having this specific segment in the portfolio.
Yeah, look, I think, again, we're financial investors, right? So, ultimately we care about returns for the company. When we invest in companies that have VC, if I was purely objectively speaking, I would say I would prefer VC investors into companies over CVC, but it's important to have CVC as well because you want to know that there are companies in that space that validate that business model, right? So we like to see that, but ultimately CVC has priorities that are different than necessarily just gaining a financial return, right? So for us, we want to see VCs who are aligned with us in terms of thinking about these companies and eventually generating a return from them and eventually exiting them as well, because CVC, they might not care about exits, right? They can be an investor perpetually into a company, as long as it continues to stay relevant for them. Whereas a VC fund, just like us, we have certain timelines that we want to exit investments by. So,
okay.
So we like them, but they're not the most important investor for us.
Yeah, no, definitely.
Just to kind of
please
add to that, we got a call I think last week by CVC, not in the region, and they kind of did an M&A transaction where they bought 80% of this insurance company, and now they want to raise a round for this this early stage company. And they were asking us our opinion on it, and the founders were only left with 10% of that company after and 10% to the kind of other employees, and we were like, well, how does this kind of cap table incentivize the people that created this company?
Right.
And how does that all work, and how's your thinking behind that? Sometimes what we've seen in this example is CVC is just going out and investing and deploying capital without thinking of the repercussions it could have in later funding rounds. Otherwise, you'd have to have a pipeline just dedicated to that startup.
Of course, yeah.
So we've seen that kind of a few times, and CVC is just coming up with a team, and they always have the strategic angle of obviously of the corporate at heart, which is totally fine, and I get that. But there is a future after that M&A transaction that you do, because that tech company needs to go on and raise future rounds. So that's just an experience totally outside the region that we've seen too.
No, you're right. This tricky position of the CVC to connect both strategic and financial returns has always put the CVC arm into difficult discussions actually, and maybe CVC has been perceived as less sophisticated and experienced, obviously, as the VC's practice. And we have seen a lot of misbehaviors, and obviously, CVC is investing not the right way in some cap tables, and just making it hard for startups to grow, right? And have even more VCs to come to the table. And by the way, when VCs are looking at the cap table and they see CVC, sometimes they're like, oh, maybe not to me. But things are evolving, because CVC is getting more and more expertise, experience, good people, and it is getting to the right direction. And we can talk about this topic for a while. So we're 35 minutes on our panel already, and I promise to make it short and sweet. So I want to finish with a startup-related question, right? Because we have a couple of startups here in the audience. And what would you, Daniel, what would you advise our startups here in the audience? What will be the strategy to have with regards to fundraising in this downturn market?
Good question. I think it's always
not an easy one.
the good one. I think one of the advantages, if you want to see it like this, is that forces you to be very disciplined, and also kind of be very on the numbers, because I think what's happening now is that a lot of the VCs and investors now kind of looking even deeper into your business. I think before we saw a lot of kind of rounds where someone tagged along. The lead investor didn't ask too much questions, was excited, not wanted to miss out, and was not looking deep into it. And I think now you're becoming under a lot more scrutiny. Numbers will be kind of really checked into detail. Assumptions will be checked in detail. And I think you need to kind of have a very solid answer how to make money ultimately. Also kind of how much you want to raise. Do you raise enough in terms of runway? I think the old saying was always maybe 12 to 18 months. I think now the recommendation that we give and here is more like 24 months if possible, or not even more, because no one knows what's happening next. And I guess also be very clear what's your ask. So do you price yourself out because you kind of anchor your expectation very high? We have seen stuff of in the last years of, and that was, I guess, the peak, probably that was the peak, and I should have seen it, when people were coming in and said like, yeah, we're raising at 15 million pre-launch, kind of pre-product nearly, and they were funded. And those people are now having a very difficult time out there in the market, because if you anchor, like no one wants to have a down round, but that's always what we kind of preach to founders. Don't raise too high, because you're putting yourself in a very difficult spot in the next rounds, because it's a multi-round game. That's often people forget. They're very excited, high valuation, but next round then, if you cannot prove that you can take the hurdle, then it's a down round, and running around with a kind of down round it makes things even more difficult to raise. So I think I would recommend think very hard about how much cash you really need, but keep in mind you need to have the runway. I think second is have a much clearer idea maybe than before, when and how do you kind of get to maybe towards break-even level, how much funding do you need to reach the next milestone. So at the end of the day, it's about making money. And I think what happened over the last kind of years is that we switched off gravity. Everyone was jumping super high. Now they switched on the gravity, and we are back to the ground, and the question is, how do you make money ultimately?
Okay. Yeah, I mean, I would echo that. And I think, certainly, as you said, I think you guys, people here, startups here will benefit from not being bogged down by past fund rounds that were inflated. And I also don't forget, there's $500 billion of VC dry powder still out there waiting to be deployed. So that needs to get deployed. And I think that you guys are at a stage where you're less impacted by, the closer you are to public markets, the more you'll be impacted by sort of what's happening out there. And at this stage, you're still, I think your fundraising experience will be more idiosyncratic based on your own business and potential. So yeah, I think you guys are probably in a much better spot than maybe a lot of other folks.
Thank you, Manish. Ahmed, so no more growth story. Now it's profitability and enough runway, right?
I don't know, but the word profits when it comes to technology is not really surmountable. But some of the things a couple of things that we're telling our entrepreneurs is, the winter is here in venture, and I think be overly transparent. Get out your information early, your quarterly reports, your information. Make sure your investors are kept up to date with what you need or what you have. Understand, again on runway, how much you're going to need to spend if you have some, really big expectations or big plans for growth. Maybe that could be pulled back a bit. And maybe sitting on cash today and not going shooting for the stars in terms of growth is fine, and then maybe start thinking if you're going to need emergency funding to keep the lights on. Maybe have some of those investors on your back dial in terms of start having those conversations pretty early. But having said all that, we all know cycles come and go. Yeah. and there will be a pullback of institutional capital in venture. But having said that, look at the data. Us as Anthemis, when we invested in 2009, 2010, 3 examples in our portfolio today. Betterment is the largest robo-advisor in the world, 32 billion of assets, still going really strong. Climate Corporation sold to Monsanto for over $1 billion, 2010 company. Just recently, 3 months ago, Currency Cloud got approval by the Competitions Authority in the UK to be sold to Visa. These are all companies after a crisis. So if there's going to be a lot of vacuum, and the institutions that have capital will go in and pick up some really great winners. So if you look at vintages as well, look at Cambridge Associates. The vintages that really performed well were 2010 to 2016. So there will be great winners. It's just, the stakes are high. We're raising a fund if anyone's interested as well. So that's always a good sign for us. So we're doing that, and we'll continue to deploy and doing more in MENA. So.
All right. Thank you, sir. We started the discussion with you, Louisa, so we're closing it with you.
A hard task to close this panel, but I'll try not to also duplicate what they mentioned, because I agree with a lot of what you said. But I think if I had to summarize it, it's raise smart money to deploy on the leanest team that you can have to withstand, this kind of period that we're in. And I don't say that just because we write small checks at Plug and Play. But smart money is really, does this investor have the right network for you to grow? Does he understand the industry? Because we lack industry specialized VCs in the region. So it's like, who can understand what I'm trying to do beyond the financial return? So yeah, smart money is the key now, and be realistic with your valuation, and because sometimes you see wacky numbers and you're like, what? So yeah, do your homework, and but still, keep that ambition that you showed and demonstrated today. Don't think Qatar, don't think MENA, think big, because I think this region has beautiful and talented entrepreneurs to show the world. So I want to see more of that in the future.
Awesome. Well, thank you all for this. I hope you guys have learned something this afternoon with us. And let's call it a session. Thank you.
Thank you.
Thank you. Thank you. I think Ahmed, our MC, has left. He's lost somewhere. So, and again, I do apologize because I missed big time with his script. So I'll do the job for him, right? So, Jehan, I'm happy to welcome you on stage for the venture building last session, and then
we still have Google.
We still have Google. I'm sorry.
Yeah,
so,
don't worry.
Okay, go ahead.
Good. All right. Thank you. All right. Good evening, everyone. We are tasked for the, they call it the graveyard shift, and also hopefully we can do some energizing and get everybody back. So let me welcome up to stage with me Harold from SC Ventures. Harold, would you mind joining me? And then we have Christian from Vesuvio Labs, Sham from BCG Digital Ventures. Come. No protocol. So perhaps you just go around the room, starting from the far right, Christian. A quick introduction, and this is something that you do a lot, to the startups that you build, right? Give us your elevator pitch.
Well, yeah, I've been doing it a lot this week, certainly. My name is Christian. I'm the founder of a company called Vesuvio Labs. We are a venture studio, primarily looking at fintech, and about half of what we do is InsurTech. So we have worked with a lot of startups, covering many aspects of insurance. Our job is to try to make it easier for a founder with a great idea to execute technically, build their platform, get it live, grow it. So that's what we do.
Thank you. And Sham.
Cool. First of all, thanks for having us here. I guess the benefit of being in the graveyard shift is you can reflect on the day. And so it's been a great day. Thanks all for having the energy to stay with us. So yeah, my name is Sham. I'm a director at BCG Digital Ventures. Digital Ventures is the corporate venture building arm of the Boston Consulting Group. And what we do is we partner with corporates to innovate, build, launch, and scale new digital ventures. We've been active for about 8 years. We've launched nearly 200 ventures in the market, including in insurance, but we do multiple sectors. We go across industries and across sectors. We have a global presence, but more recently we've doubled down on our presence in the region by establishing a permanent center in the region. So quite optimistic about the prospects of venture building in MENA.
Thank you. Harold?
Well, thanks for having me. So I'm Harold. I work for Standard Chartered Ventures. So we're the venture arm of Standard Chartered Bank. We were created about 4 years ago, and we have 3 activities. So a little bit I would say in doubling with a previous panel. We have a VC activity where we invest in mostly Series B. We just set up a Series A and seed fund as well. And I was interested in what Ahmed was saying because we're also setting up a debt fund. And we have a venture building activity, which is looking at entrepreneur ideas and growing these ideas from simply, like a very early stage all the way to creating them externally for the bank so that they can provide optionality for the bank.
Great, no, and thanks for the introduction. And I'm Zehan, from QIC DVP. And no, I'm just anchoring on Lars's presentation this morning, right? He said for a thriving ecosystem, there were 5 challenges, and then amongst them, Othman checked off the impact smart money kind of box, right? And we're here, talking about corporates, and then how do corporates, harness innovation, and how do we work with startups, right, to create that thriving ecosystem. So Harold, in your experience, how does a company like SC Ventures work in that kind of space?
Yeah, so the way we look at innovation is, so we're innovating for the bank itself. So we have set up an entire activity with coaches and human-centered design specialists that will help the business innovate and better serve, always thinking of, customers first. So pure innovation for the bank. Other part of innovation is identifying early stage companies that can have an impact on the bank's business, on our clients, and investing in the right ones. So really a VC activity. The last part is on the venture building side. So it's really investing on the ideas of the future and creating new and disruptive business models for the bank. Just to give you a data point, we have set financial targets for ourselves. Within the next 3 to 5 years, we've committed to our board, to our shareholders, that about 50% of the bank's revenue will be coming from SC Ventures.
Wow, that's a big commitment. Christian, it's a good opportunity to be speaking to SC Ventures pretty soon.
Absolutely. And we will.
And yes, you will. And from your perspective, I think Harold came from an entrepreneur and then spurring innovation and probably spinning out or spinning back in. But Kristen, from your point of view, right? The corporates working with startups, right? And you mentioned entrepreneurs early on. So were you referring more to entrepreneurs that are within a corporate setting, or entrepreneurs that you hunt from the wild and you bring them into a corporate setting when you're doing corporate venture building?
Yeah, so there's always this conversation about whether it's entrepreneurs first or the other way around, the studios or the corporates kind of coming up with a problem to solve and then finding the right people to solve that problem. In our case, we were part of a similar journey in the UK. So we sat in these kinds of meetings 4 or 5 years ago, little kind of bars and coffee shops, and talked about dreams for making insurance better. And one of the key problems that we then discovered as we all got going with our businesses was it's very difficult to innovate in insurance without partners, because you need to work together. It's very, very difficult to cover the whole stack. So almost all of the insurance startups ended up in some way partnering with corporates. So it has become a very important part of it. Here, even more so, I would say, you need a good partner that is willing to support you. So I think we started out entrepreneurs first. We worked in that way and we helped in that way. I think gradually we are moving towards a scenario where we are perhaps a little bit more collaborative about the use cases that we want to solve with corporates, entrepreneurs, and other parties in that ecosystem.
And great. And Sham, given your experience, as a big consulting firm, right? I guess you have lots of conversations with corporates and getting into their thinking and their minds, right? What were corporates thinking? When they say they want to do corporate innovation or even digital transformation, as you've mentioned right previously.
Yeah, I think corporates that we talk to come at it from different standpoints. Some of them come at it from the perspective of let's try and disrupt ourselves before we get disrupted by a startup that comes out of the wild. Some corporates come up with venture building and venturing as part of a broader digital growth strategy. For some corporates, they are looking for ways to get closer to their end customers. You can imagine a corporate, I'm talking not in the insurance sector, but in maybe manufacturing. You're quite high up in the value chain, quite far away from the end user who uses your products. And so you have no direct feedback or no direct connection to that end user. But through digital venturing, you can create opportunities to engage directly with that end user in a way that you can learn about how they use your products. And that input can feed your own product innovation, right? So they come at it from different perspectives. And another emerging trend we're seeing is topics like climate and sustainability, right? So this is now becoming an important topic for many sectors. It's moving at different speeds in different sectors, but for many it's quite a priority. And a lot of the solutions that we need will come from improving internal processes, from fixing current ways of working. But we also believe a lot of it will come through innovation, through coming up with new ideas, new technologies, new solutions. And it is incumbent on corporates to also be part of that innovation. So for us, we engage with corporates on a number of these topics. There are a number of reasons why corporate venturing makes sense. Some of them choose to do CVC, and that's the right choice for them. But in many other cases, building your own from scratch does make sense. It isn't an easy journey. You've been through it. You've probably seen it as well. But for a corporate to say, we're going to build a venture that's effectively a startup from scratch is a daunting journey. It requires capabilities. It requires mindset change. It requires, of course, talent. But this is the journey that we're happy to take our corporate partners on.
No, great. I'm going to throw a little bit of a curveball over here, right? Since you touch upon the topic of sustainability and ESG, right? Coming from the bank, right? That's something that the guys up top are asking you to put more focus and to think a little bit more in the areas of environment, sustainability, and governance.
Yeah, absolutely. It's actually one of our 6 high conviction themes. So in the course of 4 years, we've invested in 20. We've just made our 21 portfolio investment, and we've launched 30 plus ventures from the ground up. And the way that we segment them is we segment them according to themes, high conviction themes, and one of the high conviction themes is ESG. Obviously, there needs to be a financial aspect out of it, because I think what a lot of corporates do is when they start venture building, they start with an approach of trying it out. We have a very different approach. We treat it as a business. and every venture that we either invest in or that we decide to build has to have all VC metrics. So potential for IRR with an exit and all these things. So what the previous panel was actually talking about are absolutely incorporated in the way we think. So ESG, yes, but ESG with a financial outcome and financial inputs.
So investability is one of those matrices that I guess all of us will look into when we launch or start a startup, right? Christian, I see you having an interest in trying to.
Well,
to add
no. I'm actually totally different, right? We're an independent studio. We pick founders based on whether we like them. We think they have a cool idea. To be honest, the pitch, it never ends up being the thing we build at the end. So to me, it's much more about, is this the right person we want to go through this with for the next 2 or 3 years? Do they know things? Have they worked in the industry? Do they know what they're trying to change? That's what we obviously we're coming at it from a completely different angle.
But I would just say it's not a different angle. It's the same angle as we look at the team as one of the core foundations of a successful venture. So the team needs to have the right set of expertise, the right entrepreneur mindset in order to be successful, but not only.
So how would BCG look at these?
Yeah, I mean, again, team is fundamental. People is fundamental. It's easy to focus on the technology and the product because you can get that into the market and MVP in 6 months. That's great. But for the venture to succeed over a 5-year horizon, it's the team that takes it there, right? And it's the conviction of the team that can get you there, the persistence and the willingness to go at it. Which is why, again, in the context of corporates, it's important that you incentivize a corporate-owned venture and the team in the right way. Having said that, though, how we come at it, we also place a lot of emphasis on unlocking corporate assets. So when we talk to corporates, we try to see what assets they might have within their group or portfolio that they can inject into this venture that can turbocharge the venture. And these assets can be physical assets like distribution channels, physical touch points with customers. They can be digital assets like a billing relationship that you already have from a product or service, or customer data, or they can be intangibles like intellectual property, right? Patents that you have sitting around that you haven't found a way to commercialize, and we can help you do that too. But that is the starting point, right? That's what seeds the ideation process. This is how we say, this venture makes sense for you to incubate and build, but then it comes back again to having the right team in place to see it through. So we do come at it at maybe a problem-first approach. So what is the problem we're trying to solve, and how, and why are you the right corporate to take that on? And then we quickly bring in okay, let's now think about the team that can do it. And because we are kind of full service, we build the ventures ourselves. We can get it off the ground, and in that process also build up the team that will sustain it over, let's say, a 5-year period or even longer.
Okay, great. So we touched upon investability, we touched upon teams, we touched upon ideas, but still very often you hear, right, horror stories about ventures being started or being spin out from a corporate venture building kind of environment. But couldn't quite make it past the early stage, right, of getting in external investor, and many of them do sort of frame it around structures, right? The corporate structure of the basic setup or the fundamental setup. So in your respective views, how would you see and how would you think the corporate structuring as early on as during venturing when you found the ventures, right? How important is it to set off with the right structure? Anyone would take it? Let's have it open. Yeah, Christian.
There was definitely a tendency to create these innovation labs or garages or whatever they were called, and not necessarily connect them well with the rest of the organization. So it was a sort of pet project where they didn't actually give enough authority to the people that were running these labs. So what happened was a lot of MVPs, POCs, and so on were created, but not many of them were actually turned into real businesses and real businesses that were serving real needs within the organization. because the people with the budgets had completely different objectives than the people that were running these labs. So I think what we're seeing now, which is good, is more connection between the overall strategy of the corporate and why they have this lab and what they're doing inside of the lab. And I think that's what we need to see, because otherwise you would build hundreds of POCs. And actually the worst thing that can happen to a startup is that they think they're going to do this deal with the corporate, and then they don't, and then they're dead. So actually a lot of startups ended up dying because of that relationship rather than succeeding. That is changing to some extent, and that's a great thing.
Yeah, I would echo what was said. I think it needs to be more than a pet project, to what you were just saying. Building a CVC and a venture building activity inside a big corporate takes more than just putting a pinball machine and a few ping pong tables. It takes real commitment and with a strategy that needs to be at the highest level. So you need to have the commitment from the CEO, from your board, that this is actually a real transformation strategy for the company and not just a fun, nice to have activity.
Yeah, great. Yeah, I can add on this. I mean, completely agree. This is fundamental. Having support from the very top is fundamental. The venture builder, the studio, whatever we call it, and the ventures it creates, it's going to function differently from the rest of the corporate. It's going to move at a different speed. It's going to have a different cadence. It's going to have a different risk profile, right? What we often find is with corporates who are used to investing in large capex projects, building a plant, building a factory, it's very predictable. You make this big investment, and then the returns are very predictable. With a venture, with a digital startup, that's absolutely not the case. And so the reason why the senior leadership involvement is necessary is they need to understand you're entering into a different type of endeavor. And so it's important to empower the venture builder with the right level of decision making to take those risks, to try different things. If it's not working, fail fast and move on to the next thing. Get to market quickly, even before it's done. All the things that any entrepreneur will do and feels very normal in the normal entrepreneurship VC language can feel quite alien in a corporate context. And so it's important that the venture builder and the studios are set up with that understanding, and that requires backing from the very top, but then also be prepared to see things moving in a different way and in a different speed compared to what you might be otherwise used to.
Yeah, and no, I hear mindset change, mandates, big boss at the top, giving the instructions or the firepower behind, right? But you touch upon this very one interesting topic, right? Risk. And lots of corporates don't like this word, right? When you talk about risk, they go, ooh, how do I avoid, mitigate? It's all about mitigation, right? And how do we help change that perception, right? That this is a risky venture into a perception of perhaps let's just take small bets, right? It's a small controlled bets, right? And then how in your experience have you managed to convince your stakeholders, right, in getting into this realm of this is a risky venture into, okay, let me experiment, like you say, try fast, fail fast, right? Perhaps starting from you.
Yeah. I mean, I think there's different approaches a corporate can take when you try to rationalize taking on the risk, right? I talked about corporate assets. That is a big factor that de-risks the venture, let's say, compared to a venture that's not backed by a corporate or not built by a corporate, right? I mean, really, you need the corporate to inject those assets, make those assets available to the venture to be used, and that actually de-risks it quite a bit. It can de-risk the product, it can de-risk the go-to-market strategy, it can de-risk various things. The other approach, of course, is to do what a VC does, which is to have a portfolio, right? So don't bet on one thing, bet on a portfolio and look for complementarities amongst that portfolio of ventures. I mean, I'm sure you guys do this as well. And so, again, not think of it as one project. It is exploration, it is trying different things, but it's trying things with a concrete strategy linked to what you're trying to achieve as an overall corporate, right? What is the overall corporate objective of doing venturing? Is it exit? Is it strengthening your current business? Whatever it is. But look at portfolios as a way to balance a little bit that risk and then help the ventures you create help each other to some extent.
And so how does Vesuvio do it, right? No.
Well, it depends. I mean, we do work with a large insurance group at the moment, and the way we got to work with them was they bought some companies that we worked for. And then we had the meeting, and they were, when we said, well, we're already doing it. You just didn't know. And the other thing you didn't know is you bought these two companies, and they're integrated, and we did it. So sometimes they sort of have to wake up to it. We like to say to them, okay, you have a problem in your IT department. You have an enormous budget in your IT department. And you spend it on, fixing your systems or operating your systems. You may consider looking at the opportunity for that to be a profit center rather than pure cost. I think there's a certain amount of excitement within an IT department that is used to presenting them just being a cost, to turning into something that is actually part of the, the profit entity within a profit center within a business, and they can be part of actually the value creation for the future. So I think it starts with these kinds of conversations about what you're going to invest in this anyway. Should it just stay within your your back office, or should we perhaps look at whether that could be a product that we can sell to the world? So that's one way. The other way is clearly when it's entrepreneurs first. Someone has a great idea, we start working on it, we go and show it to them, we tell them how it can potentially help improve their business. And then we find the one or two corporates that perhaps are willing to go a little bit on that journey, to take a little bit of a risk. So it can be both ways. It can be present them with a sort of prototype, or go and have the conversation about why looking at this as a pure consulting project.
And Harold, could you share some of your experience there?
Yes, I would say a few things about risk. So first of all, we're a bank, so we mitigate risk on a daily basis. We have a whole department around risk, but so risk could be many things. It could be financial risk. It could be, in our case, reputational risk. It could be data privacy risk. So there's a number of risks that we need to identify, and we need to mitigate and decide whether or not it's something that is a show blocker, or that we can that we can decide to investigate. The other part of de-risking is working in a lean way. Working and investing in a lean way with reporting. So we also work with what we call OKRs, which are setting up the objectives, key results. So making sure that companies we invest in, companies that we build are on track, and I would say build lean, invest lean, and keep on tracking on these objectives.
Of course, you are blessed by with having a CVC, backing you, a fund backing you, right? I think in Vesuvio's and even in Shyam's case, do you have a fund that's continuously backing and supporting you in the various stage gates?
Yeah, I mean, in our case, so the Boston Consulting Group does have a fund as well, the Capital Group, but it's quite distinct from Digital Ventures, right? So Digital Ventures' mission is to invent, build, and scale ventures and new digital businesses partnering with corporates. So usually it's the corporate financing that's powering the venture, and then over time you can raise and bring other investors on board. And DV, we can take a small equity stake in there as well. But it's typically the corporate that's the founder, right? That's financing the venture.
So from the shareholders fund.
From the shareholders fund in the beginning, yes.
Okay. And would you see that convenience in something that you would love to have?
We would love to have a fund. So hook me up. So what we did was a little bit different, or very different, because initially we worked for corporates for money, and we took some of that money and invested in the startups. So that's kind of how we started, actually. So we ran a very weird VC, a cashless VC almost, where we earned some money to survive over here, and we used that to invest in startups, invest technology and time in startups. Now, both are great, because startups are willing to take more risk, try more things, do some little bit cooler things. Where the corporates have money, you need both, right? Now, so over time it gets a bit more mature, and you might be able to take some of those great ideas and bring them back into the corporates. That's done us pretty well, but in terms of really scaling it, yes, we need more capital.
Yeah, no, even in the research and whatever that I've looked up, you're starting to see the emergence of a hybrid model, right? The hybrid CVC or hybrid CVB, right? Coupling the build, with the invest, because the invest side will always like to know what you're building, and therefore doubling down. And the build side, like where Christian is, we're always like, can you give me more money? No, because I need to build the cool stuff. Are you observing those kinds of trends in your respective regions, right? I think we all know it from UK, in the Middle East and in Asia, right? Now, yours a bit more diverse, of course. Do you see that trend, happening, in your respective regions?
So I think it depends on the themes. It depends as well on the regions. So we invest globally, and we build ventures globally, as long as it's within the footprint of our bank. We're careful in the way that we invest and in the way that we build. So we won't necessarily put a huge ticket initially. We want to test, and based on how well our initial decision is being made through the periods of incubation, through the periods of initial stages and so forth, then we'll put a bigger stake into it.
Thank you. And over in your part of the world, do you see that emerging, or it's still a very rare trend to see hybrid models?
Hybrid models.
Hybrid venture. So the venture builder does come with an investment so-called capability, something that you're trying.
No, that is what a venture builder is in theory, right? So we in a way only half of a venture builder, right? We are, in my opinion, you need to do a very good job, you need to have a venture studio, a capability to help these ventures from an execution point of view. So that's what we do a lot of. And then you need some money to invest in doing that and in growing the business. So in a way, we are sort of half of a venture builder. There's a lot of VCs out there that have rebranded themselves venture builders. They are effectively that other half, and hopefully we can come together and deliver strong results as a collective.
So Sham, any near-term goal in setting up a fund for yourself?
No, but let me give the MENA view, or at least my view on the region on this trend. I think it's still early days in MENA, at least amongst large corporates on the whole corporate venturing topic. It's definitely gaining a lot of attention. It's gaining momentum, but I think corporates are still slowly figuring out how to organize themselves to take advantage of this. Whether it's setting up a fund, whether it's setting up a venture builder, whether it's both, how close to each other should they be under the same umbrella, whatever it is, right? So I think it's still early days, but I think the understanding will come quicker than we think. I think corporates here will wrap their heads around the advantages, the challenges, but the benefits of doing all of this a bit quicker than we think. And I think that will then help power more entrepreneurship, more innovation, more unicorns from the region, right? Which, I mean, we've noted throughout the day. There's more ahead of us than behind us on that journey. And we think corporates have a big role to play in that. But as I said in the beginning, it is a challenging and daunting journey for a corporate to suddenly wake up one morning and say, we're going to do venturing of whatever kind, investing or building. But it is a rewarding journey. And if you're convinced that's the right journey, then set it up in the right way, put the right resources behind it, put the right team behind it, and the rewards will be there at the end of it.
I think just back to what Sham was saying at the beginning, the big advantage that corporates can bring to the table is their existing connections with the market, with the customers, their physical assets, their relationship. In our case, for example, the relationships we have with regulators, or connections with other potential investors or other potential corporates, and it's all of that we can bring to the startup ecosystem.
And that's even more true in insurance, right? Because you need an insurance product. You need capacity from somewhere. You need regulation. You need some sort of access to a customer base. There's a lot of things that you need. You might not be able to do all of the activities yourself initially, so you need a claims partner. You need, all sorts of things. And if the corporate is willing to open up its, inventory and allow you to kind of focus on the one thing that you want to do a lot better, it's really what you need as an InsurTech startup. And it's also, I believe, what the corporate need, right? Because they need some people that are out there trying really hard to take that piece and making it really great. And that's not something that usually a corporate would do. They would sort of be more incremental in their innovation, let's say, small iterations, where this gives an opportunity for both sides to actually take much bigger steps.
Well, so hopefully QIC, DVP can lead the way and be that shining beacon in this region. But before we close, I'd like to open up to the floor. Are there any questions that anyone would like to ask to the panel audience, panel speakers over here? You're going to ask, Othman? Yes.
Thank you. Look, you've touched base on this question and this topic that we always, talk about. In venture building, in corporation, do you start by building the business and find a CEO or a manager to manage that business, or do you start by finding a founder with the right mindset and build it on the go, right?
Yeah, I think in our case, so we're similar. We were a big corporation. In our case, we start with a founder. The founder has the idea, has the expertise because he knows the business. He understands very well the whole ecosystem. But he's never done it. He or she has never done it before. They've never had an entrepreneur experience. So at some point, you will need to find a co-founder, potentially a CEO, and pair that externality to the initial founder.
Sean, in your experience?
I mean, I think our approach is much more problem first. And the reason we think that approach works well in the way we execute is we have a very rigorous methodology that we put behind it, right? So it's market research, validated market learning, rapid iterations, quickly building small incremental stuff that we test, and trying to get a sense of problem solution fit, product market fit, whatever, as early as possible, right? And so once we're convinced that the solution meets a real market need and there is a real gap that we've identified and the all-important corporate asset is there to turbocharge, that for us gives us the conviction that this is a venture that is worth building, can have legs and can sustain. But then, as I said, the team comes in really quickly. It's not to say, after the fact, we go find a bunch of people to run the venture. That's not how we do it. But let's say the incoming focus is to try and find an opportunity and then prove out as best as we can that opportunity in as lean a way as possible, and then bring in the team.
Christian?
So far, it's been more founder first. So people would have come to us with great ideas, typically people from inside the industry, worked there for 10, 15 years, been very frustrated with something. They know exactly what they want to do to change that. They have no clue how to build a business. It's the perfect founder for us to work with. Now, when you hear this a lot, that the serial founder, the second, third time someone is founding a business, many investors would rather invest in someone like that. It doesn't matter if they failed the first 2 times, because they learned a lot. Because starting from experience is very different from starting from scratch. So a venture studio is effectively serial entrepreneurship at scale. So now we are, of course, trying to match our capability. It makes no sense if we don't work with founders or problems that fit our capability, because then we won't leverage our experience to help them the best that we can. So it's sort of changing a bit, where initially it was like, you have a great idea, let's work on it. Now we have sort of found a shape, and so the ideas have to be inside of there for us to be as good as we can possibly be.
Thank you. So Othman's a Thai, by the way.
Sorry?
No, he and I had this ongoing debate, how should it be like, so we want to use this opportunity to validate the assumptions that we had. But any more questions before we close, right? And again, right, so before we close, right, just from each of you, right, if you were to give corporate advice to embark on this corporate innovation journey, right, starting from you, Christian, what would be that one thing or 2 things that they should think about, and consider before embarking on this journey, right?
Well, 2 things.
3 things or 1
Okay,
thing.
let me give 2. One nice one, and
okay.
I will say it's important that when you commit, right? So what do I mean? I mean, if you have this lab, the person you put in charge of the lab, you give some money, and you make sure that they know they have to spend that money. You don't turn them into these kinds of, that have to look for budgets every, 5 minutes, try to, because that just is a corporate, right? You have to separate it out, give it its own budget, its own team, a lot of autonomy to do things differently. So that's first. The way to test whether you've done it is go and take a walk through it and look at the screens, and if it's full of spreadsheets, then it's not succeeded. If it's full of code, people doing stuff, then you have. So if you see all the spreadsheets, close it, because it's not doing anything.
Thank you. Sham?
From my point of view, I would say 3 things to make sure you do when you set on the journey. Put the right team in place, whether it's the venture or even the builder around it. Put the right team in place who have that different mindset from the corporate, who will be entrepreneurial in themselves and don't kind of fall back to the corporate ways of working. The second thing is setting up the right environment around that team to give this venture builder room to do what it needs to do, which is going to be, again, different from business as usual. And then have a bit of a view on what is the midterm approach, the midterm methodology. You're going to see ventures come and go. You're going to see investments working out, not working out. Be prepared to be resilient through that. The first 1 or 2 things you build or invest in might not succeed, but take a bit of a mid to long-term view. Those would be the 3 things.
And last but not least, Harold.
I would say define what you mean by corporate innovation. Corporate innovation can mean so many different things. For us, it's new business models and how these new business models will have an impact for the corporates and ultimately bring alternative and optionality for the bank, and to the point that we're going to have a huge impact on the P&L.
Okay, thank you. Thank you. Christian, Sham, Harold, thank you. All right. I'm going to do a little bit of a trick here. Before you all go down, why don't we take a selfie with the entire crowd behind us? Come, let's gather together. Right.
Can we see everybody?
We go down there.
Yeah, we ready?
You stand up. You stand up.
Okay. 1, 2, go. 2, go. All right.
Awesome.
All right. Thank you, Lars.
Thank you, everybody. Yeah, amazing panels. You've seen our team in action, yeah, Otman, Zian, and how they act together. So they're fun, really fun. Yeah, and including Timo as well. Yeah, so this is how we work every day. This is how they work at night as well. So this is how we execute, and I believe we have a great way forward. Thank you very much, team. Okay, we're coming to the closing keynote now. Oh, it's not a keynote, it's a key discussion in the end. It's Google Cloud, Amrik, and our own, very own Anu Technologies, Shua. Please join us here on what? The tour will be addressing innovation culture, and how this actually can help incumbents, corporates, to catch up with startups. I believe you have shown some areas, so please go ahead.
Perfect. Thank you so much. First of all, it's glad to see that you're all still here, and let's see if we can finish this in time. But we'll take maybe 5-10 extra minutes from you. So I'll start off with introducing myself. So my name is Amrik Singh, and I'm a customer engineer at Google, and I look after our application modernization portfolio. And I relocated to Qatar about a year ago when we started building out our cloud team here. So as most of you will know, we will be opening up a region very soon, actually, in the country, which will consist of 3 data centers. So the team here is ready to support that. And I will let you introduce yourself.
Thank you, Amrik. It's great being here. So my name, as you could see behind, is Shuja Nurani. I've been with QIC Group now for just over 8 years in strategy and heading strategy and corporate development. But over the past couple of years, I've been focused as Chief Marketing Officer in a startup company called Anu Technologies. At Anu Technologies, our main selling our product offering is an end-to-end insurance IT platform, also called Anud Plus. And this platform has helped QIC, our parent group QIC, really differentiate and digitize its business operations over many years. But since Anud was established about 2 years ago, a little bit over 2 years ago, we've rolled out Anud Plus. We're actively marketing Anud Plus to insurance companies, not just in the Middle East region, but across the world. And we've achieved great successes. We have clients in the Americas, in Europe, and also in GCC region, third-party clients unrelated to QIC. So Anud Plus, I'm a chief marketing officer, so I'm going to flog that a bit. Anud Plus is an end-to-end IT platform. Unlike all the policy admin systems available in the market, it has full capabilities, including CRM and analytics, finance. So it's been developed by a very diverse insurance company which operates across the world to address the requirements of the insurance industry. So that's a little bit of a long-winded background of myself and of Anu Technologies. Biggest question for today for this particular chat is why, Amrik, do you think that companies, that you deal with, companies across all the different industries, including the insurance industries, what's the need for them to innovate, to remain competitive, to address, competition?
Sure. And I think with that question, I'd like to take a step back, right? So what are these incumbents are competing with, right? So they're not only competing with companies like themselves, but also startups, right? As we know, right? And if you take a look at, the startups, what has, evolved in the market, which has led, a lot of startups to join the businesses and the organizations, right? And that is really the barriers to entry. So if I take a look at, For example, if someone had an idea that they wanted to launch maybe 20 years ago, there was a lot of barriers that they had to go through. For example, you had to find the skill sets, and then where do you deploy the applications or launch the applications. And eventually, I think with the launch of public cloud, it has really made life easier for new startups or even anyone who has an idea and the skill sets to develop something to launch a product in the market. So that's one. And if you compare that, and again, obviously with this, startups are nimble, right? They can pivot very quickly based on what the customers require. If we compare that to the traditional organizations, there are a lot of processes that you would have to go through in order to roll something out or execute on a new idea, right? So I think that plays a key part in the whole discussion. And certainly from technology perspective, the adoption of technology slows down at those organizations, right? And again, if you look at the startups, what are the startups doing? Typically what they do is they remove friction, right, from the customer accessing your service. So you look at Uber, for example, or even Google, right? So Google wasn't the first search engine, but it removed the friction from the user and the information, right? So what we have to then think about is, these organizations coming on board and making things like the onboarding process for your customers much simpler, right? So I have an insurance organization. I want to make sure that when I offer a product to my users, they can onboard or, for example, get quotes much simpler. When they fill in a form, they don't have to write everything down. They can provide their ID or passport, and we can, get the information from those documents and pre-populate everything for the users. Right? And with that, you move on to the entire customer life cycle. How do you keep that customer? What are the key trends that you see which would actually, make the customer move away from you, right? So putting everything together, I think there's a lot that you can do in terms of AI ML, which will enable you to keep your customer happier longer with yourself, right? So I think there are a lot of things that the incumbents actually can do in that space. Now, back to you. So there are certain, pain points in the industry, right?
Yeah.
What do you think are the key pain points when it comes to the insurers in particular, and how can innovation solve these pain points?
Okay, so the insurance industry is facing a lot of challenges, and I'll club these challenges across different categories. So on one hand, you have emerging competition, InsurTech and digitized, innovative insurance companies. And in this part of the world, the insurance industry is fragmented, and you really have the need to differentiate yourself. Secondly, with the advances in the technological landscape, something that's been accelerated in the past couple of years during the COVID pandemic, there's a change in customer behavior, change in customer expectations, doing things digitally and online. And finally, in terms of other stakeholders, whether it's shareholders expecting better return on equity, improved profitability, efficiency, whether it's regulators expecting better reports, digital reports, and more real-time data from their regulated companies. Insurance companies, to a very large degree, are not well placed to address these challenges. Insurance companies have been technologically, to a large degree, technologically challenged. I spoke to an insurance CEO of a mid-sized company in the UAE, and they're using insurance platforms, which are more than 20 years old, 25 years old, from the previous millennium. And these systems are frankly not well placed to address these challenges. And what insurance companies really need to do is to transform themselves, to use technology as an enabler to transform themselves, make themselves more efficient, their processes, workflows, to have a data-driven, fact-driven mindset to really deploy, to have a collaborative mindset and partners. So it doesn't necessarily need to mean that you, for all insurance companies, there's not one form of digital transformation. You could either have a complete transformation or you could do it in a piecemeal way. For example, in collaboration, Anu Technologies, in collaboration with Lars and his team, DVP, we've deployed Apple Wallet, one of your competitors, for QLM, which is life and medical company. So all QLM members have their policies enabled in Apple Wallet. So this is just a very small piecemeal example of how you can be much more customer focused, and so it's ultimately about transforming yourself technologically, having a future-ready mindset which is using technology as an enabler. But ultimately, Amrik, technology is not a panacea. It's not like you buy these fancy systems and IT systems and snap your fingers and lo and behold, everything's going to work. It's going to require a lot more than just deploying the latest technology. So I was wondering, what are your thoughts on the role of culture and corporate culture and mindset in transformation and innovation?
Sure. I think culture has a lot to do with anything that you do at an organization, and especially if you take a look at the traditional people, process, and technology. Technology is actually the easiest part. Changing people's mindset and the culture within the organization is the most difficult. So what I am familiar with is obviously the culture at Google, and as you know, Google have been pioneers in certain technologies that we launched, and it's because we've got that. The reason behind that is the culture that Google has. How do we nurture this technology internally at Google, right? And we believe this culture is based on main, three key pillars. So it's the people brought in together with environments, and then thirdly, the technology itself, right? How do we do this is that we have certain, programs within Google. So for example, I will go through a few. We don't have the time to go through all of the programs that we have, but things like, 10x thinking. So what would you do if you didn't have the fear of failure, right? A lot of the times what we do is we have an idea, we don't execute on that idea just because we may fail, right? So it's this type of fear removal that we have built into the culture of the organization. There's also 20% projects, right? Every Googler can spend 20% of the time working on anything other than their day job, right? Again, these type of things really nurture the culture which brings technology and innovation to any organization. And lastly, there are other couple of things like making open areas. You've all probably heard of Google's micro kitchens and the food that is available. The reason for that is for people to bring together various teams across Google and have these unplanned conversations, right? Because we jump on a meeting or a virtual meeting today, the conversation is planned. We will talk about X, Y, Z, and that's it, nothing outside of that. What really brings innovation is all of these unplanned conversations that we have while grabbing coffee and so on and so forth, right? And then the other thing I really look at is transparency, right? So at Google, we have every week a meeting called TGIF, which is Thursday Googler's Information Forum. So for example, a few hours ago, every Googler in every single office would have joined that with food and beverages, being available, and you discuss, things that are happening in various teams, or what are the behind the scenes when it comes to, all the Google technologies. So I think those combined together are really, some of the things that I believe would bring the best out of when it comes to, innovation and technology in any organization. In terms of your experience, you've obviously worked with a lot of organizations. Again, technology is very simple for someone to implement, right? How do you see these organizations embracing the change at a much wider scope rather than just the technology itself?
So that's a very important question. And so when we deliver a transformation and we're deploying our systems, it's not just deploying it from a technological standpoint. It's about change management. It's about revisiting what you're doing right now and how the company could employ best practices, new ways of working, new workflows, automations, to improve efficiencies, to reduce errors, having a data-first, fact-based, analytics-first mentality. And, ultimately, it's all about collaboration, whether it's within the organization or outside the organization. One of the great things about a forum like this is meeting people, networking, seeing how you can work together. And at Anoot Technologies, we're all about partnerships. We've got really close partnership with Swiss Re. We've got their platforms well integrated with our platform, their solutions, world-class solutions. We've worked with other tech companies. We're looking forward to working very closely with Google on cloud and other initiatives. So it's partnerships with internal and external, partnerships with your brokers, having an integrated omni-channel experience, working with the likes of Yalla Compare. I can see Jonathan out there smiling, and it's how you can sort of make it a better customer experience, improve. It's such a broad topic, transformation, and culture and mindset and sort of ushering people to embrace change is so critical in a successful digital transformation.
Brilliant. And I think also in terms of these organizations embracing this change, what do you see, or where do you see, cloud or technologies which affect both the startups in terms of implementing these solutions and the adoption of cloud within these organizations? Do you see a big potential, or are there any barriers or large barriers which may stop these organizations adopting?
I think cloud is the future. Historically, insurance companies, as it relates to IT, have relied on-premises systems and servers and old arcane servers. And unfortunately, with these, they're not very scalable, and they don't allow companies to accelerate the innovation, introduce new sort of products, and embrace efficiencies in a nimble and a rapid way. So cloud is the way of the future, and we're embracing cloud in a big way. In terms of the future, we're looking to completely transform our platform, Anoot Plus, from a it's reliant currently on a single public cloud to completely cloud native, cloud agnostic, database agnostic, and it's going to be very scalable. It will address the requirements. Cloud and public cloud addresses the requirements of whether you're a small, medium, or a really, really large, massive insurance company operating across different territories. So I think the challenges to cloud from our perspective is that there are some regulatory restrictions in some jurisdictions where they need data to be within their country, like customer data and medical data to be present in a cloud within their specific geography. And unfortunately, it's fast rolling out, but you don't have all the cloud platforms across all our target geographies, and we're hoping that Google helps us change that, and they've been very aggressive, if I'm not mistaken, Amrik, in expanding your cloud servers across all the different regions.
Yeah, perfect. Well, thank you so much, Shuja, and thanks everyone for sticking around. I think we better wrap it up and join everyone for networking. And thank you so much again.
Thank you all.
Thank you. Thanks. I like this. Thank you. Okay, we're coming to the end now. Can you put the music on, please? It's a code word for everybody from the outside, from networking, to come here for the final word, final photo, and then we do the networking. I see a lot of networking. I think I've learned something for our agenda. We didn't have enough networking. We thought, and we actually want to do networking now with you, but you have be a bit more faster than us. So we actually go, Timo knows where, I don't know, from 6 to 9 we have a networking session. Where do we go, Timo? Cigar Lounge. Okay, thanks, Joop. Okay, so thank you very much for being here. It was a pleasure. I would love to do it again. Yeah. So let's work on this together. Thank you very much. Thank you, our whole team that made it happen. Really, I have goosebumps. Yeah, it was great. Thank you very much. So it's all good. What I would actually like to ask you is, I would love to make a photo with you, with all of you. So I've asked our photographers to arrange us. So I will give him the microphone. He arrange us. You make a photo. And you share it or not, but I would love to see it. Yeah? Thank you very much. See you next time. And the Cigar Lounge, right? So networking, 6 to 9.
You get this and you organize this. I will arrange for now. Yeah.